The next topic is rectification of errors, sir. I don't know why, but most of the students is to face some difficulty in this rectification of errors chapter, sir. From my point of view, this is very easy chapter, sir. But you should have to learn some conceptual knowledge, sir. I am here to give that conceptual knowledge, sir. Yeah. Before going into this rectification of error, first try to know what is meant by error, sir. Yes, sir. What is meant by error, sir? Error is an unintentional. Sir, I am not having any intention to commit this, sir. If I am having any intention to gain any undue advantage, this is known as fraud. Now, this is an unintentional, sir. Error is what, sir? Unintentional. Unintentional what, sir? Unintentional omission or commission. What is this omission and commission? Wait, sir, I will tell. Error is an unintentional omission or commission of accounts or amounts. Are you getting, sir? Error is an unintentional omission or commission of accounts or amounts in the process of accounting. In the process of accounting. What is meant by error, sir? Error is an unintentional omission or commission of accounts or amounts in the process of accounting. What is this process of accounting, sir? Sir, what is this process of accounting? Either it may be journal or it may be ledger or it may be trail balance or at your preparation of final financial statement stage. At any stage you might omit or commit with an unintentional is known as what, sir? Error is an unintentional omission or commission of amounts or accounts in the process of accounting. What is this, sir? Wait, I will tell, sir. Now you are omitting, you are committing either amounts or accounts in the process of what? Accounting is known as what? Error. So error is an, there is no such intention you to commit this, but it is an unintentional omission or commission of accounts or amounts in the process of accounting. What is this process of accounting? Either at journal, ledger, trail balance or at your preparation of financial statement stage. Okay. Now, types of errors, sir. How many types of errors are there, sir? Broadly speaking, there are two types of errors, sir. How many types of errors, sir? Two types of error. What is the first one, sir? Error of principle. Second one is what, sir? Clerical errors. What, sir? There are two types of errors. First one is what? Error of principle. Second one is what? Clerical errors. Sir, what is meant by error of principle? Where the recording of transactions, recording of transactions are done in contravention with accounting principles. Where the recording of transactions is done, where the recording of transactions are done in contravention with accounting principles is known as error of principle, or in other words, wrong application. What, sir? Wrong application of wrong application of accounting principles is known as what, sir? Error of principles, where the transactions are recorded in contravention with fundamental accounting principles, where the recording of transactions are done in contravention with accounting principles is known as what? Error of principles. Let's take some examples, sir. Sir, you might aware of business entity principle. According to this business entity principle, owner is different, business is different. Any amount where the owner is using for his personal purpose, from business point of view, treat this as drawings. Okay, sir. Now what happened? Motor vehicle purchased. What, sir? Motor vehicle purchased. But they are treating this motor vehicle as business asset. That motor vehicle is purchased for what, sir? For proprietary uses, but this is motor vehicle they are treating in the business books as asset. Entry, sir. Drawings account to debit to cash. But what the entry they are writing? Motor vehicles account debit to cash. You are not supposed to do that, sir. Business entity principle. You are violating the business entity principle, where the recording of transactions is done in contravention with wrong application of what, sir? Accounting principles. First one. Second one, sir. Interest paid to Mr. X. To whom, sir? Interest paid to Mr. X. Entry, sir. Interest account to debit to cash account. Interest account to debit to cash account. But they are recording as what, sir? Mr. X account debit to cash. Interest paid to Mr. X but debited to Mr. X. According to the golden principle, sir, debit, as per nominal account principle, debit all expenses and losses, but you are not debiting interest, sir. You are debiting X account to cash account. What is this? Error of principle. You are violating your principles. Next one, sir. Yes, sir. As per accrual concept, insurance paid for 14 months, sir. How many months? For 14 months. Current period lo 12 months. For the next period 2 months. But you have debited entire 14 months expense as current period. You violated your accrual concept. What is accrual concept? Any amount, current period expense only you are supposed to recognize. Any amount which you paid for the future, it is not current period expense. You violated your accrual concept. Next, sir. Wrong classification of expense. Sir, what is this wrong classification of expense, sir? Sir, furniture purchased. Furniture is my asset. Furniture purchased, but debited to purchases account. But debited to purchases account. Whenever any asset is purchased, you are supposed to debit the asset account, but you debited the purchases account. Wrong application of accounting principle. Next. Sir, any wages expense incurred? Any wages or installation or erection expenses incurred for what purpose? To bring the asset into present location and condition, then that expense need to be capitalized. But you are debiting wages account. Actually you are supposed to debit what, sir? Asset account, but you are debiting what, sir? Wages account. What is this, sir? Error of principle. Are you getting, sir? What is meant by error of principle, sir? Where the transactions are recorded in contravention with accounting principles. Yes. Example, wrong application of what? Accounting principles. First one, either it may be business entity principle, or it may be accrual concept, or it may be periodicity concept, or it may be your golden rule principle, nominal account, all these things. These are the examples for error of principle. Clerical errors, sir. These are the mistakes committed. These are the mistakes committed in the ordinary course of accounting work. In the ordinary course of accounting work. These are the mistakes committed in the ordinary course of accounting work due to either negligence, either it may be due to negligence or overlook or carelessness. Carelessness. Are you getting, sir? What is meant by clerical errors, sir? These are the mistakes committed during where, sir? In the ordinary course of accounting work, either due to negligence or carelessness or due to overlook. Are you getting, sir? Wait, sir, I will give some examples. Clerical errors are classified into three types, sir. Once again, the clerical errors is classified into three types. First one is error of omission. Second one, sir, error of commission. Third one, sir, compensating errors. Sir, what is meant by error, sir? Can anyone tell what is meant by error, sir? Yes, sir. Without looking in the book, sir. Come on, sir. What is meant by error? Sir, you only, sir. Please don't talk, sir. Yes, you are my student. You know all these things. When you are attending class, please be silent, sir. Yes, sir. Yeah, sir. Tell me what is this meant by error, sir? Error is what, sir? Intentional, unintentional, sir. Unintentional. What, sir? Omission or commission of what? Amounts or accounts. In what, sir? In the process of accounting. Are you getting, sir? Yeah. How many types of errors are there? For the broad classification, error of principle or clerical errors. Clerical errors, how many types it is classified? Either error of omission or commission or compensating error. What is meant by error of principle? Where the transactions are recorded in contravention with what, sir? Accounting principles or wrong application of what? Accounting principles is known as what, sir? Error of principle. Examples we give. Next, come to clerical error. What, sir? What is meant by clerical error, sir? These are the errors where you have committed in the ordinary course of accounting work, either due to negligence or overlook or carelessness. Error of omission. Sir, this error of omission means you omitted to either record, or omitted to post, sir. Record means what, sir? In journal. Post means what, sir? In ledger. Are you getting, sir? Record means where, sir? In journal. Posting means where, sir? In ledger. Error of omissions is of two types. Complete omission. Second one, sir, partial omission. What is meant by complete omission, sir? The transaction is both debit and credit not recorded. Means in journal stage low, you completely omitted to record. If you omitted in journal means obviously you are not posting in the ledger. Means Complete omission maybe takes place at journal, it may be takes place at journal, or it may be takes place at ledger also. Example, sir. Purchase of machinery from Ram. Whom, sir? Purchase of machinery from Ram. What is the entry, sir? Machinery account debit to Ram account. I failed to record this entry. Machinery account debit to Ram account. I failed to record this entry. Sir, I recorded this entry but failed to post in both machinery account and Ram account. I recorded this but failed to post in where, sir? Failed to post in machinery account and Ram account. Machinery account lo to Ram, Ram account lo by machinery. I failed to post in machinery account and Ram account. Are you getting, sir? Means either you might, in case of complete omission, it may be takes place at journal, or it may be takes place at ledger, or it may be takes place at both stages. You not even recorded at journal and you not even recorded posting in the ledger. You recorded in the journal but failed to post in both the accounts in the ledger. Are you getting, sir? Partial omission is that omission where you posted in where, sir? Machinery account but failed to post in where, sir? Ram account. Partial omission. You recorded, yes sir, recorded. When it comes to posting, you posted in machinery but you failed to post in Ram account. What is this? Partial omission. Partial omission will always takes place at ledger stage. Ledger stage only. Complete omission will takes place at either journal stage or at ledger stage. Completely I omitted to record, completely I omitted to post this in the both the accounts. Partial omission, there is no way you can partially omit a transaction in a journal. One debit is there means corresponding credit must be there. So there is no way you can partially omit a transaction in journal. But partial omitting may be done in ledger. In what way? In one account lo you posted machinery account, but in Ram account lo you failed to post. Are you getting, sir? Yes, sir. This is known as partial omission. Complete omission. Complete omission will only take place at journal and ledger, but partial omission will only take place at ledger. Next, error of commission. Error of omission lo not even recording a transaction. If you were recording or posting, either you fail to record or you fail to post, or posting in one account or fail to post in another account. But when it comes to error of commission, sir, when it comes to the error of commission, you are doing some accounting, but you are committing wrong. You are committing wrong accounting work. What is this committing wrong accounting work, sir? Yes, sir. Where the accounting is done in right side of wrong account. What, sir? Right side of wrong account. Where the accounting is done in the right side of wrong account. What is this? Example. Cash paid to Charan. Cash paid to Charan, but posted in Shiva Charan account. What, sir? Cash paid to Charan. Entry, sir. Charan account debit to cash, but you posted in Shiva Charan account. Yes, sir. Charan account lo you are supposed to debit 2 cash, but in Sivacharan account lo you are writing 2 cash. Right side only you are writing, it should be debit side you have to record, and you are also posting on the debit side, but in the wrong account. That's what in right side of wrong account. What is wrong account here? Sivacharan. What is right side here? Debit side. Are you getting, sir? So right side of wrong account. This is known as what, sir? Error of commission. Next. Wrong side of right account. What is this, sir? Can anyone tell? Wrong side of right account means in Charan account lo, where account, sir? In Charan account lo, instead of debiting 2 cash, you are writing by cash. Wrong side of what, sir? Right account. Come. Right side of right account right side of right account with, can anyone fill up with wrong amount, with wrong amount. Charan account lo you are debiting 2 cash, but instead of 10,000 cash paid to Charan 10,000, instead of 10,000 you are taking 1,000. Are you getting, sir? Right side of right account with wrong amount. What is this error of commission, sir? Where you are committing some wrong accounting treatment, committing means you are doing some mistake. Are you getting, sir? Where the accounting is done in right side of wrong account, right side only debit side, but in a wrong account. Wrong side of right account only, but in the wrong side. Right side in the right account with wrong amount, sir. Are you getting? Next one, sir. Wrong side of wrong account. Example, cash paid to whom, sir? Charan, but you are recording in Sivacharan account lo, you are writing on the credit side by cash. You are writing on the Sivacharan account lo by cash. You are supposed to write in Charan account lo 2 cash, but in Sivacharan account lo you are writing by cash. Wrong side of wrong account. Are you getting, sir? This is known as what? Error of commission. Next. Casting mistakes. What, sir? Casting mistakes. What is this casting mistake? Total mistakes. Totaling mistakes. Under totaling purchase book, over totaling sales book, or vice versa. Under totaling and over totaling of your respective subsidiary books or accounts, casting mistake, totaling mistakes. If your account total is 1 lakh, but you total it as some 98,000, mistake only, counting mistake. This is known as what? Error of commission. Next, sir. Balancing mistakes. What is this balancing mistake, sir? In an account, instead of writing to balance carried down, you are writing by balance carried down. Or in an account you are supposed to brought down to balance brought down, but mistakenly you brought down by balance brought down. Balancing mistakes. This is also known as what? Error of commission. Are you getting, sir? Now how many types of errors are there, sir? There are 2 types of errors are there, sir. What is the first one? Error of principle. And what is the second one? Clerical errors. What is meant by error of principle? Where the accounting recording of transaction is done in contravention with what, sir? Accounting principles. What is meant by clerical errors, sir? Where you have done some due to negligence or due to overcare or due to your overlook, you are committing some mistakes. What is this? Clerical. So clerical once again how many types? 3 types. What is the first one? Error of omission. You are completely omitting either at journal or ledger. Complete or partial. Completely omitted. Partial. In one account you posted, in another account you failed to post. Commission. You are committing some mistake. Where you are committing some mistake? In the accounts law. How? In the right side of wrong account, wrong side of the wrong account, wrong side of right account, and casting, totaling mistakes and balancing mistakes. Next, sir, come to one more mistake, sir. Compensating errors. Sir, what is this compensating errors, sir? Sir, there is no separate list of compensating errors, but the effect of one error is nullified by the effect of another error. I committed one mistake. What is that? There is a discount allowed. How much? 10,000. I failed to record this discount allowed. Similarly, there is a discount received. How much? 10,000. I failed to record this also. The effect of one error is nullified by the effect of another error. This is known as what, sir? Compensating error. There is no separate list of compensating error. This is one mistake of error of omission, one mistake of error of commission, or both mistakes of error of omissions, or both error of commissions because of error of omissions or because of error of commission. Because of one error, another error is nullified. Then it is known as what, sir? Compensating error. Example, sir. Interest expense, sir, 10,000. How much? But I recorded as 1,000. How much? I recorded as 1,000. Commission income, sir. How much? 19,000. But I recorded as 9,000 or I recorded as 10,000. Commission income how much? 19,000. How much I recorded? 10,000. How much I omitted? 9,000. Credit law 9,000 gone. Debit law interest expense how much? 10,000. But how much I recorded? 1,000. How much gone? 9,000. One mistake, the effect of one mistake is nullified by the effect of another mistake is known as compensating errors. Are you getting, sir? This is known as types of errors. Yes, sir. Continuation from where we have left. Now we covered what and all these errors and how these errors. Now effect of these errors on trail balance. Right? Right. Yes, sir. Effect of these errors on trail balance. Can anyone tell what is the effect of these errors on the trail balance? Matlab, because of errors I committed, will trail balance will agree or will not agree? Agree? Will not agree? Yeah, either agree or will not agree. I am not a. Oh, it depends. Yes, it depends, sir. Okay, it depends. It depends upon what, sir? Yeah, sir. Effect of these errors. What, sir? These errors. For us, how many types of errors are there? Error of principle, clerical errors. Yes, sir. Error of principle, clerical errors. Yes, sir. Because of error of principle, what happened to my trail balance? Will my trail balance agree? Will not agree? Sir, why this nonsense? What is the relationship between error and trail balance? Wait, sir, I will tell. Now, I want to establish a relationship between my error and the agreement of trail balance. What is meant by agreement of trail balance? Whether it is tallied or not tallied. Okay, sir. Yes, sir. Yesterday, I said one example. What is that example? Yes, sir. Personal expenses of the proprietor treated as business expense. Yes, sir. Instead of debiting to drawings, what, sir? Instead of debiting to drawings account to debit, I debited to which account, sir? I debited to the expense account of the business. Means I have to debit drawings account, but which account I debited, sir? I debited expense account. When it comes to trail balance, in place of drawings, expense account is coming and sitting on the debit side. What is the agreement of trail balance? Will it agree or will not agree? It will agree, sir. Meaning to say, one more example. Interest paid to Mr. X. Actually speaking, I need to debit interest account. Which account I need to debit, sir? Interest account. But I debited which account, sir? I debited Mr. X account. I debited Mr. X account. If I prepare one trail balance, in place of interest, which account will come? X account will come. Interest account have to show a debit balance. Now, Mr. X is showing a debit balance. Now, tell me, sir, trail balance will agree, will not agree? Will agree. Are you getting, sir? Example number 3. I paid wages, sir, or I paid some installation expenses on the machinery. Installation expenses on what, sir? Machinery. I need to debit what, sir? Machinery account. I need to debit machinery account. But I debited which account, sir? I debited installation expense. Means when I prepared my trail balance, in place of machinery have debit balance, which account is coming? Installation and coming and sitting in the debit side. Meaning to say, in place of one account which should show debit, now one more account is showing a debit balance. Trail balance will agree, will not agree? Yes, sir, will agree. So finally what I want to convey, because of error of principle, my trail balance will agree. Means by looking into my trail balance, I can't tell whether there is some error of principles or not. Why, sir? Because trail balance is agreed. Okay, come to the next type of errors. Clerical errors. Yes, sir. Clerical errors. So what is the first one, sir? Error of clerical errors. What is the first one, sir? Error of omission. Can anyone tell, because of error of omission, my trail balance will agree, will not agree? Yes, sir. Yeah? Yes, correct. Yes, sir. If it is complete omission, what omission, sir? Complete omission. Trail balance will agree. If it is a partial omission, what, sir? If it is partial omission, trail balance will not agree. Sir, what is this, sir? What you are talking? Wait, sir, I will tell. Sir, I purchased one furniture from Mr. Ram. What, sir? Purchased one furniture from Mr. Ram. What is the entry for purchased furniture from Mr. Ram? Furniture account to debit. Furniture account debit to Mr. Ram account. What, sir? Furniture account debit to Mr. Ram account. Okay, sir. Furniture account debit to Mr. Ram account. But what happened, sir? I failed to record the transaction. If I prepare one trail balance, furniture also asset side will not have. Ram account also liability side will not have. No, furniture is also not there. Ram account is also not there. Trail balance agreed or not agreed? Trail balance will agree, sir. Are you getting, sir? Next, meaning to say, in case of error of omission, because of complete omission, my trail balance will agree. Sir, what is this partial omission, sir? This partial omission is something I posted in the furniture account. Which account, sir? I posted in the furniture account. What? RAM. But in RAM account lo, which account sir? RAM account lo, buy furniture, I failed to post that. Are you getting sir? Furniture account lo 2 RAM I posted. RAM account lo buy furniture I failed to post. Now if I want to prepare one trail balance, furniture account will come and sit in the debit side. Because furniture account lo I wrote 2 RAM by balance carried down, 2 balance brought down. But RAM account lo, it will not show credit balance. Trail balance will agree, will not agree? Will not agree, and the debit side is more. Trail balance will not agree and the debit side is more. So what I want to conclude? Because of error of principle, my trail balance will tally. Because of error of omission, that too complete omission, my trail balance will agree. Because of error of omission, partial omission, my trail balance will not agree. Next one, sir. Error of what, sir? What is the next omission, sir? Error of commission. Sir, I committed one mistake, sir. What, sir? I committed one mistake. Can anyone tell because of error of commission, will my trail balance agree, will not agree? Error of commission. Yes, sir. Error of commission lo, first type of error of commission is what, sir? Undercasting or overcasting. Because of undercasting or overcasting, my trail balance will not agree, sir. What, sir? Trail balance will not agree. Sir, what you are talking, sir? Wait, sir, I will tell. Trail balance will not agree. What you are talking, sir? Sir, sales account, while totaling your sales account, it is overvalued. It is overcasted by how much? 10,000. When I am calculating, I counted one 10,000 twice. Now the sales account lo, it is showing higher 10,000. Now what is the effect of this mistake on the trail balance? Sales account will show higher credit by 10,000. Debit side you will not have that higher debit of 10,000. Your trail balance will not agree. And the trail balance is, the credit side is more by 10,000. The total of the credit side is more by 10,000 compared to the debit side. Now the mistake is there on the credit side by excess credit of 10,000. Mistake there on the credit side by excess credit of 10,000. Okay, sir. Same way undercasting also. I don't think example required. Similarly undercasting also same way. Next one, sir. Posting mistake, sir. What is this posting mistake? Amount posted on the right side of wrong account. What, sir? Right side of wrong account. So this is error of commission. Yes, sir, error of commission. You are committed mistake, posting mistake. Okay. Cash paid to Charan. To whom cash is paid, sir? Cash paid to Charan. Cash paid to Charan. But debited to Sivacharan account. But debited to Sivacharan account. Actually, it should be debited to Charan account. In Charan account lo, it should be written as to cash. But in Sivacharan account lo, which account, sir? Sivacharan account lo, you are writing to cash. Are you getting, sir? Now come to the trail balance. Instead of Charan account, Sivacharan account is showing a debit balance. Actually, Charan account have to show debit balance, but instead of Charan account, Sivacharan account is showing a debit balance. Are you getting, sir? Can anyone tell trail balance will agree, will not agree? Will agree. Trail balance will agree. Are you getting, sir? Next one, sir. Wrong side of right account. Posting is done. Wrong side of right account. What is this, sir? Cash paid to whom, sir? Charan. Yes, sir. Cash paid to Charan. Cash paid to Charan. You are supposed to debit which account, sir? You are supposed to debit to Charan, actually, to cash in Charan account lo. To cash. But what you did, sir? You wrote buy cash in the Charan account. You wrote buy cash in the Charan account. Can anyone tell, will the trail balance will agree, will not agree? Come and prepare the trail balance. Which account? Charan account. How to show which balance? Debit balance. But showing which balance now? Credit balance. Now the credit is more, debit is less. The total of the credit is more, the total of the debit is less. Mistake there in which side, sir? Mistake there on the credit side, sir. Are you getting, sir? Everyone? Yes, sir. Wrong side of wrong account. Wrong side of wrong account. So cash paid to Charan, you are supposed to be debit Charan account, but you credited Sivacharan account. You credited Sivacharan account. Obviously, your trail balance will not tally. Obviously, your trail balance will not tally. Now tell me, sir, in case of error of commission law, right side of wrong account, when the posting is done on the right side of wrong account, amount posted on the right side of wrong account, then my trail balance will agree. In other cases low, trail balance will not agree. Are you getting, sir? In case of error of commission law, the first one is what? Undercasting or overcasting, trail balance will tally, trail balance will not tally. When it comes to posting mistakes, sir, posting mistakes low, will my trail balance tally? When the posting is done on the right side of wrong account, means on the debit side I have to do, you are also doing on the debit side, but in the wrong account you are doing the debit side, trail balance will agree. Rest all cases trail balance will not agree. One more. Compensating error. The effect of one error is nullified because of the effect of another error. So trail balance will agree, sir. Trail balance will always agree because of this compensating error. Are you getting, sir? Now what we have discussed, sir, the effect of these errors on the trail balance. Okay, sir. Next come to the, are you getting, sir, everyone? Sir, are you getting or not? Yes, sir. Come to the trail balance. Sir, trail balance is not tallied, sir. What? Trail balance is not tallied. Then I'll stop doing business, sir. Sir, will I stop doing business just because my trail balance is not tallied? No, sir. First, I'll find reasons why my trail balance is not tallied. Now, I find that there are some errors. Now, if I find that errors by sitting, then the trail balance will tally. But what happened? The errors are not identified. But I want to close my trail balance. Yes, sir. To tally my trail balance, what for the time being? What, sir? For the time being, I am using one account to tally my trail balance. Suspense account. Suspense account is a dummy account. What, sir? Suspense account is a personal or real or nominal. It is a dummy account. Temporary account. Suspense account is a temporary account which is opened to tally my trail balance. Once that errors are identified, then the suspense account will get closed. Suspense account have to be closed. It is a temporary account. Once this errors are identified, you will close this suspense account. Sir, I prepared trail balance. My trail balance is not agreed. The difference between the trail balance total of debit and total of credit, I transfer to suspense account. Okay, sir, I transfer to suspense account. Then the next step is what, sir? To prepare financial statements? Yeah, sir. I prepared financial statements in the form of trading P&L balance sheet. Before, there is a time gap between preparation of trail balance and preparation of financial statement. Yes, sir, there is a time gap between preparation of trail balance and preparation of financial statement. In this time gap also, I didn't identify the mistakes, sir. Okay, sir. Now, can I take the suspense to P&L? Can I take the suspense to trading? Sir, never and ever your suspense account will come and sit in your P&L or trading. Don't inflate your profit or don't decrease your profit just because of some errors or omissions in the form of suspense account. Are you getting, sir? Don't transfer this suspense account to where? Trading or P&L. Then what to do, sir? If suspense account is having debit balance, transfers to balance sheet asset side. Sir, academically we will discuss, sir. Conceptual, practically we will find these errors before the preparation of balance sheet. But academically I need to teach. I am teaching academically. Now in the balance sheet law, the suspense account will come and sit on the asset side. Sir, suspense account is showing credit balance, sir. Now your suspense account will come and sit in the liabilities side. Are you getting, sir? When to open suspense? Whenever you are preparing trail balance and your trail balance is not agreed, now the difference between total of the debit and total of the credit will be transferred to an account called suspense account. It is a temporary account. Once the error is identified, you will close this suspense account. But if the error is not identified before preparation of financial statement means, now based upon the balance what the suspense account is showing, the balance will be transferred to the liability side or asset side of balance sheet. Are you getting, sir? Yes, sir. This is what your suspense account. Yes, sir. Sir, if you want to write, please make it fast. What you want to write? This one? Example, sir. Make it fast. Yes, sir. Completed? Yeah. Next one, sir. From accounting point of view, what, sir? From accounting point of view, these errors are classified into two types, sir. From accounting point of view, these errors are classified into two types. From accounting point of view, these errors are classified into two types. First one is what, sir? One-sided error. What, sir? One-sided error. Second one, sir? Two-sided error. Yes, sir. What is meant by one-sided error, sir? One-sided errors are those errors, because of these errors, your trail balance is not agreed. Because of these errors, if your trail balance, because of an error or because of an omission, if your trail balance is not agreed, then that type of error is known as one-sided error. Because of an error or because of an omission, if your trail balance is agreed, then it is known as what, sir? Two-sided error. Okay, sir. Which one is very difficult to find, sir? One-side error is very difficult to find. Two-side error is very difficult to find. Two-side error is very difficult to find, sir. Where? Because your trail balance is agreed, sir. Okay. Trail balance is agreed. Now, from accounting point of view, errors are classified into two types. First one is one-sided error and the second one is two-sided errors. One-side errors are those errors, because of this error or omission, your trail balance is not agreed. two-side errors are those errors. Because of these errors, your trail balance is agreed. Example, sir. Sir, can anyone give examples where there, because of error or omission, your trail balance is agreed? First one. Excellent, sir. Error of principle. Very good. Next one, sir. Which omission? Partial or complete? You should mention that. Error of, in other words, complete omission. Complete omission. Error of complete omission. Error is there, omission is there, your trail balance is agreed. Next one, sir. Compensating low, right side in the wrong account. What, sir? Posting is done. Posting is done. Where, sir? Right side in wrong account. Posting is done in right side of wrong account. Your trail balance is agree, will not agree? Trail balance will agree. Are you getting, sir? Yes, sir. Can you tell some compensating also trail balance will agree? Compensating, there is no separate list, sir. Because of combination of your error of principle and because of the combination of your error of omissions and commissions, you will have the compensating. Because of compensating, your trail balance will agree, sir. Compensating errors. Now tell me, sir, what and all the types of errors where your trail balance is not agreed? First one, sir, partial omission. Partial omission in where, sir? Partial omission in ledger stage. Will your trail balance agree? Will not agree? It will not agree. Trail balance will not agree. Next one. Where the posting is done wrong side of the right account. Wrong side of right account. Trail balance will not agree. Posting is done on the wrong side of right account. Trail balance will not agree. Wrong side of wrong account. Trail balance will not agree. Undercasting or overcasting? What, sir? Undercasting or overcasting? Undercasting or overcasting. Trail balance will not agree. Now, if from accounting point of view, if it is a one-sided error or it is a two-sided error. So, if it is a two-sided error, what is the accounting treatment? If it is a one-sided error, what is the accounting treatment? Let's see. Yes, sir. Completed? Now, the rectification treatment for the error depends upon the rectification accounting treatment. Accounting treatment depends upon at what stage you identify that mistake. Sir, there are three stages, sir. Stage 1, stage 2, stage 3. The rectification treatment depends upon at what stage you identify this mistake, at stage 1 or at stage 2 or at stage 3. What is this stage 1, sir? Before preparation of trail balance. What is the stage 2, sir? After trail balance, before preparation of final accounts or financial statements. Final accounts or financial statements. What is the stage 3, sir? After preparation of your final accounts in the subsequent period. After preparation of final accounts or financial statements in the subsequent period, if you are identified in the subsequent period, if you identified, then what is the accounting treatment? Yes, sir. Sir, how many stages are there, sir? 3 stages, sir. The accounting treatment depends upon at what stage you identify the mistake. Sir, you identified that mistake at stage 1, or you identified this mistake at stage 2, or you identify this at stage 3. What is meant by stage 1, sir? Before preparation of trial balance only you identify one error or mistake. No, sir. It is after preparation of trial balance and before preparation of final accounts or financial statements. Third stage, after preparation of final accounts or financial statements, after subsequent period, matlab in the next period lo you identify a mistake which is relating to the past period. Sir, what is this nonsense you are telling? No, wait, sir, I will give the clarity. Yes, sir. Sir, I sold goods, sir. What, sir? I sold goods. To whom I sold goods? To Mr. X. And I purchased goods from Mr. Y. From whom I purchased goods, sir? From Mr. Y I purchased goods. Okay, sir. Now, my accountant failed to write one entry. What is that entry? Purchases account debit to Y account. Purchases account to debit to Y account. My accountant failed to write this entry. Now, my creditors are, my Y is calling, sir. Mr. Y is calling, sir, and asking, hey Charan sir, why can't you make the payment? You purchased goods, right? Why can't you make the payment? Yeah, sir, wait, sir, I will make the payment. I said to my accountant or my finance team, please clear all the dues, like that. I said, okay, sir. They are telling, yes, sir, we cleared. But this idiot is keep on calling, sir, it is not paid, not paid. One day he came to my office and is scolding like anything. These goods are purchased from my office only, from my premises only you purchased the goods, but you are not making payment to me. And I asked the finance team, why you are not clearing? No, sir, there is no account, there is no such account called Y account. Then I asked the accountant, oh, sorry, sir, we failed to record the transaction. Oh, then now record, sir. What is that? Purchase to Y and clear the debt. Okay, sir. Did you prepare your trail balance? No, sir. When you identified this mistake? Before preparation of trail balance, the moment the purchase is made, after 5 days, 10 days or 15 days, depending upon the credit period, after that I identified that because of the intimation from the creditor, I identified that there is one mistake which is not done. Now you rectify that mistake. Are you getting, sir? Everyone, that is my stage 1. That is my stage 1 before preparation of trail balance. Yes, sir. What is this stage 2? Sir, the stage 2 is something like I prepared my trail balance is not agreed. Are you getting, sir? Trail balance is not agreed. Or trail balance is agreed. But when that finalization process is going on, I came to know that I purchased one asset. But where is that asset? There is no such asset in the books of accounts. What happened? Go and check. Oh, you failed to post that in the asset account law. Are you getting, sir? Means after preparation of trail balance, if your trail balance is not agreed, then that is one of the indication that there are some errors. Trail balance is tallied, but if there are any some major items and you know that major item is there, but that is not there in the books of accounts, then you will verify. That is your stage 2. Are you getting, sir? Come to your stage 3. Sir, financial year over. Next year low. It may be GST audit will be conducted by the GST team, or some other audits like ESI audit, employee state insurance audit, or some tax audits. In audits will conduct, sir. In that audit slow, you find these GST audits person, hey, you sold goods to Ram, but you recorded in sham account, or you sold goods but you record in sales returns book, or you sold goods but you record in the purchase book. These type of errors what you have committed in the audit of done by GST team, you find they have bring to your notice. Now you are rectifying that. Or ESI audit, hey, you paid salaries to Mr. Ram but you debited to Ram account. Or you paid some wages to your machinery before the machine is ready for the intended use, but you debited to wages account. Are you getting, sir? In the ESA audit lo, they bring some, you committed some mistakes. Means stage 1 is before preparation of your trial balance, stage 2 is after preparation of trial balance but before preparation of financial statements, and stage 3 is after preparing, after closing your books in the subsequent year low. If you find any mistakes, then what is the accounting treatment? Stage 1. One-sided error, two-sided error. Stage 2, same one-sided error, two-sided error. Stage 3, one-sided error, two-sided error. Are you getting, sir? There is one error that is a two-sided error, and at stage 1 you want to rectify. There is one error that is a one-sided error. At stage 1 you need to rectify. There is a error, a two-sided error. At stage 2 you identified that mistake. Now you rectify. There is an error. Stage 1 lo you identify. Stage 2 which is of one-sided error. Now you rectify. There is one error which at stage 3 you identified one-sided error. What is the accounting treatment? Two-sided error. What is the accounting treatment? Are you getting, sir? Yes, sir. Now come to the accounting treatment. Purchased furniture, but debited to purchase account. Sir, I purchased one furniture. Yes, sir, you purchased one furniture. But debited to which account, sir? Purchase account. Sir, what happened to the creditor? Imagine if it is a credit purchase, purchase account debit to creditor. What happened to creditor? Don't question the question. If the question is silent, everything is done perfectly. You don't question the question. Are you getting, sir? You don't question the question. Purchase furniture but debited to purchase account means if it is a cash purchase means cash purchase of furniture means it is recorded properly in cash book, or if it is credit means it is recorded properly in creditor account. How you know? Question is silent, sir. They are telling anything? No, then why you need to take assumptions? Oh. What is the correct? So first of all, this is a one-sided error or two-sided error? One-sided error or two-sided error? This is a two-sided error. If it is a two-sided error, trial balance will agree, will not agree? Trial balance will agree. If trial balance is agreed, now what is the entry, sir? Furniture you are supposed to debit your furniture now. Unnecessarily you debited purchase account, credit the purchase account now. Are you getting, sir? Everyone? Yes, sir. This is a two-sided mistake. If I want to pass one entry at stage 1, this is the entry. If I want to pass an entry at stage 2, trail balance agreed, it is not agreed, sir. Trail balance is agreed. If trail balance is agreed, there is a need of suspense account, there is no need of suspense account. There is no need of suspense account. There is no need of suspense account. Entry, same entry remains holds good. What is that? Furniture to purchase. Stage 3, sir. Stage 3 lo, whenever nominal accounts are there, what, sir? Whenever nominal accounts are there in the rectification entry lo, replace with P&L adjustment. Because of an error or omission which takes place in the last year, don't increase or decrease your current period nominal accounts. Are you getting, sir? Use P&L adjustment in the current, P&L adjustment for rectification in the subsequent period. Are you getting, sir? Yes, sir. Now the rectification depends upon at what stage you identified. In that what stage you identified low. If it is a one-sided or two-sided. Yes sir, it is a two-sided error. If it is a two-sided error, the entry remains same in stage 1, stage 2, stage 3. If it is a two-sided error, the entry remains same at stage 1, stage 2, stage 3. But at stage 3, in place of nominal account, replace with P&L adjustment. Once again sir. Sir, if it is a two-sided error, if it is a two-sided error means the entry remains same at stage 1 and stage 2 at stage 3. But when it comes to stage 3, the nominal account, in place of nominal account, use P&L adjustment. Sir, what about one-side error? Sir, if it is a one-side error, if it is a one-sided error, will your trail balance agree? Will not agree. Trail balance will not agree. Then who is coming into the picture? Suspense account is coming into the picture. Now pass the entry with the help of suspense. Now the rectification entry, pass the rectification entry with the help of suspense. Imagine sales book or sale account is overcasted by 10,000. Sale account is overcasted by 10,000. Now sale account low you will have 10,000. Debit low, the credit is more by 10,000. Debit low you will have suspense account 10,000. Once you identify this mistake that sales account is overcasted by 10,000, unnecessarily sales account low you have given higher credit. Now debit that sales account. Now once you identify the mistake, still suspense account is required, not required, not required. Credit the suspense account. 10,000, 10,000. Same entry holds good at stage 3, but in place of nominal, use P&L adjustment. Are you getting, sir? If it is a one-sided error, first go and think what happened at stage 2. If it is a one-sided error, stage 2 low, pass one entry with the help of suspense. Same entry holds good even at stage 3, but in place of what? Nominal account, use P&L adjustment. Then come to stage 1, means what happened? One-sided error, and you identify that error before preparation of trail balance. If it is before preparation of trail balance means suspense account will come to the picture and no question of suspense. Suspense account will come to the picture only when you prepared what? Trail balance. Did you prepare trail balance? No sir. Then where is the question of suspense account? Then what to do sir? It is a one-sided error. Trail balance is not prepared. Then go to that account. You will rectify by using rectification statement. What sir? Rectification statement. All two-sided errors are rectified by rectification entry. All two-sided errors are rectified by rectification entry. All one-side error at stage 2 and at stage 3 rectified by rectification entry. All one-side error at stage 1 will be rectified by rectification statement. Sir, what is that rectification statement? Sir, if the same sales account low, if it is overcasted by 10,000, trail balance is not prepared, but I came to knowledge when I counted, I had a doubt in that sales account, and once again if I recounted, I came to the knowledge that sales account low there is overcasted by 10,000. Now, go to your sales account, credit side 10,000 more is there, come to the debit side and write to wrong casting or wrong totaling. How much? 10,000. This is known as rectification statement. All two-sided errors either at stage 1, stage 2, stage 3 is rectified by passing one rectification entry. All one-side errors at stage 2 and stage 3 will be rectified by passing one rectification entry. One-side error at stage 1 will be rectified by passing one rectification statement. This is our rectification statement. Are you getting, sir? Now, sir, what to do when we have any problem, sir? When you have any problem in the examination relating to rectification, first you need to identify stage 1 or stage 2, stage 3. That will be given in the question. Now, you need to identify whether it is one-side error or two-side error. Sir, this is a two-side error. Then you can pass one entry without the help of suspense. Sir, this is a one-side error. Then pass one entry. If it is at stage 2, with the help of suspense. Stage 3, with the help of suspense, in place of nominal, use P and L. Stage 1, by passing on rectification statement. This is all about your rectification of errors concept. Three lines you need to understand before going to the problems. That will help you very much in solving the problems. 3 lines, the way they are expressing, 3 words. If you have identified, then nothing is there in this rectification. Yes, sir. Sir, some special adjustments in relation to this rectification, sir. Yes, sir. Sir, how to interpret the things? Sir, my throat is a little bit of problem. Please try to understand. Yes, sir. Yeah. See, how to tackle the things. Goods sold to Charan. But entered in purchase day book. Goods sold to Charan but entered in purchase day book. What is the meaning of this term, sir? Sir, if they are using entered, unless otherwise mentioned in the problem, unless otherwise mentioned in the problem, unless otherwise mentioned in the problem, the individual postings in the debtor account and creditor account, the individual postings in debtor accounts and creditor accounts, the individual postings in debtor account and creditor accounts are based upon or based on how they are entered in subsidiary books. Sir, what is this nonsense? Wait, sir, I will tell. Sir, goods sold to Charan but entered in purchase day book. Actually, forget about all these things. What is the correct accounting treatment, sir? If goods sold to Charan, obviously it is a credit sale. Entry, sir. Charan account debit to sales account. And correct treatment. Charan account debit to sales account. Charan account debit to sales account. If you are maintaining subsidiary books, then you will not pass this entry. What you will do? In your sales book lo, you will write Charan and you will give the amount, and Charan account lo, you will write to sales. The individual account lo posting depends upon how you are entered in subsidiary books. The individual postings of the debtor account or creditor account are depends upon how you are entering where, sir? Subsidiary books. Now tell me, sir, goods sold to Charan but entered in purchase day book. If an item is entered in purchase day book, or in our words, purchase book. If an item is entered in purchase book, what is this? Charan. Now, individual posting in Charan account, obviously it is a creditor by purchase. What I want to convey is, sir, if in the problem lo they are given entered and unless otherwise mentioned, the individual postings in the debtor account or creditor accounts are based upon how they are entered in subsidiary books. If they are entered in purchase book, then obviously in the individual account you will credit on by purchase. If you are entered in sales book, then individual accounts you will post as to debtors, or in other words debtor account you will post as to sales. Debtor account you will post as to sales. Now the individual accounts lo posting is depends upon how you are entered in where, sir? Subsidiary books. That is the point number 1. Sir, goods sold to Charan failed to enter in sales book. Goods sold to Charan failed to enter in sales book. Sir, if subsidiary book lo you fail to enter, then in that individual account lo also you will fail to post, sir. If you are forget to enter this transaction in your subsidiary book means fail to enter, then in your individual debtor account or creditor account also you will fail to post, sir. Means it is what? Complete omission. Unless otherwise mentioned. Unless otherwise mentioned. If they are mentioning in the other way, that I will show in the problem. Third one. Goods sold to Charan but failed to post in Charan account. Sir, what is the difference between enter and post? If it is failed to enter means both the subsidiary book and as well as individual account lo you failed to enter, sir. But if it is failed to post means, what is the meaning? Sales book lo you entered correctly only, but the individual account lo you failed to post. Are you getting, sir? Goods sold to Charan but failed to post in Charan account. Or goods sold to Charan but failed to post in sales account. Goods sold to Charan but failed to post in sales account means, what is that meaning? Charan account lo you entered correctly only, Charan account lo you posted correctly only, but in sales account lo you failed to post on the credit side. That is this meaning, sir. Goods sold to Charan but failed to post. Goods sold to Charan but failed to enter. If it is the term what they are using is enter means the individual posting on the individual accounts depends upon how they are entered in the subsidiary books. Subsidiary books lo they have entered in purchase book means in the individuals lo they will post it as creditors. Subsidiary books lo if they are entered in sales book means in the individual accounts lo they will post it on the debtor side. Are you getting, sir? Imagine subsidiary books lo they have entered in purchase book, then it will be posted in the individual account lo by purchase. Imagine if the subsidiary book lo they have posted in where, they have entered in where, sales book, then in the individual account lo they will account as to sales. Next, sir, you should have this idea about what is this post and what is this entered, and one more element is also there, sir, passed through. Sir, what is this passed through? Yes, sir. Bills receivable from Charan but passed through bills payable account. Sir, bills receivable from Charan but passed through bills payable account or bills payable book. Sir, what is this? Sir, I received one bills receivable from Charan, but it is passed through bills payable book, means it is as equivalent to as my entered scenario. This is equivalent to my entered that scenario. Means if they are entered in bills payable book, means individual Charan account also they will account accordingly, they will enter accordingly. Are you getting, sir? What is this? Bills receivable received from Charan. What should be the entry? Bills receivable account to debit to Charan account, but passed through bills payable book, means they have entered in bills payable book Charan, means in Charan account lo they will write to bills payable. Are you getting, sir? If an item is entered in bills payable book, means what is the entry? Creditor account debit to bills payable, Charan account lo to bills payable. Are you getting? Is same. This passed through is same as that entered concept, sir. Right? This is enough to tackle the problem, sir. Let's start problem number 1. Yes, sir. Yeah. What they are asking is, correct the following errors without opening a suspense account and with opening a suspense account. Without opening a suspense account means this is stage 1. Stage 1 lo you will never get suspense account. Simple reason, trail balance is not yet prepaid. The suspense account will comes into the picture only when the trail balance is not only when the trail balance is prepaid. Now without suspense means trail balance is not yet prepaid. With suspense means this is stage 2. Stage 2 is a scenario where the rectification is done after preparation of your trail balance, and if it is a one side error, that is suspense will come and sit, that one side error will be rectified by using suspense account. Means without opening suspense means that is stage 1, with opening suspense means that is stage 2. Okay, sir. The sales book has totaled 100 short. Okay, sir. Sir, sales book, so when this total is taken to sales account by sundries as per sales book, you have considered 100 short. Calculation mistake. If you are preparing trail balance, the sales account will show 100 rupees less. Now the mistake is there on the credit side. To offset that mistake, the debit side will be correct exactly, the credit side will be 100 short. To offset that 100 short, suspense account will come. What, sir? Suspense account will come. What is the entry, sir? See, once I identify this mistake, suspense account is required, not required? Not required. I know that sales book is undercasted. The moment I understood that sales book is undercasted, sales account is showing credit balance. To cancel this, debit your suspense. Suspense account to debit to సేల్స్ అకౌంట్ లో which is shown 100 short, increase your sales, sales will always have credit balance, now credit your sales entry sir, suspense account to debit to sales account. This is when with opening suspense account, with opening suspense. Next one sir, goods worth 150 returned by, it is not returned to, returned by Green and Co. Green and Co is returned. If Green and Co have to return means first I need to sell to Green and Co. When I am selling to Green and Co, the entry is Green and Co account debit to sales. Now Green and Co return these goods, entry sales returns account debit to Green and Co, but it is not recorded anywhere. This is known as error of omission and this is complete omission. Error of omission, complete omission. In case of complete omission, trail balance will agree. Now I can pass one rectification entry without the help of suspense. Suspense will comes into the picture only when the trail balance is not agree, then the suspense will come. Now goods worth 150 returned by Green and Co. Now the entry sales returns account debit to Green and Co. Now first I will solve all this with opening suspense, then I will go without opening suspense. Now I am passing entries at stage 2 with opening suspense scenario. Second one, sales returns account to debit to Green and Co. How much sir? 150. 150, 150. Come to the third one. Goods purchased 250. So I purchased goods for 250 rupees have been posted to the, posted. It is not entered. Posted to the debit of supplier Gupta and Co. What is this nonsense sir? Wait sir, I will tell. Sir, I purchased goods worth 250 from Gupta and Co. What is the entry sir actually? Entry purchases account debit to Gupta and Co. Now in Gupta and Co account lo the posting should be in Gupta and Co. In Gupta and Co account lo the posting should be by purchases 250. But what you did sir, you debited to the Gupta and Co. Gupta and Co lo you debited 250. Then because of this mistake, what is the impact in your trail balance sir? Sir, trail balance lo purchase will be there in correct debit balance only. But if I fail to record, once again, if I fail to post in Gupta and Co, if I forget to post this in Gupta and Co credit side, if I forget to post in Gupta and Co credit side, then the debit will be more by how much? Once again, if I forget to record or if I forget to post this on credit side, then the debit is more by 250. But I debited on the debit side. Now the debit is more by how much? If I fail to post on the credit side, if I fail to post on credit side, now debit will be more by 250 because credit is less by 250. But if I posted on the debit side, then the debit is more by 500. Debit is more by 500 comparing to the credit. Now the mistake is there in where? Debit side. What is that mistake? Excess debit by 500. Now the suspense will be come on shorter side on the credit side. Suspense will come on shorter side, credit side. What is the entry sir? Once I identify this mistake, close your suspense account. What is that? Suspense account is showing credit. Close by preparing suspense account to debit to credit will be given to whom? Gupta and Co 500. In Gupta and Co account lo, in Gupta and Co account lo by suspense 500. First 250 is to cancel the debit impact. You have written on the debit side, the first 250 will be cancel that debit impact. Balance 250 is to recognize the original credit. Out of this 500, first 250 is to cancel the debit. The balance 250 is to recognize the credit. Are you getting, sir? Now in exam you are supposed to write this entry. You are supposed to think what happened. Guptalo you have debited, means debit is more by how much? 500. Why it is 500? If you are not even posting, then that it is debited by 250. But you are posting on the debit side 250. Now how much excess is debit is more? The debit is more by 250 because you are not entering an item worth 250 on the credit side. If you are not writing on the credit side, debit is more by 250 or credit is less by 250. If you are writing on the debit side the 250, credit is less by 250, debit is more by 250, total debit is more by 500. Yes, sir. This is the entry, sir. You are supposed to write this entry, sir. Now come to the fourth one. Furniture purchased from whom, sir? Furniture purchased from Gulab and Bros. 1000 has been entered in purchase day book. Very good. Entered in purchase day book. You purchased a furniture from Gulab and Bro, but you entered in the purchases account. Right? One-sided error, two-sided error. Two-sided error. How it is two-sided error? It is a error of principle. Instead of giving debit to furniture, you give debit to purchases account. Right side of wrong account. Right side, debit side only you have entered, but on the wrong account. Right side of wrong account. Trail balance will agree. This is a two-sided mistake. Now, without help of suspense, pass the entry. What is that? Furniture account to debit. Furniture to be debited. Debit furniture. Furniture account to debit to purchase. If you are written on the purchase day book, then it will go and sit in the purchase account. Furniture account to debit to purchase account. How much? 1000. Come to the fifth one, sir. Sir, discount received from whom, sir? Discount received from red and black. Okay. Discount received from red and black. What is the entry? Red and black account to debit to discount received. Okay, sir. Discount received is the income, and red and black, I am getting the discount from red and black. Creditor, credit balance is reducing, so debit that creditor. Red and black account debit to discount. 15 has not been entered. Entered in the discount column of cash book. Cash book is the subsidiary book. If cash book loan, if it is not entered, then where is the question of entered in the red and black? That's what I said. If unless otherwise mentioned, the individual accounts lo posting is depends upon how you entered in your subsidiary books. If your subsidiary books lo you fail to enter, then individual accounts lo it will be not been entered. Means in red and black law also it is not entered, and it is not also entered in where? In your cash book. Means what? This is error of omission, complete omission. Now you enter. What is the entry? Red and black account to debit to discount received. Red and black account debit to discount received. Red and black account debit to discount received. How much? 15. 15, 15. Next one, sir. Sir, discount allowed to Mohan and Co. So, discount allowed to Mohan and Co. Entry, sir. Discount allowed account to debit to Mohan and Co. 18 has not been entered in the discount column of cash book. Okay, sir. It has been not been entered. If the question is silent and this line is not there, the account of G Mohan and Co. had however been correctly posted, this line is not there, then this is error of omission, complete omission. The individual posting is depends upon how they are entered in the subsidiary books. If the subsidiary books they failed, then there is no question of entering in where? Individual accounts. But unless otherwise mentioned, but here they mentioned, what they mentioned? The account of G. Mohan and Co. has however correctly posted. If the account of G. Mohan and Co. however correctly posted means it is what, sir? It is error of omission, partial omission. In which account lo? Mohan and Co. account lo it is correctly posted, but it is failed to post in which account? Discount allowed. Means what? Trail balance, discount allowed. What, sir? Discount allowed. This discount allowed lo, you failed to debit that. So the discount allowed will be lesser by how much? By 18. So credit side the customer account will be reduced, but the discount allowed is not there. Okay, credit side will be more, debit side is less by how much? 18. Debit side is less by how much, sir? Debit side is less by 18. Suspense account will come and sit on the debit side to the tune of 18. Once you identify the mistake, entry discount allowed account to debit. To cancel that suspense once you identify the mistake. Suspense account how much? 18, 18. Now in the exam you are supposed to write only the entries, sir. So how many entries you have passed? First entry is what, sir? Suspense account debit to sales. First. Second entry, sales returns account debit to Green and Co. Third entry, suspense to Gupta and Co. Fourth entry, furniture to purchase. Fifth, red and black to discount received. Sixth, discount allowed to suspense. Yes, sir. Exam lo you are supposed to pass this 6 entries, sir. Yes, sir. Stage 2 is done. Stage 2 is when, sir? In trail balance, after preparation of trail balance with the help of suspense. Now come to the stage 1. Now stage 1 lo, if it is a two-sided error, then entry will come. Stage 1, two-sided error, entry will come, sir. But this entry lo suspense will not come. One-sided error, then I will rectify this by passing what, sir? Rectification statement. Rectification statement. I will rectify one-sided error. I will rectify by using what, sir? Rectification statement. What is this rectification statement? Let's see. Sir, sales book is totaled 100 short. It is not a two-sided error, sir. It is a one-sided error. Sir, because of this, sir, this error, trail balance will agree, will not agree, will not agree. Even though I am not preparing trail balance, but tell me first trail balance will agree, will not agree, will not agree. Means one-sided. One side means rectification statement. What is that rectification statement? Go to your sales account and total 100 short. Sales account will always have credit balance. Now it is 100 short, right? By totaling mistake. How much? 100. This is by writing by totaling mistake is known as what? Rectification statement. So how you are supposed to write the answer? First one, in sales account lo, write what you are supposed to write in sales account. In sales account, on credit side, by casting mistake 100 rupees or by totaling mistake 100. Enough, done. Next, goods worth 150 returned by Green and Co has not been entered anywhere. Yes sir, what is the entry? Goods worth 150 is written by whom? Green and Co. So not been entered anywhere. Two-sided error, sales return account debit to Green and Co. How much? 150, 150. Come to the third one. Goods purchased 250 have been posted to the debit of supplier Gupta and Co. First of all, one-side error, two-side error. It is a posted, not entered, one-sided error. In the purchase account, it is posted correctly, but in Gupta, supplier Gupta and Co. account, instead of what sir? Crediting, they have debited. Instead of crediting, they have debited. Now come to this Gupta and Co. account, right side, by error of posting. How much? Give 500. First 250 is to cancel this 250. Second 250 is to recognize the 250. That rectification shall be made for 500. First 250 is to cancel the debit of 250 and the balance 250 is to recognize that 250. Now come to sales account low. Sales account, right? What sir? In the sales account low, right? What? Not sales, I think. Gupta and Co. Gupta and Co account low. Gupta and Co account, in this account low, credit side, right, by posting mistake. By posting mistake. How much? 500. This is rectification statement. You have to write in the exam low, as this is the one side error, trail balance will not agree. Now go to that Gupta and Co account low, they have debited unnecessarily 250. Now on the credit side, double the amount, right, by posting mistake 500. Next sir, fourth one. Furniture purchased from Gulab and Bro 1000 has been entered in purchase day book. Yes sir, two-sided error. Directly you can pass one entry, furniture account debit to purchase account. Same entry here also. Furniture to purchase 1000. Next, come to the fifth one. Discount received from whom sir? Red and black 15 has not been entered in the discount column of the cash book. If it is not even entered in where? Subsidiary book low, obviously red and black also it will be not entered. Now discount received, so red and black account debit to discount received. Red and black account to debit to discount received. How much sir? 15. 15. Come to the sixth one. Yeah. Sir, discount allowed to whom sir? G. Mohan and Co. How much? 18. Has not been entered in where? Discount column of cash book, but entered in where? G. Mohan and Co. Means error of omission, one-sided, trail balance will not agree. If it is a one-sided, the rectification statement. In where? In cash book low, right? To omission. What is that omission? To omission in cash book in which column? In the cash column only. How much? 18. Are you getting sir? In cash book low, in discount column low, right where? In cash book low, discount column low, in discount account low, in discount account, right, to error of omission in account low, to error of omission. How much? 18. 18. Right? Yes, sir. Come to next question, sir. Yes, sir. Come to the next problem. Yes, sir. Correct the following errors found in the books of Mr. Dutt. The trail balance is out by 493 excess credit. What, sir? 493 excess credit. Sir, when you prepared the trail balance, what is the excess credit? Trail balance lo credit is more by 463. 493. The difference has been posted to the suspense account. Yes, sir. Now the credit is excess credit by 493. Credit lo there is excess credit. Now come to the debit side. On the debit side, suspense 493 on the debit side. Yes, sir. Yeah. Fine. Forget about this 493 suspense. Come, they are asking you to pass the rectification entries. Pass the rectification entries. Correct the following errors found in the books of Mr. Dutt. They are asking you to correct these errors. Come. So trail balance is prepared or not prepared? Prepared. Then stage 1 or stage 2? Stage 2. Did they say like subsequent year like that? No, means it is stage 2. Stage 2 means if that is a one-sided error, then if you need to pass one rectification entry, then pass the rectification entry with the help of suspense. Okay, sir. An amount of 100 was received from whom? Didas on 31st December 2020, but omitted to enter in a cash book. If you are not entered in your subsidiary book means individual Didas also it will not be accounted. That is the word of this entered. Are you getting, sir? Whenever they are telling enter means the individual account lo posting depends upon how they have entered in subsidiary books. If the subsidiary book if it is not posted, then where is the question of entering in the individual accounts law? Then what is the entry? This is error of omission. Yes, sir, error of omission. Now pass one entry. What is the entry? Two-sided error. Yes, sir, two-sided error. Cash account to debit to Didas account. 100. Next one, sir. The total of written inwards. Written inwards means what, sir? Sales returns book for December has been cashed. What, sir? Has been cashed 100 short. Sir, written inward is nothing but what? Sales returns. Sales returns account low is 100 short. Right, sir. Now that lesser is there on where? Debit side. Now that suspense will come and sit in where? Debit side. There is a lesser debit. Now the suspense will come and sit in the debit side. Once I identify this mistake, now I will cancel. I will credit suspense. Debit whom? Sales returns account. Sales returns or written inward account debit to whom, sir? Suspense. How much? 100. Yes, sir. Come to the third one. Purchase of office table costing 300 has been passed to purchase day book. Instead of debiting your office table, in other words, instead of debiting your furniture, you debited your purchase account. Entry, sir. Furniture account to debit to purchase account. Furniture Two-sided error, trail balance will agree, hence suspense will not come. Furniture account to debit to purchase account. How much, sir? 300. Next one, sir. Rupees 375 paid for wages of a workman for making showcase. Showcase means these furnitures and all furniture showcase should be debited to the furniture account, but they have debited to the wages account. Right side of the wrong account. Hence trail balance will agree. It is a two-sided error. Now what is the entry? Furniture and fittings account debit to wages account. You can also write showcase account debit to wages, but showcase accounts will be once under comes under furniture. Entry furniture account debit to wages. $375. Next one, sir. A purchase of 67 has been posted to the trade payable account as 60. Means credit side lo you are supposed to take 67, but you have considered only 60. Lesser credit. Suspense will come and sit on the credit side. Debit your suspense. Once you identify this mistake, cancel that, debit your suspense, and credit will be given to either creditor or trade payable. Suspense is there on the credit side. Now debit your suspense and credit will be given to whom, sir? Trade payable or supplier or creditor account. Whatever the account you can use, either trade payable or supplier or creditor. For how much? 7 rupees. Sir, you are supposed to take 67 on the credit side. If you took 67 on the credit side, then the trail balance will agree. But you took only 60, means 7 is short on the credit side. Suspense account will come on the credit side for 7. Now cancel this mistake. Debit suspense for 7. Once you identify the mistake and recognize what should be that 7, either trade payables or creditors. Now suspense to trade payable or creditors. Sixth one. A check of 200 received from PC Jyoti has been dishonored. Entry, sir. Sir, entry. What is the entry for check received from PC Jyoti is dishonored? Yes, sir. PC Jyoti account debit to bank account. That is the entry. Very good, sir. PC Jyoti account debit to bank account. Up to this is fine. But posted, whenever they are telling posting means it will affect that account only. Posted to debit of allowance account. Which account to be debited? PC Jyoti account to be debited. But you debited which account? Allowance account. Means right side only, but wrong account. Two-sided error. There is no need of suspense. Now rectify. Debit which account? Which actually you are supposed to debit PC Jyoti. Debit PC Jyoti. Unnecessarily you debited allowance. Now credit that allowance. Entry. PC Jyoti account debit. PC Jyoti account debit to allowance account. Sixth one, 200. 200. Come to the seventh one. 1000 paid for the purchase of motorcycle for Mr. Dutt. 1000 paid for the purchase of motorcycle for Mr. Dutt. What is the entry? Drawings account debit to cash account. Right? Right. But has been charged to miscellaneous expense. Right side only. Debit side you are supposed to debit drawings, but you have debited miscellaneous expense. Charged means debited to miscellaneous expense. Now debit which account? Unnecessarily you have debited which account? Miscellaneous expense. But you are supposed to debit which account? Drawings. Now cancel the debit given to miscellaneous expense by crediting that miscellaneous expense. Debit shall be given to whom? Drawings. Now debit that drawings. Entry. Drawings account debit to miscellaneous expense. drawings account debit to miscellaneous expense account. Seventh one, how much? 1,000. Come to the eighth one. Goods amounting to 100 has been returned by customer and were taken into inventory. Very good. So, but no entry has been passed. Very good, sir. Yes, sir. Goods amounting to 100 has been returned by the customer. Means what is this? Sales returns, sir. And were taken into inventory. So, now that is added to our stock also. But no entry is passed. This is known as error of omission. In inventory chapter lo, what is this taken into inventory? I will explain in that stock taking procedures. The stock taking lo, I will explain what is this taking into inventory. But no entry in respect thereof was made into the books. What is the entry, sir? Now it is a sales returns. Yes, sir. Sales returns is given by whom, sir? Yeah, they have tell just customer account only. Okay, sir. Sales returns account debit to customer or debtor. Sales returns account debit to customer or debtor. Customer or debtor. How much, sir? 100. 100. 100. Come to the ninth one. Yes, sir. A sale of 200 to whom, sir? Singh and Co. Wrongly credited to their account. Actually, it should be debited to whom? Singh and Co. Entry was made correctly in the sale books. This is what unless otherwise mentioned. They are telling what? Sales booklet is correctly done, but the wrong is done in where? Singh and Co. Actually, it should be debited in Singh and Co. Okay. Sir, ట్రయల్ బ్యాలెన్స్లో అండ్ సింగ్ అండ్ కో అకౌంట్. సింగ్ అండ్ కోలో ఇట్ షుడ్ బి డెబిటెడ్ 200 బట్ యు క్రెడిటెడ్ ఆన్ ది సింగ్ అండ్ కో. If Singh and Co lo if it is not debited, then credit is more by 200. But just because you credited in the Singh and Co, credit is more by 400. If you are not touching Singh and Co account means credit is more by 200. But you are touching on the credit side of Singh and Co by 200. Now Singh and Co, matlab the trail balance is more by 400 on the credit side. Now suspense will come on the debit side 400. Once you identified this mistake, debit what? Singh and Co for how much? 400 to suspense. How much? 400. Now in this 400 debit law, 200 is cancel the credit, 200 to recognize the debit. The first 200 is to cancel this, second 200 is to recognize this debit. Sir, open suspense account. Affecting suspense 1, affecting suspense 2, affecting suspense 3. There are 3 entries which is affecting your suspense. Now suspense account lo balance is there on credit side, right? Excess creditor, that is yes sir, that is excess credit means the suspense account you have debit balance means trail balance lo credit side is more 493, suspense account will come on the debit side. To balance brought down, difference in trail balance, how much? 493. Suspense lo by Singh and Co is 400. Second one by sales returns 100. by sales returns 100, then to trade payable 7, to trade payable 7, last one is by Singh and Co 400, by Singh and Co 400, total debit equivalent to total credit, means all errors were identified and fined, right? Very good, sir. Come to CRD number 4, sir. What they are telling, the trail balance of Mr. W and H failed to the agree, and the difference, what is the difference, sir? 20,570 was put into suspense. Sir, do you know whether it is excess debit or excess credit? I don't know whether it is excess debit or excess credit. I need to find out by preparing suspense account whether it is excess debit or excess credit. Pending investigation which disclosed that. Sir, if you remember CRD second, they are telling trail balance out by 493 excess credit. Here also trail balance is not tallied, but they are telling whether it is excess credit or excess debit. No, sir. Now you are supposed to prepare your suspense account and you are supposed to tell whether it is excess debit or credit. Okay, sir. So they had given you some 10 transactions and they are asking you to, you are required to give rectification entries without narration. They are not asking you to write narration. Without narration only they are asking you to pass the journal entries. Okay, sir. Without narration I will pass the journal entries. Fine. What is this? First one, purchase written day book has been correctly entered and totaled at 6160, but has been posted to the had not been posted. What is this nonsense, sir? Sir, purchase returns book. What is meant by purchase returns? Yes, sir, purchase returns. I purchased the goods, but I failed. I returned those goods. Purchase returns day book has been correctly entered. In your purchase day book law, you have correctly entered purchase day book. The total comes to how much? 6160. You are supposed to be take this purchase book, purchase returns book. How much is the purchase returns book, sir? 6160. You are supposed to take this to the purchase returns account by sundries as per purchase returns book 6160. But I failed to take this, sir. I failed to post from here to where? Purchase returns book. Then what will happen to the trail balance? Trail balance lo every other debit item will be fine, sir. But in the credit law, 6160 will be short, sir. Now the trail balance debit is more by 6160, the credit is less by 6160. This less will be offsetted by whom? Suspense account. How much? 6160. Once I identify this mistake, then still suspense is required or not required? Not required, sir. But suspense account is showing a balance how much? 6160. Then debit your suspense account. Debit your suspense account. Credit your purchase returns account. Why purchase returns, sir? Actually, you are supposed to be credit your purchase returns, but you fail to credit your purchase returns. Now credit your purchase returns account. How much? 6160, 6160. Right? Right, sir. Come to the second one. Sir, discount received how much? 1320 has been debited to discount allowed account. Sir, what is the entry for discount received, sir? Entry for discount received is creditor account debit to discount received. Okay, but you debited where? Discount allowed account. Sir, in the trail balance law, if you are not crediting in the discount received account, then debit is more by how much? Debit is more by that discount amount. How much is the discount amount? 1320. Debit is more by 1320. But sir, discount received, discount allowed. Sir, if you fail to take the discount received 1360, then debit is more by how much? 1360. Debit is more by, the total of the debit is more by 1360 because you are failed to take one credit item 1360. But what you have taken, sir? You have taken that 1360 on the debit side. Now your debit is more by how much, sir? Excess, double the amount. Your debit is more by double the amount, sir. Are you getting, sir? 2720. Your debit is more by double the amount. Why? A posting which to be posted on the credit side. If you are failed to post, then debit is more by that posting. But you are debited that posting, then debit is more by double the amount of posting. Now suspense came into the picture. How much? 2720. Once you identify that mistake, still suspense is required, not required, not required. Then debit will be given to whom? Suspense to cancel the defect. Suspense account to debit how much? 2720. Okay, sir. Now, I need to cancel unnecessarily. I debited discount allowed. Debit that discount allowed. Unnecessarily, I debited the discount allowed. Now, cancel the discount allowed. How much? 1360. 1360. 2. I need to credit discount received. Now credit the discount received. How much? 1360. This is the entry, sir. You are supposed to pass suspense account debit to discount allowed account, discount received account. Double the amount suspense required, and discount allowed unnecessarily you debited. Now cancel that effect. Discount received which you are supposed to credit. Now credit the discount received. Come to the third one. Sales account had been under added by 10,000. What is the sales account had been under added by 10,000? Means casting mistake. There is when you are totaling your sales account, you committed your casting mistake. Okay, sir. Now, when you are preparing your trail balance, suspense account will show lower credit by 10,000. Now, sales account will show a lower credit by 10,000. When you have prepared your trail balance, sales account will show lower credit by 10,000. Now, that will be offset by suspense. Are you getting, sir? Sir, if you want to prepare trail balance, because your sales account you have considered lesser credit by 10,000, now suspense will come and sit on the credit side by 10,000. Now, the moment you identify the mistake, debit your suspense and credit your sales account. How much? 10,000. No narration required. Are you getting, sir? Come to the fourth one. A credit sale of 1470 has been debited to the customer account as 1740. 1740 minus 1470. Unnecessarily, how much? 270 rupees excess you have debited. Yes, 270 excess debit is made. To whom? To the debtor. Now debit is more by 270, credit is less in the trail balance. Now suspense will come to the tune of 270 on the credit side. The moment you identify that mistake, debit that suspense account. Debit is more by 270, suspense will come on the credit side. The moment you identify that mistake, close that suspense. debit that suspense. Suspense account to debit to debtor account. 270, 270. Come to the fifth one. Sir, a vehicle bought originally for 7,000. Okay, sir. 4 years ago, I bought for 7,000 and depreciated too. Now the book value is 1,200. Most of them think depreciation charged is 1,200. No, sir. Depreciated too means now the book value is 1,200. A vehicle bought originally for 7,000 4 years ago and depreciated for, now that is a value, the book value is how much? 1,200. Had been sold for 1,500 in the beginning of the year. What is the meaning of the term beginning of the year? What they are asking, don't charge depreciation in the current period. That is the meaning if they are sold in the beginning of the year. Okay, sir. But no entries other than in bank account has been passed. Means bank account it is passed, but it is not posted in where? Machinery account. I mean vehicle account. It is not posted in the vehicle account. Now pass. So now as it is posted in the bank column, debit side is perfectly alright, but credit side is not posted. Debit is more by how much? 1,500. Credit is less by how much? 1,500. Suspense will come and sit on the credit side. Once you identify that mistake, cancel that suspense, debit the suspense. Suspense account to debit. 2. Now, what is the value of the suspense? 1,500. Now, 2. Vehicle account. What is the book value of the vehicle? 1,200. 2. Profit on sale of vehicle. How much? 300. I need to close the vehicle account. Vehicle account is having a book value of 1,200. If you credit vehicle for 1,500, then once again you are supposed to be debit vehicle and credit profit on sale of asset. Don't do that. The book value of the vehicle is 1,200. Close that vehicle account and the balance amount route through the profit on sale of vehicle 300. Are you getting, sir? Debit side is more, credit side is less. Suspense account is coming and sitting on the credit side. The moment you identify the mistake, cancel that suspense, debit that suspense. Credit, vehicle account is not credited so far, credited that vehicle account to the tune of book value, that is 1,200. Balance amount route to the profit, that is profit on sale of vehicle. Come to the sixth one. Sir, an accrual of 560 for telephone charges had not been completely omitted, sir. Had been completely omitted. Yes, sir. An accrual of 560 for telephone charges had been completely omitted. Error of omission. Pass one entry. What is that entry? Completely omitted. Yes. Two-sided error. Yes, sir. Telephone charges account to debit. Outstanding telephone charges account. How much? 560. 560. 560. Yes, sir. Come to the seventh one. Sir, seventh one can be solved in two approaches. So, ICAI approach, and you can also solve in one more approach. I will show both the approaches, ICAI approach and other approach. So, follow ICAI approach only, as you are all kids of ICAI. But still you want to follow the different approach, I will show the different approach also. Fine. Wait, before going into the seventh one, first I will try to rub it up the eighth and ninth, then we can go into the seventh one. Sir, tools bought for 1,200. What is the tools bought for 1,200? Had been inadvertently debited to purchases, sir. Yes, sir. What is this? Tools bought for 1,200 had been inadvertently debited to, means without any intention, that inadvertently debited to purchases. Yes, sir. Actually, you are supposed to debit loose tools or tools, but you debited purchases, means Right side only, which has to be debit, you debited right side of the wrong account, means trail balance will agree. Two-sided error, suspense account is not required. Unnecessarily you debited purchase, now credit the purchase. Debits will be given to loose tools, entry, loose tools account debit to purchase. Loose tools account debit to purchases account. How much, sir? 1200. Next, sir. Proprietor has withdrawn for personal use goods worth 1960. No entries has been made in the books. Drawings account debit to purchases, it is a complete omission. Now you are supposed to write one entry, drawings account debit to purchases. How much, sir? 1960. Come to the seventh one, sir. What is the seventh one? A bad debts of 1560 had not been written off. Had not been written off means you have not passed an entry, bad debts account debit to debtors account. Pass the entry. Bad debts account debit debtor. How much? 1560. Now, and provision for bad and doubtful debts should have been maintained at 10% of trade receivables. What they are telling? They want to maintain a provision for bad and doubtful debts which is 10% of trade receivables. Okay. Which were shown in the trail balance as 23,390. What is this 23,390? Is the balance of trade receivables with a credit provision of bad debts. How much is the credit provision of bad debts? 2,320. Okay, sir. Now provision for bad and doubtful debts 2320 and the balance of debtors in the trail balance 23,390. Balance of trade receivables. How much, sir? 23,390. Yes, sir, 23,390. Less bad debts written off. How much, sir? 1560. 1560. Less. Unnecessary, a debtor is overvalued by how much? 270. Yes, sir. Debtor wrongly posted. How much? What is this debtor wrongly posted? Sir, here unnecessarily you have considered that the sale account which is not a credit sale of 1470 has been debited to customer account 1740 means now the customer account will have a debit balance of excess 270 in the trail balance. So when you have taken the trail balance in 23,390, the customer account is having excess debit by 270, that I am cancelling. Balance in debtors a trade receivables account. How much? 23,390 less 1560 less 270. How much? 21,560. How much provision required, sir? 10% provision required. Provision required. Which is 2156. But what is the provision already is there in the trail balance? Provision already there in the trail balance 2320. Provision already created. How much? 2320. Now excess provision by how much? 2320 minus 2156. Excess provision is there. How much? 164. Now bring that excess provision to P and L. Now what is the entry to bringing that excess provision to P and L? Provision for doubtful debts account debit to P and L account. How much? 164, 164. This is ICAI presentation, but alternate way of presentation is also there. That alternative way of presentation lo what will happen? Sir, this bad debts of 1560 first adjust from your existing provision. What is your existing provision? 2320 minus 1560. Then the balance in the provision account is 760. How much provision you required? 2156. What is the difference? 1396 is the provision required during the year. Create one entry, profit and loss account debit to provision. Net impact wise same, sir. Okay, as we are supposed to follow our ICAI suggested answers, follow this only. Now once you have done all these entries, open suspense account. Open suspense account. First line leave the balance, because I don't know whether it is debit balance or credit balance. Rest everything post in the suspense account. First one what? Suspense account lo 2 purchase returns 6160. Next. Suspense lo 2 discount allowed, 2 discount received. Next. Suspense lo 2 sales. Next. Suspense lo 2 debtors. Next. Suspense lo 2 vehicle to profit and sale. Next. Suspense account is not required here. Next. That's it. If you debit everything into the suspense account in the problem, then you will have the difference balance is how much? What is that? Excess. Come to the, now leave the first line balance, then everything you post, then exactly you will get the total of the debit side 20,570, then credit side balance is there, that is nothing but by balance brought down. How much? 20,570. Take everything into the debit side what we have posted. Suspense to purchase returns 6160. Suspense to purchase return 6160. Discount allowed 1320, 1320. Sales account 10,000, 270. Vehicle profit and sale 300. If you add everything, you will get how much? 20,570. Take that 20,570 as by balance brought down. 20,570. Now what is that account is saying? This account is having excess debit. Now show that in the suspense on the credit side, or lesser credit. How much? The same amount 20,570. This is how it works. I hope you got the clarity. Debit everything. Exactly you will get the balance. Sir, what if you are getting some higher balance? Now you will have take that opening balance up to that amount, take the balance in the closing, meaning thereby there are still some mistakes which is not rectified. I don't think they will go into that extremities. Imagine the opening balance is some 29,000 we got. Take that opening balance is some 20,000. What is that? 20,570. Balance amount, show the credit balance. To balance carried down. Means what is that meaning? That the balance amount they will show still there are some mistakes which is not identified. Are you getting? So I don't think they will not go into that extremities. Yes, sir. Now come to the next problem, sir. Yes, sir. Completed? Yes, sir. Come to one more problem. AP4, sir. Yeah. Write up the journal entries. They are asking journal entries to rectify the following errors using suspense account. Using suspense account means stage 2 they are asking. Sir, even at stage 3 also suspense account will come. But they are not telling that in the subsequent year I am rectifying. In the subsequent year if I am rectifying, then only it is stage 3. Nowhere they said in the subsequent year, then assume it as stage 2. Right. Stage 1 there is no question of suspense. Suspense will come only at stage 2 and stage 3. Stage 3 is the further in the year. Next year if we are rectifying, then it is stage 3. But nowhere it is telling in a subsequent year, assume it as stage 2. Right. Sir, goods of the value 100. Okay. Returned by Mr. Sharma. What is this, sir? Purchase returns or sales returns? Sales returns. Goods of the value 100 returned by Mr. Sharma were entered in where, sir? Sales day book and posted to their to the credit of his account. What is the entry, sir? What is the entry? Sales returns. Yes, sir, it is a sales returns entry. Sales returns account debit to Sharma account. Sales returns account lo it should be debited. Sharma account lo it should be credited. But what happened? Sharma account lo it is credited. How you know? They are only telling. And posted there from to the credit of his means who is that? His Sharma. So it is credited on the Sharma account. But instead of debiting to the sales returns account, it is entered in the sales day book. If it is entered in the sales day book means if it is entered in the sales day book means the total will go and sit in sales account lo credit side by sundries as per sales book. Meaning to say, actually it should be debited to where? Sales returns account. It should be debited to sales returns account. But it is credited in where? It should be debited in sales returns account, credited in sales account. Instead of debiting to sales returns account, it is credited in sales account. Imagine if it is not even debited in sales returns account and nowhere it is accounted, then credit is more because it is already credited. But what happens, sir? Unnecessarily you are crediting in where? Sales account. Are you getting, sir? Now sales is more by how much? 200. In other words, in your trail balance lo, your credit is more by how much? 200. If sales returns is not even recording in where? On the debit side, then your credit is more by 100. But in spite of that, instead of debiting your sales returns, you are crediting your sales. Then your credit is more by 200. Now your suspense account will come to the tune of how much? 200. Now once you identify this mistake, cancel your suspense. And unnecessarily you debited, unnecessarily you credited whom? Sales. Now debit that. Sales account debit. How much you credited? 100. Actually, the debit shall be given to whom? Sales returns account. And suspense is there on the debit side. Now cancel that suspense. 200. This is the entry. Are you getting? You are unnecessarily you created sales. Now debit it. Actually, you are supposed to debit your sales returns. Now debit your sales returns. Suspense is having debit balance. Credit is more. Suspense is came sitting on the debit side. Now close your suspense by creating your suspense. Now come to the second point. Sir, an amount of 150 entered in the sales returns book. Okay, it should be entered in the sales returns book and it is entered in the sales return book. Had been posted to the debit of Mr. Philip. Sir, it should be posted to which account, sir? What is the entry? Sales returns account debit to Mr. Philip. Mr. Philip account it should be credited, but you debited to the Mr. Philip account. What is the difference between point number 1 and point number 2? Point number 1 lo, instead of debiting your sales returns, you have credited your sales. Point number 2 lo, instead of crediting that Mr. Philip account, you debited that Mr. Philip account. Now debit is more by how much? Debit is more by 300. Suspense will come and sit where? On the credit side. Once you identify this mistake, debit what? Suspense. Credit will be given to whom? Mr. Philip. That credit will be given to Mr. Philip to the tune of 300. First 150 is to cancel what? Cancel the debit. Next 150 is to recognize the credit. Are you getting? Similar sort of adjustment I think we have done under CRD 2 if I am not wrong. Are you getting? Yes sir. Goods written. Yes sir, it is written. You are supposed to credit that Mr. Philip account, but you debited that Mr. Philip account, right? Yes sir, you debited that Mr. Philip account. How much? 150. If you are not even credited that and you are also not even debited that Philip account, then debit is more by 150 because there is no credit. But in spite of crediting that Mr. Philip account, you debited that Mr. Philip account to the tune of 150. Now the debit is more by 300. Suspense account will come and sit on the credit side to the tune of 300. Once you identify this mistake, cancel that suspense to the tune of debit 300. Credit given to Mr. Philip 300. That first 150 is to cancel that debit and the one more 150 is to recognize the original credit of 150. Entry. Suspense account to debit to Mr. Philip account. How much? 300. 300. Come to point number 3. A sale of 200 made to whom, sir? A sale of 200 made to Ganashyam. Okay, sir. Mr. Ganashyam, I made a sale. Now, was correctly entered in the sales day book. Okay, sir. Sales day book it is correctly entered. But wrongly posted in the debit of Mr. Radhashyam as 20. Debit only. Radhashyam it is given debit. Actually, the debit shall be given to Ganashyam. And if it is given 200, then it is a two-sided error. Right side only with wrong account. If the debit is made to Radhashyam as 200, then right side wrong account, then the entry will be debit Ganashyam, credit Radhashyam, close the matter. But what happened? You have debited your Radhashyam to the tune of 20. Ayyo. Now what happened? Credit is more, debit is less. Debit low, Ganashyamli it should be 200, but Radhashyamli it is 20. Now suspense will come and sit on the which side? Debit side. How much? 180. Now the suspense will come and sit on the debit side to the tune of how much? 180. Now once you identify this mistake, cancel that suspense, credit that suspense. Debit will be given to whom? Ganashyam account debit 200 to suspense 180 to unnecessarily you debited Radhashyam. Now credit that Radhashyam to the tune of 20. The debit actually to given to Ganashyam, give that Ganashyam 200. Unnecessarily suspense is there, credit that cancel that suspense to the tune of 180 and 2 Radhashyamla unnecessarily you debited, now credit that. Sir, from where the suspense 180 came? Sir, you have to debit 200 but you give debit only 20. Credit is more, debit is less. How much? 180. Debit that suspense. Now once you identify that mistake, cancel suspense 180. Unnecessarily give debit to Radhashyam, cancel that, credit that Radhashyam. Original debit shall be given to Ganashyam. Now given Ganashyam account 200 to suspense 180 to Radhashyam 20. Ganashyam account to debit. How much debit shall be given to Ganashyam? 200. To suspense account debit, how much? 180. To Radhashyam, how much? 20. Done. Next. Next, sir. A bad debts aggregating how much? 450 were written off during the year in the sales ledger. Sir, I think I already covered multiple times when I have discussed either ledger or either subsidiary books. In other multiple topics I have discussed these points. Once again, for your benefit, I am teaching what is the sales ledger. Sales ledger is also known as a debtors ledger, customer ledger, sold ledger, right? In the debtors ledger or sales ledger or sold ledger, you will have individual debtors account in that ledger, right? Don't get into a conclusion it is sales ledger means sales account. No, it is what, sir? Debtors ledger. Okay, in other words, in that sales ledger or debtors ledger you will have individual debtors account. Okay, bad debts aggregating 450 were written off during the year in which that individual ledgers but were not adjusted in journal ledger. What is this journal ledger? All accounts other than debtor account and creditor account will be there in the journal ledger. Bad debts account will be there in the journal ledger. What they are telling now? Now in the debtors law, by bad debts they have written, but bad debts account law too, what are the debtor account they have forget to fail it to post. Yes, sir. Bad debts, what is the entry, sir? Actual entry to be passed. Actual entry to be passed. Bad debts account to debit to debtor account, right? Bad debts account debit to debtor account. Debtor account low by bad debts. Debtor account low it is posted by bad debts, but this is known as debtors ledger or sales ledger or sold ledger. Debtor account will be there in either debtor ledger, matlab the same name. The other name for sales ledger is debtor ledger or sold ledger. Bad debts ledger will be there in journal ledger. Now what they are telling? To debtors, this posting is not done. By bad debts, sales ledger posting is done. Now if you prepare trail balance, debtor balance as it is reduced will have lesser, but bad debts account actually show debit balance, that is not there. Means credit it is there exact figures, but lesser debit. If bad debts is also there here, then debit will tally, but lesser debit. To offset this, to offset that, suspense account will come and sit on the debit side to the tune of how much? 450. Entry. Once you identify this mistake, now the suspense account is there on the debit side. Once you identify this mistake, suspense account is not there. Bad debts is not debited. Now that bad debts debit. Bad debts account to debit. suspense account. Once again, what that once again? This point, nothing, right? See, debtors ledger means or sales ledger means what? Sales ledger or debtors ledger means in the individual ledgers lo you will have debtor accounts. Okay. Sales ledger means in that individual lo you will have debtor accounts. Debtor account lo it is posted by bad debts. Debtor balance also reduced. But journal ledger lo bad debts account will be there. In that journal ledger lo bad debts account lo it is not posted. Means now the debtor account balance is reduced, but bad debts also to be debited, which will have debit balance. Now that bad debts is not having the debit balance. Credit is having exact figures. Debit side lo lesser debit. Why? A bad debts balance should have debit, but it is not there. Now use suspense account. Once you identify this mistake, cancel that suspense and the debit will be given to the original debit of bad debts account debit to suspense. Right? Right. How much? 450. Come to the last one. Total of discount allowed column of the cash book for the month of September amounting to 250 was not posted. Now total of discount column in the cash book will have to be posted in the discount allowed account or debit side. Now total of discount allowed column in the cash book will have to be posted to where, sir? Discount allowed account to sundries as per cash book. Now the debit is not posted. Credit is with exact terms, debit is lesser debit is there. Now to that offset that lesser debit, use suspense account to the tune of how much? 250. Once you identify this mistake, cancel that suspense, credit that suspense, debit will be given to discount allowed entry. Discount allowed account debit to suspense. Discount allowed account debit to suspense account. How much? Discount allowed to suspense, how much, sir? 250. Right? Right, sir. Now open one suspense account. Now I think all are having some suspense impact, means all these are one-sided errors, sir. Means trail balance will not agree. Now open one suspense account. In this suspense account lo by sales returns. Here suspense account to Mr. Philip. Next suspense lo by Ganashyam. Next 180. Next suspense lo by bad debts 450. Suspense lo by discount allowed 250. Balance that suspense account. Yes, sir. Yeah, posting is done only. Third one, Ganashyam, Radhashyam suspense, bad debt suspense, discount allowed suspense. Suspense account lo, you will have balance. Opening balance. Will first of all you are supposed to, they are not telling what is that opening difference. Now leave the first line space and post everything and the balance will be their opening balance. To difference in trail balance 750. But in the problem they are not asking suspense account, better you open that suspense account. Right? Right, sir. Come to CRD number 5. Yes, sir. Forget about the CRD 5 or 4. Sir, an error can be identified and rectified either at stage 1 or at stage 2 or at stage 3. If you identified an error at stage 3, then in means subsequent year lo you are identifying in place of nominal accounts. In place of nominal accounts, use P&L adjustment account. Sir, what is this nonsense? Nothing, sir. Sir, this is last year and you identified a mistake in the subsequent year. Yes, sir, in the last year lo, sales book is undervalued by 1 lakh. The fact that your sales book is undervalued by 1 lakh in the next year GST audit, when the GST audit is conducted, in the GST audit flow, you find that your sales book is undervalued by 1 lakh. Yes, sir, I find that sales book is undervalued by 1 lakh. And in the second year low, in the subsequent year low, I came to know that sales book is undervalued by 1 lakh. Now, it is a two-sided error in the last year. Sir, is it a two-sided error? No, sir, it is a one-sided error. Two-sided error means, what is the two-sided error? Trail balance will agree. As your sales book is undervalued, sales account in the credit side will show less by 1 lakh. It is a one-sided error, not two-sided error. It is a one-sided error. Now, suspense account will come and sit on the credit side as the credit side is lower. Debit side is with exact figures, but the credit side is lower. Suspense account will come and sit on the credit side. Okay. Now, at the time of preparation of balance sheet, still I am unable to find this. There is a sales which is, the sales book is undervalued by 1 lakh. For academically, I am telling, sir, practically you might find out. If you appoint one auditor, auditor will find out all these things. Academically, I am telling, now the suspense account is having credit balance. In the liability side low, it will come and sit on the credit side, balance sheet low. In the subsequent year low, once you identify this mistake, still suspense is required, not required, not required. Suspense account is having which balance? Credit balance. Now debit your suspense, so that suspense account will get closed. And the credit will be given to whom, sir? Sales book is undervalued, then give the credit to the sales account. But the fact that just because of an error or omission in the previous year, don't touch your current period nominal accounts means, this is a sales of the last period and the last period sales must be increased. Just because of a mistake or omission which is committed in the last period, don't increase or decrease of the current period nominal items. Meaning to say, you don't tell that current period sales is increased by 1 lakh. No, sir, current period sales is not increased by 1 lakh. Current period sales is what the sales account is showing. Just because of an error or omission which is committed in the last period, your nominal accounts shall not be adjusted. Then instead, whenever nominal account is there, transfer to P&L adjustment. How much? 1 lakh, 1 lakh. Now, the balance in the P&L adjustment account, will be transferred to capital account. By suspense, 1 lakh. The balance in the P&L adjustment will be transferred to capital account. Why, sir, capital? Sir, last period, if I recognize this 1 lakh sales, my profit would be increased to the extent of that 1 lakh. Just because my profit is increased, that profit will go and sit in my capital account. Just because I unable to recognize in the last period that 1 lakh, my capital is decreased, my profit is decreased. Now ultimately transfers to your capital. Sir, you are a sole proprietor and partnership. Sir, I am a company, sir. If you are a company, transfer to general reserve. Don't transfer to your capital, transfer to general reserve if you are a company form of organization. No, sir, I am a sole proprietor or partnership. You can also add to your capitals. Next. By having this background, just go to the next problem, number 5. Yes, sir. Mr. A closed his books of accounts on 30th September 30, 2020. Despite a difference in the trail balance, the difference was 820. The credit is being short. Credit is being short means the suspense will come and sit on the credit side because the debit is more, credit is less. It is carry forward in a suspense account. Very good. In 2021, in the subsequent year, stage 3. Stage 3 in the subsequent year, the following errors were located. Yes, sir, the following errors were located. When? In the subsequent year. Yes, sir. Now, what to do with this type of whenever you have committed? Simple logic, sir. Whenever nominal account is there, use the P&L adjustment when you are rectifying in the subsequent period. Right. A sale of how much, sir? 2,300 to Mr. Lala. Entry, sir. Mr. Lala account debit to sale was posted to the credit of Mrs. Lala. Mrs. Mala. Okay, sir. Sir, what should be the entry, sir? The entry should be, correct entry should be Lala account to debit to sales. How much? 2300. 2300. Lala account lo you are supposed to debit to sales. Fine. But what you did, sir? Miss Mala account lo you have credited, sir, by sales. Sir, if you not even debit to that Lala account, then your credit is more by 2300. If you are not even debited to this Lala account, your credit is more by 2300 as it is correctly posted in the sales account. But while you are preparing your trail balance, you have credited to who, sir? Mrs. Mala. Means your credit is, if you are not debited on the debit side of Lala account, then the credit is more by 2300, but you credited to the Mrs. Mala account. Now credit is more by 4600. Are you getting? If you are not debited in the Lala account, credit is more by how much? 2300, because you are not an item which to be posted on the debit side, you forget to post. But in spite of debiting an item on the debit side, what you have did, sir? You have credited to the another account, means your credit is more by 4600. Suspense account will come to the tune of 4600. Now the moment I identify this mistake, close this suspense account, credit this suspense account. Actually it should be debit shall be given to whom? Lala account. How much debit? 2300. But unnecessarily you give credit to whom, sir? Mrs. Mala. Suspense account having which balance? Debit. Once you identify that mistake, still that suspense account is required, not required? Not required, sir. Credit your suspense. How much? 4600. This is the entry for 1. Unnecessarily Miss Mala account is credited. Now cancel that effect, give debit to that Mala, and Lala account to be debited. Now give that debit. Now suspense account is having a balance of debit balance to the tune of 4600. Cancel the debit balance to the tune of 4600. Yes, sir. Next one. The total of written inward. Written inward means what, sir? Sales returns. The total of written inward book for July 2020, 1240 has not been posted in the ledger. What is that ledger, sir? Sales return. Did they talking about individual accounts like they have posted or not? Then you don't question the question, right? Don't question the question, sir. As the question is silent, everything is done. Individual accounts lo posting is done correctly only, but the mistake is done where, sir? You have omitted to post this sales returns book total into sales returns account. Matlab written inward. Very good, sir. How much? 1240. Trail balance. Sales returns account. Sales will have credit balance. Sales returns account will have debit balance. The debit is there or not there? Yes, sir. The debit balance is not there. Right? Credit with the actual terms. Debit with the lesser, shorter. Then suspense will come. How much? 1240. 1240. Are you getting, sir? Suspense is having which balance? Debit balance. Once you identify this mistake, now close that suspense which is having debit balance, credit your suspense. Actually you are supposed to debit what? Sales returns account. Debit that sales returns account. But as the sales returns account is a nominal account, don't touch the sales returns account. Use P&L adjustment account to debit to cancel that suspense account. How much? 1240, 1240. You have omitted to take the total of sales inward, matlab total of written inward book to the written inward account. The total of sales returns book you have forget to post to the sales returns account lo debit side to sundries as per sales returns book. Now I did that entry. Come to the third one. Yes, sir. Freight paid on mission, how much? 5,600. Was posted to the freight account as 6,500. Okay. 10% of depreciation was charged on this mission. Okay. Yes, sir. First one. Freight paid on mission. How much you paid on mission? 5,600. Posted to which account? Freight account. Actually, to which account it should be posted? It shall be posted to the mission account. How much? 5,600. Okay. You are supposed to be debit your mission. How much? You are supposed to be debit your mission. How much? 5,600. But you debited your freight account. How much? 6,500. 6,500. Yes. 6,500. Yes. Actually, the debit shall be given to the mission 5,600. Right side of wrong account with wrong amount. Right side of it should be debit. You have debited one more. Right side of wrong account with wrong amount. Okay, sir. Now, you debited freight, but cash is credited with how much? 5,600. Now, debit is more by how much? In the trail balance low, you have debited with freight how much? 6,500. Debit is more by how much? Debit is more by 900. Credit is less by 900. Now, use the suspense account 900 on the credit side because shorter credit. Mistake is there on the debit side with a higher debit of 900. Now, use the suspense account for the lower credit 900. Once you identify this mistake, which account to be debited? Mission account to be debited. How much? For 5,600. Debit then. Yes, sir. And once you identify this mistake, that suspense account having credit balance still it is required, not required? Not required. Cancel that. Now, unnecessarily you debited freight account for 6,500. Cancel that freight account. How much? 6,500. Now you are supposed to charge depreciation on this mission. Yes, sir. I am supposed to charge depreciation on this mission. What is the entry? Depreciation. But in place of depreciation, nominal account is there. You are supposed to use which account? Freight. I mean P&L adjustment. In the same way, in place of freight, use which account? P&L adjustment. In place of depreciation, use P&L adjustment account to debit to mission account. How much? 10%, 560, 560. Sir, whenever you incur freight on the machinery, when the asset is ready for the intended use, before the asset is ready for the intended use, if you have spent any expense on that in the nature of freight, it shall be taken to add it to the mission account or capitalized to the mission account. Any amount which you spend before the asset is ready for the intended use, or the asset is any amount which you spend the asset to bring into present location and condition, that should be capitalized. AS 10 PP, property, plant and equipment law, it will be there at that point. Enough. But what happened? They debited to freight account, but debiting to freight account as 5,600, it is a two-sided error. But what they did? They debit to 6,500. Now suspenses came to the extent of 900. Done. Next one. While carry forward the total in the purchase account to the next page, 65,590 was written instead of 56,950. Oh, yo. How much you are supposed to take in the purchase account? 56,950. But how much you took? 65,590. Very good, sir. So 65,590 comes to how much? 65,590 minus 56,950, which comes to 8640. What is this 8640? You have considered excess debit to the tune of how much? 8640. Now credit is less. Yes, sir, credit is less. Use which account? Suspense account. And which side? On credit side. To the tune of how much? 8640. Debit side is more. Actually, the purchase account should be how much? It should show 56,950, but you unnecessarily you took how much? 65,590. How much excess you considered? 8,640. Excess figure you have considered. Because of that excess debit, your credit will, the suspense will come on the credit side to the tune of 8640. Once you identify the mistake, cancel that suspense, debit that suspense, credit will be given to purchase, but as it is stage 3, nominal account is a purchase, use P&L adjustment. Purchase account is more by 8640, debit side is more by 8640. To tally my trail balance, I am using suspense on the credit side to the tune of 8640. Once I identify that mistake, no longer suspense is required. Debit that suspense and credit will be given to whom, sir? To reduce purchase, I need to credit that purchase, but instead of purchase, use P&L adjustment account entry. Suspense account to debit to P&L adjustment. How much? 8640. 8640. Last one. Come to the last one. A sale of mission on a credit to Mr. Mehta. Yes, sir. I made a sale of mission on a credit to Mehta for how much? 9,000 on 30th September 2020, but not recorded in the books at all. The book value of the mission is 6750. Yes, sir. It is a complete error of omission, sir. Now you record that, sir. To whom you sold, sir? I sold to Mehta, sir. It is a complete omission, two-sided error. No suspense account will come into the picture. Now I sold this to Mehta, so they are not telling you are selling at cash. It is a credit. Now entry Mehta account debit, amount due from Mehta. Mehta is the asset balance increasing. Mehta account debit 9,000. To asset is going out, mission is going out. To mission book value 6750. That excess amount, which is the 2,250, is the profit on sale of asset. That is the nominal account. Sent to where? P&L adjustment. Entry Mehta account debit how much? 9,000. To what you are selling to Mehta? Mission. To mission account 6750. To profit on sale of asset, but as it is stage 3, in the next year, subsequent year, you are passing this entry, transfer to P&L adjustment item. How much? 2,250. Done. Now what they are asking in the question? Pass the journal entries. Yes, pass the journal entries and open suspense account. Yes, sir, open suspense account and open P&L adjustment account. The balance in the P&L adjustment account will be transferred to where? Will be transferred to capital. Open P&L adjustment account, post everything, balance will be transferred to where? Capital account. Open suspense account. If suspense account tallied, then there is no, means all the mistakes were identified. But if the suspense account is still showing some balance, means what is the meaning of it? There are still some errors which is not yet identified, right? If the suspense account is not balanced, means there are still some mistakes are there which is not identified. Check the answer. Five. Yeah, 5A. Yeah, done this entry. This entry is also done. 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 Now, suspense account, post everything. You are having still some balance in the form of 2870 in the suspense account. The balance which is left in the suspense account, when you close your suspense account, debit side is more, credit side is less, and the balance what 2870, what it is telling is still there are some mistakes which is not identified and rectified. And the balance in the P&L adjustment transfers to capital account. ICAI lo this problem they have ICAI suggested answer lo they have carry forward, sir. So what is the appropriate accounting treatment? Transferring to capital account is also no mistake, sir. You can also transfer to capital account. That's what we said in the study material. Instead of transferring balance to the profit and loss adjustment to capital, written that is to balance. However, transfers to, if you are transferring that balance in that P&L adjustment to capital account, you are supposed to write profit and loss adjustment to capital account. I hope you got the clarity. Yes, better you follow this only, no issues in that. If you have that command over the problem, better solve in the same way. Right, sir. Next, coming to the next problem. Yes, sir. Come to the next one, sir. I hope this one is over. Yes, come to the next one. Sir, Mr. Dicey was unable to agree the trial balance. Yes, sir. Mr. Dicey was unable to agree the trial balance last year and wrote up the difference to the profit and loss account. Where, sir? Wrote up the difference to the profit and loss account, which you are not supposed to do, sir. But you have debit or credit the difference to where, sir? Profit and loss account. Okay. On verifying the old books by a chartered accountant in the next year, stage 3. Are you getting? So in stage 3, a chartered accountant is verifying the books of accounts. Now he is verifying and he is passing the rectification entries. The following mistakes were found. Yes, sir. Suggest you the necessary rectification entries. Okay, sir. I will pass necessary rectification entries. What is the question, sir? What is the difference between this question and other question? Other questions, the difference between the trial balance is transferred to the suspense account. But when it comes to this question, the difference between the trial balance is not to transfer to the suspense account, but it is transferred to the profit and loss account. Yes, sir. Because the difference is transfers to the profit and loss account, capital account is affected. How capital account is affected? Imagine if the difference is not sent to this P&L account, then it will not send to the capital. Just because the difference is sent to this P&L account, profit or loss get affected and the net profit or loss transferred to the capital account. Ultimately, my capital account got affected. Right? Now, solve the problem as if it is not transferred to P&L account. Solve the problem as if it is they sent to the suspense. The balance in the suspense transfer adjust against capital. The balance in the suspense adjust against capital because the balance in the suspense account will be used to offset the suspense balance, but in this problem it is transfers to capital. Use the suspense account to cancel what? To cancel the net effect transfers to your P&L account through capital. So cancel that, transfer the suspense balance to the capital account, and obviously the balance in the P&L account obviously will transfer to the capital, transfer to the capital. Yes, sir. Sir, the difference in suspense is transfers to P&L account. Because of the difference in suspense transfers to P&L account, capital net profit transfer to capital or net loss adjusted against capital got affected. Now what you are supposed to do? Solve your problem as if it is not transferred to P&L. Means as if it is transferred to suspense only, solve your problem. Ultimately, the balance in the suspense account transfers to the capital account. So that the effect what has given in the P&L account in the form of suspense, in the form of the difference in the trial balance will get nullified now. Right? Right. Now, balance in the P&L adjustment like in any other problem transfers to the capital account. Right? Right. What is this? What is there in this problem? First one, purchase account was under cashed by how much? 8,000. Sir, purchase account will have debit balance. Now the debit is lesser by how much? Debit is lesser by 8,000. Credit is more by 8,000. Mistake is there in the debit side. Mistake is there in the debit side by taking lower debit by 8,000. Suspense account will come and sit on the debit side. Yes sir, suspense account will come and sit on the debit side. Once I identify this mistake, no longer suspense account is required. Credit the suspense, increase your purchase account to debit your purchase account, but as it is stage 3 in the subsequent year, it is a nominal account. Don't increase or decrease current period purchase. Transfer this last period mistake to P&L adjustment entry sir. P&L adjustment account debit to suspense account 8,000. P&L adjustment account debit to suspense 8,000, 8,000. Sale of goods to whom sir? To Mr. Rahim. For how much? 2,500 was omitted to be recorded. Error of omission, two-sided error, no suspense required. Entry, Mr. Rahim account debit to sales. But sales is the current period. That don't increase or decrease the sales of the current period. This is a mistake or omission which is taken place in the last period. The nominal accounts of the last period, which by ways of adjustment, adjust to where? P&L adjustment. Entry, Rahim account debit to sales, but cancel that sales and write P&L adjustment. Entry sir, Rahim account debit to P&L adjustment. How much? 2,500, 2,500. Next one. Receipt of cash from Mr. Ashok was posted to the account of Mr. Ambu. Okay, Anbu. From whom I received cash? From Mr. Ashok. What should be the actual entry? Cash account debit to Ashok account was posted to the account of Mr. Anbu. Did they selling like debit credit? If they are not telling, don't question the question. If they are not telling anything means it is posted in the credit side of Ambu only. Which should be posted to credit of whom? Ashok. But it is posted to account of Anbu means credit of Anbu only. You don't question the question. Unnecessarily you created Anbu. But actually which account to be credited? Ashok account to be credited. Two-sided error. Right side of the wrong account you have credited. Right side is the credit side, wrong account. Entry sir. Debit Anbu. Cancel that credit effect given to Anbu. Actual credit effect should be given to whom? Ashok. Entry Anbu account debit to Ashok account. Anbu account debit to Ashok account. Next. Amount of 4167 of sales. Okay sir. 4167 of sales wrongly posted to how much? 4617. How much sir? 450 you have considered excess amount. What is the actual sales? 4167 but wrongly posted as how much? 4617. How much higher sales you have considered? 450 higher sales you have considered. Sales is a credit balance. In the trail balance flow, sales is more by how much? 450. Now suspense will come on which side? Debit side to the tune of how much? 450. Once you identify this mistake, close that suspense, cancel that suspense. A suspense having debit of 450 will be cancelled by crediting that suspense. Now suspense will be credited to the tune of 450. Debit will be given to whom? Actually it is sales, but as it is stage 3, give that effect to whom sir? P&L adjustment. Don't touch the nominal accounts. So entry P&L adjustment account debit to suspense 450. Last one. A credit purchase of goods from Mr. Paul for 3,000 entered as sale. Ayyo. Entered as sale means individual account of the posting law is depends upon how you entered in the sales means what you have written, PAL account debit to sales you have written. Correct entry should be purchase account to debit to PAL account. 3000. This is correct entry. Wrong entry what you posted. PAL account debit to sales account. How much? 3000. 3000. Which account to be debited actually? Which account to be debited? Purchase account to be debited. But you debited which account? PAL account. Right? Which account to be credited? PAL account to be credited. But you credited which account? Sales account. What is the net entry, sir? Ultimate entry, sir? Actually, the debit shall be given to purchase, but that is not given. So, now you debit purchase. In place of purchase, debit P&L adjustment. How much? 3000. Unnecessarily you credited sales. Now debit what? Sales. Debit sales, third stage, P&L adjustment. How much? 3000. 2. Credit shall be given to PAL account. Unnecessarily you give debit of 3000. Now credit PAL account 6000. First to 6000 is to cancel that debit. Next 3 is to recognize that credit entry. P&L adjustment account debit to PAL 6000. Ultimate entry is P&L adjustment to PAL 6000. Now the suspense account will be transferred to capital account to nullify that capital account given through transferring the difference to P&L. Next one, that the balance in the P&L adjustment will be transferred to capital. So this is the general entries. Accordingly post. Ultimately you will have two entries. One entry transfer of what? Your suspense to capital. Transfer of what? Your P&L adjustment to capital. Yes, correct. Correct. Just check all the entries correct only. Yeah, up to this we have passed. Next, open what? P&L adjustment. Post everything. The balance will be transferred to where? Capital account. Entry. So, DICE's capital account debit to P&L adjustment account. Right? Yes, sir. Next, open suspense. Suspense law, the net balance will be transferred to whom? Capital account. DICE's capital. Pass one entry. Suspense to DICE's capital. Problem gets over. Up to what we have covered, done. Open two accounts. The balance in the suspense will be transferred to capital. The balance in P&L adjustment also will be transferred to capital. I don't think there is any confusion here. Most of the students used to ask, why sir suspense account balance transfers to capital? Suspense account, actually the balance, the difference in the trail balance transfers to P&L, and hence the capital got adjusted. Now offset, nullify that effect by closing your suspense to capital. Done. I think one more question required, that is your CRD 6. Similar to that, sir. No, nothing great. Similar, same way. We can easily solve. Hardly in the 5 to 10 minutes, I will close this chapter. Yes, sir. Come to CRD number 6. Mr. Roy was unable to agree the trail balance. Okay, Mr. Roy is unable to agree the trail balance last year and write off the difference to the profit and loss account. Same story. Just because the difference is write off the profit and loss account, from there the difference is went to where? Capital account. Now do one thing, treat it as it is not transfers to P&L, treat it as transfer to suspense and first solve the problem. And the balance of suspense. Now the suspense balance is adjusted against whom? Capital. Now the balance in the suspense account adjusted to capital so that the capital account will be free from these mistakes and errors. Done. Next, you will also have some P&L adjustment account balance. The balance in P&L adjustment, throw it on the face of what? Capital account. Then the problem. Yeah, first one. Then in the next year, stage 3. In the next year, stage 3. In place of what? Nominal accounts. Use what account? P&L adjustment account. Very good, sir. A chartered accountant is appointed who examined the what, sir? Old books of accounts from the following mistakes. First one. Purchase of scooter was debited to conveyance account. Same nonsense. Just now we have seen the same type of thing. Purchase of a scooter to be debited to the scooter account was debited to what? Conveyance account. Purchase of a scooter to the proprietor is there, then it should be debited to drawings account. I don't think it is a purchase of scooter to a proprietor. Purchase of scooter. If don't tell anything, assume it as what? Everything is purchased for the business purpose. Even the scooter is also purchased for the purpose of business. Entry. Either scooter account debit is also fine. Motor vehicle is also fine. Scooter account debit, the debit shall be given to scooter vehicle. 2. Unnecessarily debited to conveyance. This is a two-sided mistake. Trail balance will agree. Entry. Scooter account to debit. 2. Unnecessarily you debited to conveyance. Now cancel that entry. Scooter 2. In place of conveyance, this is stage 3. Use which account? P&L adjustment. Story not over here, sir. Roy charge 10% depreciation on vehicles. As this is not there in vehicles, this 3000 is not subject to depreciation in the last year. The moment I came to notice that there is a 3000 which is not recorded in the scooter account, now charge depreciation the next year. Don't use depreciation account. What is the entry? Depreciation to scooter. Depreciation is a nominal account. Don't increase or decrease current year depreciation because of a omission in the last year. Then use what account? P&L adjustment account debit to what? Scooter account. You can also pass one entry. You can also pass two entries. It's up to you how many entries you will pass. Yes, sir. CRD 6. Motor vehicle account to debit to conveyance. How much? 3000, I guess. 3000. 3000. Next. Charge depreciation in place of conveyance. Use which account, sir? P&L adjustment account. In place of conveyance, as it is stage 3, use which account? P&L adjustment account. Are you getting? Next. Use depreciation account debit to motor vehicle. P&L adjustment nominal account in place of depreciation. Use P&L adjustment account debit to motor vehicle. How much? 10% if I am not wrong. 300. 300. If you want, you can also net low, you can also charge motor vehicle account debit to P&L adjustment to the tune of 2700. Ultimate entry, motor vehicle debit. Here it is credit. Now ultimate entry, motor vehicle account debit to P&L adjustment account. How much? 2700 to. Either you can write both these two or you can also write only this one entry is also enough. Next. Purchase account is overcashed by 10,000. So now your purchase is more by 10,000. Trail balance lo your total of debit side is more by 10,000. Total of credit is less by 10,000. Suspense will come and sit on the credit side to the tune of 10,000. Once you identify this mistake, suspense flow credit side is no longer required. Debit that suspense account and credit shall be given to purchase, but as it is stage 3, credit shall be given to whom, sir? P&L adjustment entry. Suspense account to debit to P&L adjustment. How much, sir? 10,000. Come to third one. A credit purchase of goods from Mr. P. What is the entry? P means purchase account to debit to P account, but entered as sale. Just now we have seen whenever they are telling it as entered means the individual account low, unless otherwise mentioned, the P account low will be posted how you posted on the sales. Sales account low you posted as what? By P means P account low you will post as to sales means actual entry should be purchase account debit to P. But what you wrote? P account debit to sales account. Same sort of adjustment. You wrote as what? Correct entry should be purchase account to debit to P account. How much? 2000? Yes, sir. But you recorded as what, sir? Sale means what? How you recorded? P account to debit to sales account. This is correct entry. This is wrong entry. I want rectification entry. Unnecessarily sales account is credited. Now cancel that to use P&L adjustment. How much? Sales account is cancelled. Purchase account to be debited, but you are not debited that purchase. Now you debit. Use which account? P&L adjustment only. How much? 2 plus 2 total how much? 4,000. P&L adjustment account debit to 4. 2. P account 4,000. First 2,000 is to cancel that debit. Second 2,000 is to recognize the credit. Total 4,000. 4,000 plus 2,000 will be used to cancel the debit. 2,000 will be used to recognize the credit. Entry P&L adjustment account debit to P account. This is the ultimate entry. Exam lo these two not required, sir. Just like I am telling, but exam lo these two entries not required. Ultimate entry, this is enough. Receipt of cash from Mr. A posted to the account of Mr. B. Two-sided error. Trail balance will agree. Now you are not supposed to use suspense account. Trail balance agree. It is a two-sided error. Now receipt of cash from Mr. A, entry should be cash account debit to Mr. A, but you posted cash account debit to Mr. B. Unnecessarily you credited Mr. B. Now debit Mr. B account debit. Actual credit shall be given to Mr. A. Entry Mr. B account debit to Mr. A. No suspense is required. How much? Yes, sir. 1,000. I am getting, sir. Which one you want to write? Next one, sir. Receipt of cash from Mr. C posted to the debit of his account. Sir, if you are not even posted on the, actually what is the entry, sir? Receipt cash from whom? Mr. C. Entry cash account to debit to Mr. C account means cash account it should be debited, Mr. C account it should be credited. If you are not crediting in the Mr. C account, then the total of the debit side will be more by that amount. What is that amount? By that 500. In spite of that, what you are doing, sir? You are debiting to which account? To his account. Okay, sir. Sir, cash account to debit to Mr. C account. How much? 500. 500. This is the correct entry actually. When you are preparing your trail balance. If you are not crediting in Mr. C account, then in the trail balance low, the debit is more by how much? 500. But you are debiting in which account? C account. Means an item which to be credited, but you are debiting the same item on the debit side. Means your debit is more by how much? 500 plus 500, 1000. Credited is less by how much? 1000. Use suspense account for that 1000. Now, once you identify the mistake, suspense account is no longer required. Debit that suspense account. Credit Mr. C account. How much? 1000, 1000. First 500 is to cancel that debit. Second 500 is to recognize the credit. If it is credited on the Mr. C account lo credit side, no rectification required. If it is not even recorded in the Mr. C account lo credit side, debit is more by 500, now recognize that. But you are debiting on the C account lo debit side. Now the debit is more by 1000, suspense account will come and sit in the credit side. Entry, suspense account debit to Mr. C account. Come to the sixth one. $500 due by means asset. 500 due by Mr. Q. Now Q is an asset. Who due to the entity? Who due to us? How much? 500. Omitted to be taken in trail balance. Means that ledger is there, recorded, but from ledger to trail balance you omitted. Trail balance prepaid. Okay, trail balance prepaid. If 500 due by Mr. Q means Q will have debit balance, but that Q account is not there in the trail balance. Credit side will be more, debit side will be less because of the absence of Q account. In place of the Q, suspense account will come and sit to the tune of 500. The moment you identify the mistake, now cancel that suspense by crediting, use Mr. Q, entry, Mr. Q account debit to suspense. One-sided error, trail balance will not agree. How much? 500, 500. Next. Sale of goods to Mr. R for 2000 was omitted to be recorded. Omitted to be recorded. Entry, sir. R account debit to sales. In place of sales, use which account? P&L adjustment. Entry. R account debit to P&L adjustment account. Two-sided error, trail balance will agree. R account to debit to P&L adjustment account. $2000. Last one. Payment of how much you made? 2395. For the purchase was wrongly posted. In which account? Purchase account. How you know, sir? Cash book lo generally every day, day wise you have to be match your physical cash with the balance in your cash account or cash book. Generally there will not be any omissions in the cash book unless they have specifically mentioned. So this wrongly posted where, sir? In purchase account. Payment of 2395 for purchase were wrongly posted as 2593 in which account? Purchase account. What is the difference? 2593, 2395, 198. 198 excess debit you have considered. Debit excess is 198. Suspense will come and sit on the credit side. The moment you identify that mistake, suspense is there on the credit side. Cancel that suspense. Use debit, suspense account debit to, in place of purchase, actually purchase account to be credit. In place of purchase, credit P&L adjustment. Matlab, suspense account debit to P&L adjustment. Sir, once completed up to this extent, immediately in the working note open suspense account. The balance in the suspense account transfers to capital account so that the capital account will be nullified with the earlier mistake. Now, the balance in the P&L adjustment will be transferred to where? Capital account. Done. This is the entry, sir. These entries are not required. These two entries, wrong entry, right entry. Ultimately write the rectification entry. For your understanding purpose, I said all these things. Next, difference between posted and entered, that is the key thing. Posted means both the accounts it is posted wrong. Matlab, entered means both the accounts it is entered wrong. Posted means in which account they are telling that account it is posted wrong. Entered means in the sales loan also entered wrong, in the individual accounts also entered wrong. Posted means to which account they are telling, in that account loan they are doing the mistake. Entered unless otherwise mentioned, if they are mentioned entered in one book correct, entered in the other book is wrong, follow accordingly. From my end, chapter gets over. You can ask me any doubts, sir. CRD 6, yeah, all entries we have done. Just check. These two entries, open P&L adjustment, balance will be transferred to capital, because I said the balance in the P&L adjustment is nothing but error or omission from the last period. It will be obviously transfers to capital. Done. Next. Suspense account will be to offset transfers to the capital, because when you transferred your mistakes, the difference to the P&L, from P&L it went to capital, now cancel that effect. Done. So posting will be done accordingly. Post, the balance will be transferred to capital. I hope you got the clarity over this chapter. Thank you. This is your PS Charan Masterminds. Yes, sir. Moving into the next chapter, inventory, sir. Inventory. What is this inventory, sir? Yes. Yes, sir. What is this inventory? Only raw material and all is inventory? Work in progress is not inventory? Not. Oh. Sales is inventory? Okay. Finished goods? Okay, sir. Enough, I'll tell. Sir, there is one accounting standard known as AS2, sir. In that AS2 law, they defined what is inventory, sir. Right, sir. Inventories are the assets. What, sir? Inventories are the assets which are held for the purpose of, which are held for the purpose of, which are held for the purpose of sale in the ordinary course of business. Sale in what, sir? Ordinary course of business. Inventories are the assets which are held for the purpose of sale in the ordinary course of business, or which are in the form of production for such sale. Which are held for the purpose of sale in the ordinary course of business means they are talking about my finished goods, which are in the form of production for such sale. Which are in the form of production for such sale. That is work in progress. Third one. Yes, sir. Which are held as materials or consumables, which are to be consumed in the production process. Which are held as materials or consumables which are to be consumed in the production process. They are talking about raw material, which are in the form of materials or supplies, which are in the form of materials or supplies which are to be consumed in the production process. To be future though, you will consume this in your production process. Raw material, work in progress, finished good. This is your inventory. Very good, sir. Now, sir, I am a manufacturer, sir. Who I am? I am a trader, sir. If you are a trader, for you, what is the inventory, sir? You will have only finished goods as your inventory. No, sir, I am a manufacturer, sir. For me, raw material is a inventory, work in progress is a inventory, finished goods is a inventory. Now, In this chapter lo, I am supposed to compute the value of inventory. Compute the value of inventory. I am supposed to compute the value of inventory. Next, sir, now there are two accounting systems, sir. One is perpetual inventory system, one is periodic inventory system. What, sir? Perpetual inventory system, periodic inventory system, sir. In periodic inventory system lo, what I will do, every inflow and every outflow is not accounted. Every inflow, every outflow is not accounted. Every inflow and every outflow is not accounted in where? In periodic inventory system. Then what you will do in periodic inventory system, sir? At the end of the period, I will go and I physically count how many units were there. 10 units were there. The 10 units is my closing stock. 100 units are there. Physically I will count. 100 units are my closing stock. I will go and I will physically count. 1000 units are there. 1000 units is my closing stock. 1000 units is my inventory. When I am following periodic inventory system, the name itself it is indicating periodically I will go and I will count. Physically I will go and I will count. I am not maintaining any every inflow and every outflow. I am not accounting, sir. I am not recording every inflow and every outflow. Periodically I will go and count. That is my closing stock. Under which system? Periodic inventory system. Come to the next one. Perpetual inventory system. Under perpetual inventory system lo, every inflow is accounted. Every outflow is accounted. At any given point of time, I can know what is the number of units is there. I can know the value of closing stock at any given point of time. When I am following periodic inventory system, I don't know at any given point of time, sir. I need to go and I need to physically count what is the, how many units are there and what is the value of inventory. Sir, some theft took place, some loss is there. Now, in periodic inventory system, I can find in what way? For example, as per books, every inflow I am recording, every outflow I am recording. As per books, it should have 10 units. How many units? As per books, it should have 10 units. But physically, if I count, 8 units are there. How many units? Physically, when I counted, 8 units are there. Yes. Initially, as per my books of accounts, it would have how many units? 10. Now, I will take action and I will cross verify what happened to those 2 units. Theft taken place or any our employee only took those goods. What happened to the 2 units? Imagine I am following periodic inventory system. Under periodic inventory system, at a given point of time, I counted 8 units are there. That 8 units itself is my closing stock. That loss I cannot determine by in this system, periodic inventory system. Are you getting, sir? Yes, sir. This is perpetual inventory system. This is periodic inventory system. Every inflow of inventory, every outflow of inventory is accounted. I can know the value or how many units are there at any given point of time. Perpetual inventory system. No. Periodically, once in 3 months, once in 4 months, once in 6 months, once in a year, I am going and I am counting and I am knowing my closing stock information. That is periodic inventory system. Done. Next. For accounting purpose, you are having 2 methods. One is periodic, one is perpetual. So, perpetual is best. No doubt in that. Yes, sir. Sir, as per accounting standard 2, inventory should be valued at lower of cost or net realizable value, whichever is less. As per accounting standard 2, inventory should be valued at lower of cost or net realizable value, whichever is less. Okay, sir. Sir, cost of NRV comes to 1 lakh. How much? 1 lakh. Net realizable value comes to how much? 90,000. Now inventory should be valued at lower of, as per the prudence principle, conservatism principle. Yes, if it is the cost you incurred is 1 lakh, but futurely you will get only 90, futurely you will get loss, recognize now itself. You should value your inventory at what price? 90,000. Lower of cost or NRV, whichever is less. Now for 90,000, value your inventory. Are you getting, sir? Yes, sir. Next. Sir, the cost is 1 lakh. NRV is 1 lakh 10,000. How much is NRV, sir? 1 lakh 10,000. Now, value at what price? At 1 lakh. Cost or NRV, whichever is lower. Here, what is lower? Cost is lower. How much? 1 lakh. Value at that 1 lakh only. If you are having any gains, don't recognize now. Futurely, you will get loss. Recognize now itself. What is that? Prudence or conservatism principle. Done. Sir, to know my cost, what, sir? To know my cost, there are two methods, sir. One is historical cost method, non-historical cost method. Sir, if my actual cost is known, what? If my actual cost I can know, sir, then follow historical cost method to know your cost. Those historical cost lo, FIFO is there, LIFO is there, weighted average is there. Are you getting, sir, what I am talking? Simple average is there. No, sir, non-historical cost method. I am not in a position to know my actual cost. I don't know, sir. Then follow standard cost method or adjusted selling price method. Sir, for what nonsense you are talking? No. Inventory should be valued at lower of cost or net realizable value. Yes, sir. Imagine in the year low, I purchased 5 lakh units. How many units? 5 lakh units. First lot lo I purchased 1 lakh unit at a price of 19 rupees per unit. Second lot lo I purchased one more 1 lakh and each price of that unit is 21 rupees. Third lot lo once again I purchased 1 lakh, that is 22. Fourth lot lo once again I purchased 1 lakh units, it is at 18. Fifth lot lo once again I purchased, it is at 22. Now are you getting? I purchased 5 times. Each lot I purchased 1 lakh units. Total 5 times in the year I purchased 5 lakh units I purchased. Closing stock low 50,000 units were there. How many units are there? 50,000 units are there. Now tell me the cost of that 50,000. Cost of that 50,000 units. Whether you need to take 19, you need to take 20, 22, 21, which one you need to take? Cost formula, either FIFO or LIFO or weighted average, it is your accounting policy, right? Now, no sir, non-historical cost method. I don't know my actual cost, sir. Earlier I can know 19, 20, 22, 21, I can know my actual cost. But here I don't know my actual cost, how much I incurred. Now, standard cost method, adjusted selling price method. Generally, manufacturers will follow that standard cost method. Traders will follow that adjusted selling price method. Traders will follow adjusted selling price method, not required at this level. Are you getting? Next. Now, one more important aspect is, sir, inventory, apart from books law, how much is there? You need to go and you need to count physically what is the value of inventory. That physical count of inventory might not be taken as on 31st March. Sir, books of accounts, I need to close as on 31st March. I need to close as on 31st March. And I want to know the information of closing stock as on 31st March. Information of closing stock as on 31st March. But practically, it is not possible to count your stock as on 31st March 2024 because of practical impossibility. Matlab, sir, and the date of year ending date lo, I am very much interested in selling of these goods, but not sitting idly and counting 1, 2, 3, 4, 5, 6, how many units are there. Sir, why? First of all, why you need to count? Then only I can know what is my closing stock, sir. Why? First of all, why you required closing stock? If I know my closing stock, then I need to account this closing stock in my books of accounts. Closing stock is a asset. If I am not accounting this closing stock, this closing stock will be there in my purchases. Purchase expense will increase. Closing stock asset will decrease. You are incurring, you will show a loss in your books of account, which is not a loss. Don't do that. If you want your correct financial position, if you want to correct business results, calculate your closing stock correctly. And you want closing stock as on which date? Generally, it is on 31st March 2024. Now, what happens, sir? I can't sit and count immediately after 31st March 2024 or 31st March I can stop doing business and I can't do all these countings, sir. Now, for example, one customer care came and asking product. No, counting is going on, go, come after 2 days, like that I can tell on 31st March? No, sir. Then what you are supposed to do? Do business as usual. Counting will take on either first week or second week of which month? April month. Counting will take on first week or second week of April, a second Saturday, a Sunday, 2 days holidays, or Saturday night start, Sunday do this counting process, Monday onwards you can do your business, or when you are having festival and you are having 2 or 3 days continuous leave, or like that when you are having public holiday, I mean when you are having national holidays like any festivals, then stop for the 2 days, anyhow you will not have anything, then you will count. That counting process is known as stock taking. That counting process is known as stock taking. What, sir? Stock taking. Very good, sir. That counting process is known as stock taking. And on this date, the value of inventory comes to 1 lakh. How much? 1 lakh. But there are so many transactions took place in between these 2 dates. What are these 2 dates? From 31st March, in other words, from 1st April 24 to 10th April 24, in between these 10 days, there are so many transactions took place. Example, purchase took place. Just because your stock taking is not done, will you not purchase? I will purchase, sir. What is the relationship between stock taking and purchase? Business is a business, I need to purchase. Imagine I purchased worth 20,000. How much I purchased? 20,000. Next. I sold during this period 40,000. How much I sold? 40,000. This is only the basic transactions. Now I want the stock value as on this date. Why? As on that date I am preparing my financial statements as per periodicity concept for a period of 12 months. Right. Now you are having the stock as on which date? As on 10th April, 1 lakh. I want to convert this 1 lakh. I want to know what is the value of stock as on 31st March 2024. Sir, how to calculate? Simple, sir. This period lo you purchase, yes, this on 10th you are physically counting, and you are bringing this value. Physically you have counted 1, 2, 3, 4, 5, 6 counted and the value comes to 1 lakh. Now in this 1 lakh lo, this purchase is included? Yes, sir, included. How you know? Because that took place in the April month. Yes, in this 1 lakh lo, this 20,000 is included. Tell me one thing, as on 31st March 2024, do you have that purchase? No, sir. When that purchase took place? On April, so example, some middle of April 4th. When, sir? On April 4th, this purchase took place. Hence, what is this? In that 1 lakh, this 20 is included? Yes, sir, included. But as on 31st March, I have to include, it is not my year purchase. It is not my year purchase. I am not supposed to be included in the closing stock. This is the next year purchase. But This is included in 1 lakh. I want a value as on 31st March. Now I am taking that 1 lakh calculation, going back and telling as on 31st March what is the value. In this 1 lakh the 20 included, yes 20 included. Now what I am supposed to do? Reduce the 20 from where? From that 1 lakh. Why? In that 1 lakh this 20 is included. How you know? Stock taking is conducted on 10th April. This purchase is took place on 4th April. This purchase inventory will be there on that date. From that 1 lakh, less purchase made during this period. How much? 20,000. Next, sir, during this period you sold, how much you sold? 40,000. Example, rate of gross profit is 20% on sale. What is the rate of gross profit? The rate of gross profit comes to 20% on sale. Here it is sales, how much? 40 lakhs. If you apply gross profit on this ratio, gross profit ratio on this 48,000 is your GP ratio, then cost comes to how much? Cost comes to 32,000. Cost come to 32,000. What is this 32,000, sir? This 32,000 is nothing but this 32,000. Actually, when you want to sell means in this law, for example, this is taken on 6th April 2024 means it should have as on 31st March. Sir, if you are having this on 31st March, then only you can sell. Yes, sir, then only I can sell. When the sale took place? On 6th of April. If I want to sell these goods on 6th of April, first of all, these goods should be have on which date? On 31st March. Yes, sir. Don't always assume these units what you have sold is not from the purchased units. Is not from the purchased units. That is the you are supposed to be. If it is from purchased units, they will expressly tell the sales which includes the purchased units. If the question is silent, you don't question. You don't question the question, sir. Sold 4 lakhs they are telling means it may be from the recently purchased or from the last purchase. Always assume this is from the last paid purchase, not from recent purchase. Yes. If they are telling expressly, follow that expression. Now, 40,000 cost 32. If I want to sell these on 6th of April, on 31st March it should be there. Yes, sir. How much? 32,000. How much cost, sir? 32,000 is the cost. Then what you are supposed to do? Add or less? First of all, on that 1 lakh, this 32 is there or not there? Not there. Why not there? Already sold. On that physically counted 1 lakh, this 32,000 is not there. But if you want to sell these on 6th of April, it should be there on 31st March. I want my closing stock value as on 31st March. When, sir? I want my closing stock value as on 31st March. If I want my closing stock value as on 31st March, I am taking that 10th of April, what is the value? In that value, this 32 is not there, but in 31st March, this 32 is there. I am taking a base. As on which date base? On 10th of April base. Now add. How much you are supposed to add? 32,000. Sales is at profit price. Cost, matlab, that closing stock always should be considered at your cost, sir, not at profit level. 80 plus 32. 1,12,000. What is this 1,12,000? Value of your closing stock on which date? On 31st March 2024. Are you getting, sir? This is what your value of closing stock on 31st March 2024. Next. Sir, little bit extension of the same problem. Sir, in this case, what I felt, why to wait until March 31st and why to wait until April 10th? Why can't I conduct this stock taking In the month of February 15th or February 20th, there are 2 or 3 days holidays are there. Why to wait until April 10th? Start taking your stock taking as on which date? February 20th. This is which date? March 31st. Sir, this is 31st March 2024 and this is what, sir? February 20th. Okay. This period is there. In this period, you will have some transactions and the physical stock taking is done on which date? Is done on February 20th, which comes to how much? 1 lakh. As on this date, the stock comes to how much, sir? 1 lakh. During this period, you purchased how much? 10,000. During this period, you sold, sir, how much? 40,000. Rate of GP 20%. Are you getting? Yes, sir. During this period, I purchased how much? 10,000. When I conducted the stock taking, what is the value of stock? 1 lakh. I want the stock as on 31st March. This when I have counted, sir, on Feb 20th or March 20th, before the date only, before 1 month, before 10 days, before 15 days, either it may be March 20 or Feb 20, whatever it may be, right? Even March 20 or Feb 20, any date it may be. Are you getting? Yes. How much? 1 lakh. During this period, how much you purchased? 10,000. Next. This 10,000 is there or not? Yes, sir, this is there. In this 1 lakh, this is there? No, sir. Why? When I am taking the stock taking, this 1 lakh not even purchased. But when I am preparing my closing stock, this 10,000 is purchased? Yes, sir, purchased. This is 1 lakh plus purchase how much? 10,000. And during this period, how much you sold? 40,000. And what is the gross profit at the rate of 20%, which comes to 8,000. If you reduce that 8,000, what, sir? If you reduce that 8,000, the cost comes to how much? 32,000. This 32,000 value is there in this 1 lakh. During this period, you sold. This 32 is not there on 31st March. Hence, less. Are you getting? 1 lakh 10,000 less 32,000. How much? 88? 78? Yes, sir. 1 lakh 10,000 less 32,000. Are you getting? Are you getting or not? Just carefully write down this example. This is an earlier example. Completed earlier. This right now. Hmm, 78. This is what? Value of my closing stock. Show it as asset in your books. Pass one entry, closing stock account debit to purchases. Reduce this closing stock from the purchases. Show this as your asset. Completed? Next. Sir, two more special cases, sir. Sale of goods on approval or written basis. Sir, I am selling on March 15th or I am giving on March 15th and I am giving one option to them. I am giving 1 month time period. If you are not telling anything in this 1 month, I assume this as sale. If you want to return, please return in this 1 month. Please return these goods within that 1 month. When I gave this? On March 15. In between 31st March 24 is there, and they are having time up to April 15th or April 14th as the case may be. Right? Right. Now what happens, sir? In this, as on this date, if I consider it as sale, or actually I am supposed to be consider it as sale as on this date. But what happened in between financial year is ending, sir. Now this is a sale of this period, means this is a sale of 23-24, or this is a sale of 24-25. If they are not giving approval, if they are not giving approval in this year low, then it is not a sale in that year. Are you getting, sir? If you are getting approval in this year, then it is a sale in this year. If you are getting approval in this year, then it is a sale in this year. Matlab, if you are getting that approval before March 31st, then that is this period sale. If you are getting approval in the next year, means from 1st April to 14th of April, then that is a sale in the next period. Now my question is, how much value did I give? No, okay. This is March month. On 15th, I sent goods on sale or return basis 1 lakh. Right? How much? Worth 1 lakh means the sale price is 1 lakh and I sent on 15th March. And this is 31st March 24, and this is that 15 days, and this is 15th April 24. What happens, sir? Stock taking is done on 15th April. When, sir? Stock taking is done on, better take it done on 10th April. Stock taking is done on 10th April. Point number 1. I gave 1 lakh goods. Yes, sir, I gave 1 lakh goods. Stock taking when I have done? On 10th of April. Now, they are having option to return up to 15th of April. In this stock taking when I conducted, I am having 8 lakhs as what? 1, 2, 3, 4, 5, 6, 7, 8, 9 I counted. The value of inventory comes to 8 lakhs. How much? 8 lakhs. Now in that 8 lakhs low, this 1 lakh is there or not there? They are not there. Not there. Why? This is there with that customer. That is my inventory. Yes, sir, that is my inventory only. That is my inventory as on 31st March 24. Yes, sir, that is my inventory as on 31st March 24, as that approval is not given. Now, my inventory with the third party, add that 1 lakh. Assuming if there is no other transactions in between, now my inventory comes to 9 lakhs. Assuming there are no other transactions in between these two dates. Next case. Sir, entire 1 lakh returned as on March 31st. When returned, sir? March 31st. If entire 1 lakh is returned as on March 31st, when stock taking is conducted as on 10/4/24, in that 8 lakhs low, this 1 lakh also already included. Now you don't include once again. Next example. Sir, this is returned on April 7th. On which, sir? Returned on April 7th. Sir, when that stock taking is conducted, when? On April 10th, this 1 lakh is already included in this 8 lakhs. Now, don't include that 1 lakh in that 8 lakhs. Don't include this 1 lakh in that 8 lakhs. Right? Next. Sir, approval is given on March 31st. That is sale. First of all, this is my inventory with a third party. No, then don't think about this thing. No, sir. Approval given for 50,000 as on March 31st. Balance amount written on April 5th. Approval given for 50,000 as on March 31st. Balance written on April 7. When the balance is written as on April 7, that when April 10th stock taking is conducted, in that stock taking conducted 8 lakhs low, this 50,000 is also included. Now don't include now anything. Sir, 50% approval, sir. Balance, sir, is approved on April 12th. When, sir? Balance approved is on April 12th. When the stock taking is conducted as on April 10th, in that stock taking this 50 is there or not there? Not there. It is not even written, not there. But as on March 31st, it is my inventory with the third party. Yes, add 50,000. Are you getting? Don't confuse, sir. Nothing is there in this. Completed? Next. Sir, in one or two problems are there. In that problems, I will once again explain. Right? Done. Next, sir. Goods sent on consignment. Goods received on consignment. Goods sent on consignment. How much? 1 lakh. First of all, only consider the goods sent on consignment. 1 lakh I sent, sir. I am consignor and that other person is known as consignee. I sent goods. How much? 1 lakh. I am who, sir? Consignor. Send goods to whom? Consignee. Okay. Next. My books lo, consignor books lo, value one lakh stock is there. As on which date? 10th of April. Sir, consignee books lo how much inventory is there? Stock with the consignee how much? 1 lakh. My inventory with the consignee. Now add that 1 lakh also. Total 2 lakhs is my closing stock. Are you getting, sir? Yes, sir. Now, goods received on consignment. Sir, I received goods on consignment 50,000. This time I am the consignee. Who I am? Consignee. Consignee is doing business. Under his own capacity is doing some business. For that the closing stock comes to 15 lakhs. How much? 15 lakhs. Consignee counted 1, 2, 3, 4, 5, 6. Came to 15 lakhs. In that 15 lakhs low, consignee stock 1 lakh is included. Consignor stock 1 lakh is included in that 15 lakhs low. That is not my stock. Less that 1 lakh. You will get what? 14 lakhs. That is your own inventory. Are you getting? Sir, goods sent on consignment. I send certain goods to my consignee. Now that I sent, forget about how much I sent. The balance left in the consignee low, consignee go down low comes to how much? Some 1 lakh. Now my closing stock I counted. But that stock what is there in the consignee go down is also my stock. Add that stock in my books. Sir, consignee, this time I am the consignee. I received some goods of the consignor. When I am counted, this consignee stock also included. This consignor stock is also included. Consignee books, if I counted, consignor stock also included physically. Now less, that's consignor stock. That's it. Are you getting? Sir, once a small example, just carefully observe. stock taking is conducted. Value of inventory comes to 18 lakhs. This is consignor. Consignor books lo, as on the date of stock taking, value of inventory comes to 18 lakhs. Now, I want to know my value of inventory. I sent certain portion of goods to consignee to sell. In the consignee godown lo, there is a worth of 2 lakhs goods, my goods, in the consignee godown lo. How much? 2 lakhs. Now, add my inventory with the consignee, add 2 lakhs. In your books lo, show this 20 lakhs as your closing stock. Consignor. Come to consignee. Sir, I am also doing business. I am also having some inventory. Along with that, consignee inventory is also there in my books. Why? Because I received on some consignment basis. My inventory 1, 2, 3, 4. It is comes to how much? 18 lakhs. In this 18 lakhs lo, consignor inventory also include how much? 2 lakhs. If I want to know my inventory alone, less, because that is not my inventory. 16 lakhs in the books of consignee, value of closing stock. Right? I hope you got the clarity. Shall I move to the problems? One more concept is there. Value of closing stock. Physical value of closing stock. Value of closing stock. Physical value of closing stock. Sir, value of closing stock lo, even though the inventory is not with me, example, goods sent on consignment, or goods sold or sale or upload written basis, or goods sold but delivery is not made, goods sold but delivery is not made, or purchases is made, I purchased these goods but delivery is not taken, physical delivery is not taken. So there are two elements, one is value of closing stock, physical value of closing stock. When they are asking you to find out value of closing stock, means that is enough if you are the owner of those goods, irrespective whether those are physically there or not. They are asking value of closing stock. If they are asking value of closing stock, means you are supposed to find if you are the owner, the property is with you, the possession, in respect of possession, if you are the owner of these goods, whether it is there with whom? Consignee, or it is there with the third party as on sale of goods on return basis, or even it is there with this guy who is seller, so far I not even take the custody. Still you are supposed to be show as your closing stock, value of closing stock. Sir, if they are asking value of closing stock means what, sir? Value of closing stock means if you are owner, maybe those goods are with you or not, if you are the owner of these goods, consider it in your value. Example, 1 lakh goods sold sent on sale or return basis to the third party. You are the owner, is those goods are there with you as on 31st March? No, but you are the owner, consider in your closing stock. Goods sent on consignment. These goods are with the consignee. How much? 2 lakhs. You are the owner? Yes, I am the owner. These goods are with you? No, but you are the owner? Yes, consider in your value of closing stock. Sir, I purchased the goods, but in my godown there is no space. What I ask what my sales so said to my creditor or supplier, hey supplier, why can't you keep those with you for 1 week? After 1 week I will tell, please come and deliver me. Okay sir, no issues. You purchased? Yes sir, I purchased. You are the owner? Yes sir, I am the owner. The possession is with you? No sir, that possession is not with me. Still you take in your value of closing stock. But in your problem lo they are asking physical value of closing stock. What? Physical value of closing stock. Ownership, there is never the criteria. In your premises law, if it is there, yes sir, it is there as on 31st March, whether you might be the owner or you might not be the owner, but it is there as on 31st March, yes sir, take it in the inventory. Next, I am the owner but not there in my premises, shall I consider? No, no, no. Example, goods sold or approval written basis, this 1 lakh is there with the third party, I am the owner, physical it is not there, then don't take in your physical value of closing stock. Goods sent on consignment, I sent these 2 lakhs on a consignment basis, this is there with the consignee, my inventory, physically not there. If they are asking physical value of closing stock, don't add this 2 lakhs in your closing stock. Why? Physically not there. What is physically there? That is only tell. Maybe you are the owner, physically not there, with other parties it is there, don't show your physical value of inventory. Physically it is there, you are not the owner, but showing your physical value of closing stock. Are you getting, sir? When that physical value of closing stock, if they are asking, means you are the owner, yes, the stock is there with you, no, don't take here. They are asking value of the closing stock, you are the owner, yes, stock is there with you, no, the stock is there, my supplier go down, no, stock is there, add here because you are the owner. No, it is there with the third party, take here. It is there with the consignee, still consider here because you are the owner when they are asking value of closing stock. No sir, they are not asking value of closing stock, they are asking physical value of closing stock. Whether you are owner or not is the second half of the story. Those goods are there in your godown as on the stock taking, yes, then consider in your physical value of closing stock. So very much care should be taken whether it is value of closing stock or physical value of closing stock. Right? Right. Now come to the problems, sir. First come to the 7th problem. This is in relation to rectification. In relation to rectification, come to the 7. Come to problem number 7, sir. Yeah. What is this, sir? The profit and loss account of Hanuman showed a net profit of 6 lakhs. They are showing a net profit of 6 lakhs after considering the closing stock of rupees how much? 3 lakh 75. Closing stock how much, sir? 3 lakh 75. As on which date? On 31st March 2020. On 31st March 2020, the closing stock comes to how much, sir? 3 lakh 75, and Hanuman showed a net profit of how much? 6 lakhs. Next. Subsequently, the following information was obtained from security of books. Subsequently, the following information was obtained from security of books, scrutiny of books. Yes, sir. First one. Purchase for the year included how much, sir? 15,000. Paid for what? New electric fittings for shop. Very good. Sir, what happened, sir? They have given you the profit and loss account of Hanuman showed a net profit of 6 lakhs. They are telling the Hanuman have shown a profit of 6 lakhs after considering closing stock of 3 lakh 75 as on 31st March 2020. Subsequently, what happened? Subsequently, when you have scrutinizing the books, you have find these following things. Subsequent means in the next period means once the P&L is prepared, balance sheet is prepared. Subsequently, once preparation of balance sheet is done, you have find. Means if you are rectifying this, means it comes to stage 1 or 2 or 3. Stage 3. Stage 1 before trial balance. Stage 2 after trial balance, before balance sheet. Stage 3 after balance sheet. This is after balance sheet. Hence it is what? Stage 3. purchases for the year include, purchases for the year included 15,000 paid for new electrical fittings for the shop. What should be the entry? Electric fittings account debit to cash. But what you wrote? Purchases account debit to cash. Unnecessarily you debited purchase, now credit the purchase. Debit shall be given to whom? Electric fittings. Entry. Electric fittings account debit to purchases. But it is stage 3. Nominal accounts you have to replace with P&L adjustment. Now what should be the posting, sir? Yes, sir. Electric fittings is asset. Yes, sir, it is asset. It is not a nominal account. It is the asset. Entry. Electric fittings account to debit to P&L adjustment. Entry, sir. Electric fittings account to debit to P&L adjustment account. Electric fittings account debit to P&L adjustment account. What they are asking, sir? The requirement. Calculate the value of stock as on 31st March and adjusted net profit. Adjusted net profit will be known in which account, sir? P&L adjustment account lo you will find what is the adjusted net profit. Means after rectification of these mistakes. Prepare one P&L adjustment account. P&L adjustment account will be prepared when you are having any mistakes. What, sir? P&L adjustment account will be prepared when you have any mistakes. That mistakes is there in where? In the previous period low. If you are having any mistakes, now prepare P&L adjustment account for what purpose? To know the correct profit or net profit. Next one, entry, sir. Electric fittings account debit to P&L adjustment account. Debit your asset, credit your purchase, in place of purchase, replace with P&L adjustment. Next. Now open P&L adjustment. P&L adjustment account. Now already some profit is there in P&L account. Bring that profit to here. By either write P&L or you can also write by net profit. You can also write by P&L. How much they had given? 6 lakhs. 6 lakhs. What is the first entry? Electric fittings account debit to P&L adjustment by yes, sir. By electric fittings, how much? 15,000. Right? You write full, sir. Next one. Hanuman gave away goods valued how much? 40,000 as free samples for which no entry was made in the books of accounts. What is the entry, sir? Free samples account debit to purchase account. Sales promotion account debit to purchase account. Yes, sir. Both are nominal account. P&L adjustment account debit to P&L adjustment. Even though if you are not writing, it will not have any impact in your answer. But please post that you know. Entry, sir. Free samples account debit to purchases. Right. Buy free samples. How much? 40,000. 2 free samples. How much? 40,000. Next. Sir, invoice for goods amounting to how much? 2,50,000 has been entered on 27th March 2020, but the goods were not included in the stock. Sir, invoice for the goods amounting to 2,50,000. So, if you received these goods, invoice for goods amounting to 2,50,000, you received invoice for goods amounting to 2,50,000, entry purchases account debit to creditor or purchases account debit to cash. When you entered on 27th March, invoices for goods amounting to rupees 2,50,000 had been entered on 27 March 2020, but the goods were not included in stock. If the goods are not included in stock, means that goods were not received. If it is not received, obviously when physical counting is done, these goods are not included. Now you are supposed to include. What is the entry, sir? Stock account to debit. Because you need to increase your stock. Already these were recorded. Yes, sir, recorded. Stock account debit to purchases account. But as you are rectifying at stage 3, entry stock account debit to P&L adjustment. Entry, sir, stock account to debit to P&L adjustment by stock. Bracket lo what, sir? Value of finished goods, value of goods which is not received. Goods not received. How much? 2,50,000. Sir, what nonsense you are doing? No, sir. I included in my purchases, entry purchase to cash or creditor, done. But that should be included in where? In my closing stock. Why? Because that is not sold. But it is not even taken in your closing stock. If it is not even taken in your closing stock, it is included in your purchases. Your purchase is high now. Your expense is high now. Now you pass one entry. What is that entry? Unnecessarily this is included in purchases. Closing stock this is not accounted. Now you account in your closing stock asset account debit. You increase your purchase, now decrease your purchase, closing stock account debit to purchase. But this is at stage 3, closing stock account debit to P&L adjustment account. In your P&L adjustment low, buy stock how much? 2,50,000. And in the problem they are asking your closing stock also, right? Now for 3,75,000 add this 2,50,000. For 3,75,000 add this 2,50,000. 6,25,000. Yes, 6,25,000. Next. Come to the next point. In March 2020, goods of rupees 2 lakhs was sold and delivered were taken in the sales of okay. In March 2020, goods of rupees 2 lakhs sold and delivered were taken in sales of April. When you sold, I sold in the last month. What is that month? In the month of March. But in which month are you taken in the sales? April month. Last period lo, I wrote the entry. What is that entry? So far I didn't write any entry in the last year. Current period lo I wrote what is the entry? Current period lo I already wrote this entry, right? Right. First current period lo I need to cancel this entry. Stage 1 rectification, this is for the year 2020-21, it is a stage 1 rectification entry. Sales account to debit to debtor account. How much? 2 lakhs. Next, and this is sales of which period? Last period. So what you are supposed to write in the last period? You are supposed to write this entry in the last period. Pass the entry now. What is the entry? Debtor account debit to P&L adjustment account. How much? 2 lakhs, 2 lakhs, 2 lakhs, 2 lakhs. Are you getting, sir? Sir, cancellation of the current period. Pass this entry. Unnecessarily you record debtor account debit to sales in the current period, and this is the stage 1 rectification for the current period. Not even trail balance is prepaid. Reverse that. Current period done. Last period a sale is made. You failed to record that sale. Error of omission. Stage 3 in the next period record debtor to sales. In place of sales use P&L adjustment. Cancel, cancel. Now the entry. Sales account debit to P&L adjustment account. How much? 2 lakhs, 2 lakhs. Come to the P&L adjustment lo, write by sales. How much? 2 lakhs. Right? By sales 2 lakhs. Next. Next one. Sir, up to here any doubt, sir? Yes, sir. So value of stock so far is how much? 6 lakh 25. Next. Goods costing 75,000 were sent on sale or return in which? In March. Yes, sir. Goods costing how much, sir? 75,000 were sent on sale or return basis. Yes, sir. Goods costing 75,000 were sent on sale or return in which? In March 2020. Yes, sir. Goods costing 75,000 were sent on sale or return basis in March 20 at a profit of 1/3 on cost. Cost is 75 on 1/3. 75 divided by 3, 25,000. Now sales is 1 lakh. That sale price is 1 lakh. Cost is 75. Goods costing 75 were sent on sale or return in March at a margin of 1/3 on cost. Very good, sir. Next. Though approval was given in April 2020. When the approval came? April 2020 approval came. These were taken as sales for the March 2020. Ayyo. Sir, earlier point lo, sales made in the last period you failed to take as sales. In the next month April you consider that as sale. This time this is actual sales in the April. Next year lo this is sales, but for the current period only you consider in the sales. Last period lo you wrote one entry. What is that entry you wrote? Debtor account debit to sales account. How much? 1 lakh. This entry is already passed in the last period, but this is the sales of the current period. Now come to the current period. First, what you are supposed to do? Cancel that mistake what you have done in the last period. What is the entry to cancel that mistake? Reverse sales, but use which account? P&L adjustment account, and cancel your debtor. Unnecessarily you debited your debtor in the last period, now cancel your debtor. Unnecessarily you increase your sales, now debit that, but as it is stage 3, use P&L adjustment account debit to debtor account. How much? 1 lakh, 1 lakh. Come to the next one. Recognize the sales in the current period. So what is the actual sales entry? Entry. Debtor account debit to sales account. How much? 1 lakh 1 lakh. Done? Yes, sir. Done. Come to the third entry. Last period lo you recognize the closing stock. You are supposed to recognize the closing stock of the last period. What is the entry? Stock with customers account debit to purchases. You are supposed to reduce the purchases entry. Stock account to debit. And it is stage 3, use P&L adjustment. How much? 75,000. 75,000. Now cancel the debtor. You will have what? P&L adjustment account debit to sales. How much? 1 lakh. Come. P&L adjustment account debit to sales. How much? 1 lakh. Now next one. Stock account debit to P&L adjustment. This you have to write at cost. Cost figures you are supposed to write this. Cost you have to write. By stock. How much? 75,000. Now total this. Total your P&L adjustment. And tell how much is the profit. Consider this net profit. Yes. Done. 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 You can check your answer. Done. And this is also done. 10 lakhs 40 is the balance. This is adjusted net profit. To adjusted net profit. Yes. Yes, sir. Completed. And what is the one more requirement? Value of stock. Value of stock comes to how much? They said 3,75,000. 3,75,000 plus 2,50,000, which is not included in your stock. Now include in your stock, plus stock with the customers. How much? 75,000 is there. Sale of goods or approval return basis 75. Everyone, why this 75 you consider, sir? My inventory as on 31st March, there with the third party. My inventory as on 31st March, there with the third party. As on 31st March, it is a closing stock. How much? 75,000. Total how much? 7 lakhs. Done. Any doubt? Please ask me in this problem. Yes, sir. Come to the next one. CRD 4. What is the CRD 4, sir? Yeah. A trader prepared his accounts on 31st March each year. Okay. Due to some unavoidable reasons, no stock taking would be possible till 15th April 2020. Yes, sir. Stock taking is conducted on which date? 15th April 2020. On which date? On which date the total cost of goods in his godown come to 50,000. Goods. The value of the goods on the godown, how much, sir? 50,000. On which date? 15th April. But I want as on 31st March 2020. I want as on 31st March 2020. Yes, sir. I want as on 31st March 2020 and you are having the value as on 15th April, right? The following facts were established between 31st March to 15th April. The following facts were established between 31st March and 15th April. First one, sales how much, sir? 41,000 including cash sales. Means what they are telling? Yes, sir. Now, this is on which date? 15th April. On this date, stock taking is conducted and value how much, sir? 50,000 if I am not wrong. Yes, 50,000. I want stock as on which date? As on 31st March. I want as on 31st March and they are giving as on 15th April 2020. Now the value comes to how much, sir? 50,000. Right, sir. Now, sir, in this period low, the following transactions were took place. First one, sales 41,000 including cash sales, whether that is cash sales or credit sales, so I don't want to bother, sir. Sales is sales only. Next, purchases how much, sir? 5034. Okay, including cash purchase, I don't want to bother. It is I want purchase means purchase only. Next one, sales returns how much? 1000. Net sales during this period how much? 41 minus 1000, 40. Net sales during from 31st March 24 to 15th April 24, net sales comes to how much, sir? 41 minus 1000, 40,000. Right? Right, sir. Now what you are supposed to do with this 40,000? Sir, if you are selling means it should be there on this date, but it is not there on this date, but this is at cost terms, I mean this is at profit terms. I want to have this figure in terms of cost because the sales is in 40,000 at profit terms. I want to convert these terms into cost. This profit term converts into cost and bring these to here cost. Are you getting, sir? Right? Right. Now, what is the rate of gross profit on sale? The rate of gross profit on sale comes to how much, sir? 20% is the rate of gross profit on sale. Now, 20% if you apply on this 40, you will get 8,000. Now, 32,000 is what? Cost. Now, if you are selling on this date means that item of inventory should be there as on 31st March, but it is not there on 15th April, add how much? 32,000. Add this 32,000 to this 50,000. Are you getting, sir? Why? That is not there in that 50. Why? How you know? That is sale. Sale is done. As on 15th, that is not there. But as on 31st March, it is there. Yes, sir, it is there. Now, I am taking that base 50 to that base 50, add this 32. If no other information is there, then 82,000 is your value of closing stock. Add this 32, this 50. 50 value of stock as on 31st, as on 15 April 2020, add cost of sales during 1st April 2020 to 15th April 2020. How much? 32,000. Sales are cost of sales. Cost of sales, sir. I need to calculate my closing stock at cost terms. I don't want to take it profit. Prudence principle, conservatism principle. You have to take your only cost. Next. Next, what happened? Purchases, how much, sir? 5034. How much? 5034. What is this 5034? This is purchases. When you have made these purchases, I have made these purchases during the following fact were established between 31st March to 15th April. This is the fact in between this time period. Purchase how much, sir? 5034. Purchase 5034. How much, sir? 5034 is what, sir? Is your purchase. Sir, that 5034 is included here. Now, less purchase taking place in this period. How much? 5034 less 5034. Are you getting, sir? Next. Sir, on 15th March, goods of sale value how much? 10,000 were sent on sale or return basis to a customer. Yes, sir, were sent on a sale or return basis to a customer of the period of approval being for 4 weeks. Yes, sir. On 15th March, goods of the sale value of 10,000 were sent on sale or return basis to a customer. The period of approval being 4 weeks. He returned 40% of goods on 10th April, approving the rest on 16th. Very good, sir. On 15th March, here, somewhere here, 15th March, sale value of goods is 10,000, is sent on sale or return basis. Tell me what is the gross profit on this? 10,000 into 20%. Cost comes to how much? 2,000 is the gross profit. Cost comes to how much? 8,000 is the cost. 10,000 less the 2,000, then you will get what? 8,000. What is this 8,000? This 8,000 is the cost. Next. 40% of 8,000 comes to how much? I think 40 only, right? Yes, sir, 40 only. So, what happened to that 40? 40% of the goods he returned. 40% of the goods on 10th April. 40 comes to how much, sir? 32. 3,200 returned on 10th April. Means when stock taking is conducted on 15th April, this 3,200 is included in this 50. This 3,200 is included in this 50,000. Actually, this is my stock. Yes, sir, my stock. This is there as on 31st March. Yes, sir, this is my stock there as on 31st March with the third party. I need to consider in my inventory, and It is already there as on 10th April, means as on 15th April when I counted also, that will be there. Now you don't do anything. Now balance amount how much, sir? 4,800. This is a sale as on 16th April. This is sale on 16th April. This is not a sale as on 31st March. My inventory as on 31st March is there with the third party, and this is not even returned, means in this 50,000 also that amount is 4,800 is not there. In this 50 lo 4,800 is not there. My inventory with the third party as on 31st March it is there 4,800. Add. How much, sir? 4,800. Add or less? Add. Right? Right. Sir, why you didn't consider 3,200? Already there. He returned as on 10th April. When you are counting, that is there as on 10th April. Already there in this 50. Now don't do anything. Why you consider only 4,800? It is not even written. If it is not even written, means as on 15th April it is not there physically. In the counting also not there. But my inventory as on 31st March, I am the owner. There with the third party. Consider that 4,800. It is a sale on 16th April. He approved on 16th April. But as on 31st March, my inventory. Hence, consider it. Next one. A trader had also received goods costing how much, sir? 8,000. A trader, our trader, had also received goods costing 8,000 in March for sale on consignment basis. So 8,000 worth of goods I received in the month of March. 20% of the goods has sold as on 31st March. Means 1,600 is sold as on 31st March. And another 50% by April 15th. By another 50% means how much? 4,000. Total 5,600 is sold. When that stock taking is conducted, these sales were not included in the above sales. Yes, sir. This 1,600 and this 4,000 is not included in the above sales. If it is included, then I am also separate. This sale is not my sale. This sale is not my sale. I am not supposed to be consider this. They are also telling you are not considered. Okay, fine. I am not supposed to do anything. These sales were not included in above sales. Right? Right. Now 8,000 is the value of goods less 4,000 less 1,600 and the balance left how much? 2,400. What, sir? 2,400. What is this 2,400? Inventory in my godown belonging to whom? Our consignor. The trader had also received goods costing how much? Trader had also received goods costing 8,000 in March for sale on consignment basis. 20% of the goods has sold as on 31st March, fine, and another 50% is sold by the April 15, means leftover portion is how much? 30%, which comes to how much? 2,400. These were not included in above sales. Obviously, this should not be included and they shall not include. This 2,400 when I physically counted, that is there in that 50,000, right? But is this 2,400 is my inventory? It is not my inventory. It is not a my inventory. Then what you are supposed to do? Less. How much? 2,400. Then how much is your answer? 50,000 add 32. How much? 50 plus 32 comes to how much? 82. 82. For that 82. For that 82 less 5034 add 4,800 50 less completed. Make it fast. What you want to show? This one you want to show? Yes, this is there in the answer. This is the answer booklet. It is there, no? This one you are asking. Completed? Yes, sir. Make it fast. Yes, sir. What is the name of it? Value of closing stock. Value of closing stock on which date? 31st March 2020. 79,366. Yes, same thing is there. You can also verify. 50. They have considered 32. I have shown how it is 32. Next, 4,800. I have shown that 4,800. These two less. Total add and total less. Your answer is 79,366. Are you getting? They have taken first what are to be added and what are to be reduced. We have to show what to be added and what to be reduced, like how you are supposed to do in your BRS, right? What to be added, what to be reduced. Done? Done. Come to the next problem. What, sir? What you want to show, sir? This diagram, make it fast, sir. Make it fast, make it fast, make it fast. Completed? Come to the next one. Next one. Come to CRT 5. Sir, the requirement of the question is ascertain the value of physical stock. Sir, I mean that fourth one lo they are asking value of stock. If I am the owner, that is sufficient, irrespective of whether those inventory is there with me or with the third party. It is no more a concern, sir. If I am the owner, just consider in the value of closing stock. If they are asking physical inventory, what, sir? Physical inventory. Then whether you are owner or not the owner is the second half of the story. That physically it should be there with you. You are the owner, physically not there with you, then don't take. I want only physical inventory. Example, sir. X, who was closing his books on which date? 31st March 2020. Failed to take actual inventory which he did on 9th April. Okay, sir. When it was ascertained by him worth 2,50,000. What they are telling, sir? X, who was closing his books on X, who was closing his books on 31st March 2020, failed to take the actual inventory which he did on 9th April when it was ascertained by him it to be worth 2,50,000. Yes, sir. It was found that sales word enter in the sales due book. Yes, sir. Obviously, sales will be entered in the sales day book on the same day of dispatch, and the written inward in the returns book as and when returns were received back. As and when goods are dispatched, entered in the sales book. If any returns were, any goods were received back, written in the, and the day you received, written in your, record in your returns book. Done, sir. Purchases were entered in purchase day book once the invoice were received. Purchases were entered in the purchase day book once the invoice were received. It was found that. Yes, sir. Purchases were entered in where, sir? Purchase day book. Once the invoice are received. Okay, sir. Once the invoice are received, it will be entered in the purchase day book. Okay, super. Sir, what so far he said? April 9th na stock taking is done. Okay. Sales are recorded when the goods are dispatched. Sales returns are accounted when the goods are received. Next, purchases are accounted when the invoice is received. When the invoice is received, purchases were accounted. That's what they said. Next, yes, correct, correct. Done. Yes, correct only, sir. Yeah, next one, sir. Now, sales between 31st March 2020 and April 9th as per sales day book 17,200. Draw that map timeline. Done. Sir, this is as on 31st March. 31st March 2020 in the problem. Yes. And this is 9th April. This is 9th April 2020. On this date, the value of inventory was 2,50,000. On this date, the value of inventory is 2,50,000. Next, in this time period, sales between 31st March 2020 and 9th April as per sales day book 17,200. If I want to make sales, what? If I want to make sales, it should be there as on this date. Yes, sir. Now, for that 2,50,000, add what you are supposed to add? Cost of sales. How much? 17,200 is what, sir? Is sale value. What is the cost of that? The rate of gross profit is 1/3 on cost. If it is 33.33, we will call it as 1/3 on cost. If it is 1/3 on cost means 1/4 on sale. 17,200 divided by 4 comes to how much? 4,300. What is this 4,300? This is my profit. Then cost comes to how much? 12,900. Sir, 12,900 is what, sir? Is my cost of sales. How much cost of sales? 12,900. Are you getting? Sir, what nonsense you are talking? No, sir. I made during the sale period how much? 17,200. That is a cost terms or sales terms? Sales terms. I want what is the cost terms? Why? Closing stock should be always valued on cost. Now, 17,200 is sales. The sales is nothing but 1/3 on cost means 1/4 on sale. If it is 1/4 on sale means 17,200 divided into 1/4. Are you getting? Now 4,300 is what? Is your profit. If you reduce that 4,300, you will get what? 12,900. That is what? Your cost of sales. Means that cost of sales is there as on this 31st March. Add that 12,900. Done? Done. Next one. Purchases during the same period as per purchase day book is 1,200. How much you purchase in between this 1st of April to 9th of April? 1,200. But out of the above purchase, goods amounting to 500 were not received until inventory taking was taken. Means this 500 is not included in this 2,50,000. This 500 is there or not there? This 500 is not there. Not there in where? In the 2,50,000 this 500 is not there. How you know? In that physical count is there. This 500 is not even received. Then how can I take the 2,50,000? Everyone. Now what is included? Only 700 is included in that 2,50,000. Add a less. Less. Why I am supposed to less? Because that in the 2,50,000 low 700 is there. That is the purchases. Purchases during that period. How much? 500 less. Not 500, 700 I am supposed to less. $700 less. Why sir 700 I am supposed to reduce? Because this 700 is included in this 2,50,000. Sir 500 not included or not included. How you know? That is not even received. Then how it will be included? That is not even received. Come to the next one. Goods invoiced during the month of March 2020, but goods received only on 4th April amounting to 1,000. Sir, when you received? 4th April I received. Goods invoiced during the month of March. This is purchased in the month of March. Invoiced in the month of March. But goods were received on which date, sir? On 4th April received, sir. Very good. Sir, I received these goods on which date? On 4th April. Now in the 2,50,000 low, this 1,000 is there? Yes sir, there, physically counted. But as on 31st March, physically it is not there or not there? Physically it is not there as on 31st March. If you are calculating value of inventory, consider this 1 lakh as your closing stock. You are calculating physical value of inventory, don't consider, because this 1,000 is not there as on 31st March, it is there as on 4th April. Physically as on 31st March it is there with you? No sir, hence don't consider. When you are calculating value of inventory, physically it is not there, but I am the owner from March onwards, now consider in your value of inventory. If you are calculating physically, this is there as on 31st March, not there, then don't include in your physical value of closing stock. Now what is the value that 2,50,000? In the 2,50,000 low, as it is received on 4th April, on 4th April you included this 1,000. This 1,000 is included in the 2,50,000, but as on 31st March it is not there physically with me. I am calculating physical inventory less. Less what? Less 1,000. Invoiced but not received. How much? 1,000. This is what? Add cost of sales. If I want to sell means it should be there. Yes, that is there. Next. Sir, free samples for business promotion issued during 1st April to 8th April. How much, sir? 8,000. Yes. Sir, free samples for business promotion issued on which date? 1st April to 8th April amounting to how much? 8,000. Means in this period low, I gave free samples. How much? 8,000. If I want to give in this 8,000 in this period low, it should be there on this date. Yes, sir. Now I am taking my value as a base as on this date. In this 2,50,000 low, this 8,000 is there or not there? Not there. Why it is not there? Issued as free samples. When I am counting my physically my inventory in the 2,50,000 low, this 8,000 is not there. If this 8,000 is not there, what I am supposed to do? It is there as on 31st March physical with me? Yes, now we add. Why you are adding? In the 2,50,000 low, this 8 is not there. How you know this 8,000 is not there? When I counted, this 8,000 is not there because I gave as free samples in this period. How much? Add free samples. How much? 8,000. 2,50,000 add 12,900 less add 12,900 less 700 less 1,000 add 8,000 2,69,200. Sir, are you getting why I added this? Because that is there as on 31st March, but not there in 2,50,000. I am taking the 2,50,000 as a base for the calculation of closing physical value of stock as on 31st March. Why I reduced this 1,000? Because received on April 4th as on 31st March physically not there with me. Why I reduced this 700? Because total value of purchases in that time period of 1,200, 500 is not received, only 700 is received, 700 is only there in the physical stock. This is cost of sales. If I want to sell, it should be there with me. So just to add items you have to write at one place. Let's say how to write it another place, then you will get the answer. Just go through the answer. Yes. Yes, sir. I shown as a working note. If you want, you can write here. Else show it as a working note and directly remove this 12,000. Then yes, add. Then less 700, less this 1,000. You will get 2,69,200. Add and less neatly you need to present. Give lines. Okay, here it is. Add less, add less. Yes. Then first leave some space to add, leave some space to less. Add items, add at one place. Let less items, remove all this at one place. Give working notes if you want, like this cost of sales, all this stuff. Completed. What you want to show? Okay, sir. Copy, sir. Make it fast. Completed. Yes. Shall I move to the next problem? First, sir. Yeah. Small problem, easy problem, sir. Important for the exam. All these three matlab. So far I said 4, right? This is the 4th one. First 3 plus this 4. These 4 models are very much important in the exam. Come to this model. Similar to just what we have covered, but only thing some sales adjustment is there. Rest everything is same. Yes, sir. Physical verification of the stock in the business was done on 23rd June. Sir, if they are asking physical inventory, you have to start physical inventory. They are asking only value of here, determining the value of stock. What they are asking, sir? Value of stock. They are not asking physical inventory. They are asking value of stock. Okay. And physical inventory as on which date? 23rd June. Which comes to how much? 48 lakhs. The following transactions took place from 23rd June to 30th June. 30th June 2020, 23rd June. Yes, sir. Stock taking is conducted on this date. 48 lakhs. I want the stock as on this date. During the period, some transactions were taking place. If purchase is there, I am supposed to add because I want to stock as on 30 and this is as on 23rd. It is not there, but 30 it should be there. In between, if I purchased, then I should add. If I sold, then less. Why less? Here it is there in that 48 lakhs low. If I sold in this between time period as on 30th June, it is not there. Are you getting, sir? Yes. Now, value of stock as on which date? 23rd June, 48 lakhs. Next. Out of the goods sent on consignment, goods at cost worth 2,40,000 were unsold. Out of goods sent on consignment, I am sending goods on consignment. That I sent goods on consignment. Goods at cost worth 2,50,000 were unsold. My goods with different parties which I sold, which is unsold. How much? 2,40,000. My inventory? Yes, sir, my inventory. When I counted as on 23rd, is this 2,40,000 is included there? No, sir, because it is not there with me. If I counted also, it will not be there with me, but it is there with the third parties. My inventory, I should add. Why add? It is not there with me. My inventory, I am the owner. How much? 2,40,000? Yes. Add. During that period, I came to know my inventory there with the third party consignees total 2,40,000. Out of goods sent and consignment, goods. Out of goods sent and consignment, goods at cost worth 2,40,000 were unsold. Done. Purchase of rupees 4 lakh were made out of which goods worth 1,60,000 were delivered on 5th July 2020. Sir, purchases of how much, sir? 4 lakhs were made out of which goods worth 1,60,000 were delivered on 5th July. Sir, during this period low, how much I made purchase? 4 lakhs. Out of which 1,60,000 were delivered on which date? 5th July. But on 30th, my inventory only. Yes, I purchased. Yes, sir, I purchased. They are not asking physical inventory. If they are asking physical inventory, don't consider this 1,60,000. They are asking only value of inventory. Entire 4 lakhs is my purchases only, right? Even though it might not be there with you, but I am the owner. Entire 4 lakhs you are supposed to be add. I purchased during this period low 4 lakhs. How much? 4 lakhs during this period low. But how much I received? I received 2,40,000. 1,60,000 is received in the next period. Now, in that 48 lakhs physically I counted low, 2,40,000 is there, but 1,60,000 is not there. Why it is not received? I am the owner. Yes. In my value it should be included. Yes. Include entire 4 lakhs. 2,60,000, 2,60,000 plus 1,40,000. Two lakh 60 plus 1,40,000. 4 lakhs. Next. Sales were 13,60,000 during that period లో. During that period లో sales how much sir? 13 lakh 13,60,000. 13,60,000. Next, in that 13,60,000 లో includes goods worth how much? 3,20,000 sent on approval. In that 13,60,000 లో 3,20,000 goods sent on approval. $3,20,000 sent on approval. And half of these goods returned before 30th June. Half of means 1,60,000 received before 30. Very good. But no information was available regarding. Ante balance matlab the balance goods what is there, that 1,60,000, for that there is no information available, means that is not approved. Are you getting sir? That is not approved. Next. Goods were sold at a cost plus 25%. Goods are sold at a cost plus 25%. Okay. Goods were sold at a cost plus 25%. However, goods costing 2,40,000 had been sold for 1,20,000. Means this sales is, that sales of 1,20,000 is also included in this 13,60,000. Sales were 13,60,000 for 1 day, 2 days, 1 year. In the time period low, the 23rd June to 30th June time period low, total sales were 13,60,000. Goods were sold at a cost plus 25% profit. However, goods costing 2,40,000 had been sold for 1,20,000. Means 1,20,000 ki you have sold. I don't want to consider cost now because sales లో 13,60,000 less 3,20,000 less 1,20,000, 9,20,000 is your good sales or genuine sales. And 3,20,000 in the 13,60,000 lo 3,20,000 is what? Goods sold on approval or return basis. This 1,20,000 is what? This is loss sales. Loss sales which is giving you loss. Now, goods are selling at a cost plus 25%, means 1/4 on cost. If it is 1/4 on cost, means it is 1/5 on sale. It is 1/5 on sale. 9,20,000 is sale into 1/5. 1,84,000 less 1,84,000. Balance how much? Minus 9,20,000, which comes to 7,36,000. How much? 7,36,000. What is this 7,36,000, sir? Cost of sales. In between this time period, I sold these goods. Means on 23rd June in that 48 lakhs lo, this is there 7,36,000. But as on 30th June lo, this 7,36,000 is not there, as this is completely sold. Means as on 23rd in that 48 lo, this is there, but as on 30th lo, it is not there. Now I want the value of stock as on 30, as this is not there, less 7,36,000. less 7 lakh 36. Next, sir, the cost of these goods is 2 lakh 40. Sir, I sold for 120, but the cost is how much? 240. As on 23rd, the cost is 2 lakh 40 is there in where? In my stock as on that 48 lakhs low, this 2 lakh 40 is there. In between this time period low, I sold for 120. Means the cost is how much? 240. As on 23rd low, the cost will be there, sale price will be there, cost will be there. What is cost? 2 lakh 40 is there. But as on 30th June, that is there or not there? Not there. Hence, less 2 lakh 40. Come to next one. Sir, goods sold are return basis 3 lakh 20, sir. Half of them were returned in between this time period. Balance half I don't know, means that is not sale. Means as on 23rd, this 3 lakh 20 cost is there. Yes, sir, there. As on physically I am counting, as on that date low, first of all it is not there, but as on 23rd low it is there. My inventory, it should be there, it should not be there. Should be there, but there as on 23rd. Now don't do anything. Wait, sir. Sir, 3 lakh 20 is there on 23rd June or not there? Yes, sir, it is there on 23rd June. During this period you sold? Yes, sir, during this period you sold. And half of you received? Yes, sir, half of I received. Balance half is there with the customers. First of all, my inventory? Yes, sir, my inventory. Half is there with me, half is there with me. Half is there with third party, half is there with the third party. As on 23rd, total inventory is there in that 48 lakhs? Yes, the total inventory is there 48. Now I need to consider total as my stock only. Yes, sir, my stock only. As on 23rd considered? Yes, sir, considered. Now you are supposed to do anything? Not required. Why not required? As on 28th na, the value is there. Yes, sir, as on 28th na, the value is there in that 48 lakhs. As on 30th na, the value should be there. Yes, it should be there. 23rd na, it should be there. 30 also it should be there, and on the both the dates it is there. You are not supposed to do anything. 23rd na, it is there. During this time period, I sent, right? Now half I received, right? Closing date lo balance half is there with my third party, but my inventory, I am the owner. 23rd it is there. 30 also it should be there. 23rd already there. Did I need to do anything? Not required. For example, it is entirely sold, means I am supposed to less, but these are not the sales. Half they have returned and half they are not even approved. Don't do anything. 48 lakhs, add 2 lakh 40, add less 7 lakh 36, less 44 lakh 64,000. All adds should be done at one place, all lesses should be done at one place. You have to write what is that meaning. So what is that? Sale means cost, add cost of the goods which is sold for loss 2 lakh 40, add cost of sales, next 4 lakhs purchased, next 2 lakh 40. You are supposed to add those respective things. Yes, 44 lakh 64,000. 44 lakh 64,000. Completed. Just this draw and just that approval written basis loss at 23rd low, this is there. Yes, it is there. 30 low should be there. Yes, sir, it should be there. Now why you are supposed to do any adjustments for that? Already there, and on 30 also it should be there. Then why you are supposed to do anything? Not required. Don't do add anything. Yes, sir, come, sir. Last problem. Yes, sir. Adjusted selling price method, sir. This is a non-historical method where you don't know your actual cost, then you will go for adjusted selling price method. It is a non-historical cost method. Now, X, Y, Z are in a retail business. Okay, the following information is obtained from their records. Goods received from supplier subject to trade discount 3%, less the trade discount 3% and apply sales tax at 11%. In this 15,75,500 low, less trade discount. How much? 3%. Add sales tax 11%. Then packing and transportation charges. Add this packing and transportation charges 87,500. This is what your total cost. Sales during the period how much? 22,45,500. Sale price of closing inventory. This is the sale price, sir, of closing inventory. I want cost price of this closing inventory. What you are supposed to do, as this is at sale price, yes, this is also at sale price, add these two. Then you will get what? Total sales. Even though that is not the sales, that is at selling price, take that selling price value and actual sales. Total you will have sales. This is your total cost. Sales minus cost is GP. Sales minus cost is gross profit. Then find out gross profit ratio. Now apply that GP ratio on this sale price. Apply the GP ratio on this. Then you will get the cost. Sir, this is actual sales and this is sale price of closing inventory. Add these two, both are at sales times and less your total cost, you will get gross profit. Now find GP ratio. GP divided by this total sales, you will have GP ratio. Apply this GP ratio on sale price of closing inventory. Then you will get the cost of the closing inventory. Yes, that's what they have given. Less trade discount 3%, add sales discount, sales price, add packing. This is the total cost. This is the total sale value. Determines estimated gross profit margin. You will get what? Gross profit. Margin is how much? 28.09. How you get the gross profit margin? Gross profit 6,96,000 divided by 3 divided by sales. This 6,96,659 divided by 24,80,500. Then you will get GP ratio. Now apply that GP ratio on this 2,35,000. Reduce that GP ratio. The balance is your cost of inventory. I hope you got the clarity, sir. Come to the one more advanced issues in final accounts. Sir, we already covered that non-manufacturing entities and manufacturing entities. Now advanced issues, sir. Simple, nothing is nothing great in this. Advanced issues. Yes, sir. The main focus is there on accrual concept. What, sir? Accrual concept. What is this accrual concept, sir? So, sir, this is the year of 12 months. I incurred expense for 12 months. I incurred salary expense for 12 months. I incurred rent expense for 12 months. I incurred insurance expense for 12 months. So, I incurred expenses for 12 months, but I paid for 10 months. How many months I paid, sir? I paid for 10 months. Case number 1. Case 2. Sir, 12 months, same salary, same rent, same insurance. This time I paid for 15 months. During the period low, I paid for 15 months, meaning to say for the next period of 3 months, I paid in advance in the current period. Once again, sir, in the first case low, for the period of 12 months, 1 year, starting from April ending from 31st March of the next year, in this 12 months of time period low, salary expense, rent expense, insurance expense and so many other expenses, I paid for 10 months. How many months? I paid for 10 months, not specifically, just an example I am taking. Maybe salaries paid for 12 months, rent paid for 11 months, maybe insurance expense incurred for 12 months but paid for some 7-8 months. Just an example I considered. Payment is done for 10 months but expenses incurred. What is the meaning of the term expenses incurred? I derived benefit from that expense, but the payment is not met so far. I derived the benefit, I incurred that expense, but payment is not made so far. Are you getting, sir? Second case. Payment is made for the future period. Benefit obviously will be derived in the future period. For the current period low, I am not getting any benefit relating to the payment made for the future period. Now my question number 1, in the current period low, how much expenses need to be recognized in case 1? Whether it is for 10 months or it is for 12 months. If I need to say 12 months, hey sir, you made payment only for 10 months, how can you recognize expense for 12 months? Okay. If you tell 10 months, hey sir, whether it is paid or not, second half of the story. You incurred expense for 10 months, yes sir, I incurred expense for 10 months. 12 months, you incurred for 12 months, but you paid for 10 months. What is the criteria? Payment is the criteria, incurred is the criteria to recognize expense. Now, accrual concept is coming. Sir, accounting is nothing but language of business. Accounting will tell you the business results, what happened. If you consider 10 months as your expense, meaning to say you are showing your expense as a lesser figure than actual, then you are showing higher profit, then you are enjoying that profit, which is not necessarily, which is not exactly the same, which is not the case. Meaning to say, if you are recognizing what you paid but not what you incurred, means what you are doing, sir, you are decreasing your expense, unnecessarily you are increasing your profit. If not today, one day you are supposed to make such payment, then and the time of payment you will recognize this. No, that is not what the accounting is all about. Mercantile system of accounting, or in other words, accrual system of accounting. Now, what this accrual system of accounting is telling, irrespective of paid or not, if you incurred the expense, recognize that entire expense, irrespective of fact whether you paid or not. If you incurred, so case 1 lo, you incurred for 12 months, yes sir, I incurred for 12 months, then book your expense for entire 12 months. Book your expense for whatever the 2 months, sir, show it as liability. We have covered in our non-manufacturing law. What is the entry? Expense account debit to outstanding expense, so that your expense will have 2 months in that expense law. The 2 months will come and sit in your outstanding expense, that will go and sit in your balance sheet law liabilities side. Are you getting, sir? Sir, are you getting or not? Yes, sir. So, what is the essence of this discussion? The essence of this discussion is what your accrual concept is telling. So, your accrual concept is telling, irrespective of the fact whether you paid or not, if you incurred such expense, recognize in your books of accounts as your expense. Are you getting, sir? Okay, sir, I will recognize my expense for 12 months. Next. Come to the next case. Now, you need to incur for 12 months. Matlab, you need to record as your expense for 12 months or 15 months. Sir, can anyone? You paid for 15 months, for the next period you paid for the 3 months. Now you need to recognize your current period expense as 12 or 15? 12 only. that 3 months expense is not the current period expense, that is an expense for future which you paid in the current period. That 3 months expense what you paid for the future period is the asset in the current period. As per the accrual concept, you need to recognize expense only for 12 months. Same, your matching concept is also telling the same. Are you getting, sir? You are not getting any benefit from the 3 months expense. So how can you debit that to your current period expense or P&L accounts? No. You are not supposed to do that thing. So what is this accrual concept? Irrespective of the fact whether you paid or not the expense, if you incurred that expense, you need to recognize in your books of accounts. That's what this accrual concept is all about. Apply this accrual concept to income also. Sir, are you getting what I am telling? Yeah. Sir, interest income is there, sir. 12 months. Come to cainter, we can discuss about AS9 revenue recognition. At that point of time, this interest revenue is to be recognized on time basis. What, sir? On time basis. If the time is expired, then you need to recognize such income in your books of accounts. Fine. Now, 12 months completed. Fine. That interest you received for 8 months. How many months you received interest, sir? 8 months. The period starting from 1st of April and ending from 31st of March, which is a period of 12 months. You deposited in the deposits of some other company or whatever it may be, but you received interest only for 12 months. Then what about that 4 months interest, sir? You earned? Yes, sir, I earned. How can you know? Yes, sir, the time is expired, time elapsed. Yes, sir, I earned. Whether you received? No, sir. How many months you received? I received for 8 months, sir. I received for 8 months. Now tell me, sir, you need to recognize your income for 8 months or for 12 months or for 4 months. Okay. Come to case 2. In case 2 lo, take this timeline, a period of 12 months. This time you received for 15 months. Means for the future period, what, sir? For future period, you received in the current period. For a future period of 3 months, you received in the current period. Now tell me, sir, how much of interest income you need to recognize in your books, whether you need to consider 12 months or 15 months. Yes. Now what my accrual concept is telling, if you earns income, what, sir? If you are earned that income, irrespective of the fact whether you received or not, if you earn means recognize. Maybe you have earned, maybe you have received only for 8 months, but you have earned. Yes, sir, I have earned for how many months? 12 months. Then recognize your income for 12 months. Recognize your income in your books for 12 months. Are you getting, sir? Yes, sir. Second case, even though you might received from for higher number of months, but what you earned during the period, I earned only for 12 months. The 3 months is for the next period, which I will earn in the next period when the 3 months got expired, or when that 1 month, 2 month, 3 month got expired. When each and every month got expiring, then I am earning that income. But now that 3 months income, I am not earning now. If you are not income, then you are not supposed to be recognized in your books as your income. That is what your accrual concept is all about. Even though you might receive for the future periods, but if you are not earned, even though if you are not earned, matlab, if the time is not expired, then you are not supposed to recognize such income in your books of accounts. In this case law also, you are supposed to recognize your income only for a period of 12 months. You might receive for extra 3 months, that you are supposed to show in your current liabilities. And this you are supposed to show in your current assets, that you need to receive. You need to receive such interest income for a period of 4 months, that should be shown in your current assets in the balance sheet. And this 3 months what you have received for the future periods, you need to show under your current liabilities in your balance sheet, right? Yeah. Now application of this accrual concept, we are having some 2 to 3 problems. Just you can see those problems. Nothing great in that. Yeah, sir. Yeah, just go through this problem. Mr. Kotriwal was engaged in the business of selling magazines. Yes, sir, they were engaging in the business of selling magazines. Fine. Several of the customers would pay money in advance for subscribing his magazines. Yes, sir. If you remember Bajaj Chetak, to the extent of little bit of knowledge what I know, if you want that Bajaj Chetak bike in around 1998, in that period I am talking, if you want that bike, you need to wait for 6 months by paying advance money. First you need to pay advance, you need to wait for 6 months, then that Bajaj Chetak bike will come to your home, right? In the same way, maybe this Kotriwal is very much famous in that magazines and all that stuff. So Mr. Kotriwal was engaged in the business of selling magazines. Several of his customers would pay money in advance for subscribing his magazines. Okay, so most of them were paying advance. Okay. Information relating to year ended 31st March 2020 has been given below. So as on 31st March 2020, for the period ended 31st March 2020, the information they are giving. On 1/4/2019, he had a balance of 2 lakhs advance from customer, out of which 1,50,000 was relating to the year 1920, while the remaining pertaining to year 2021. Okay. During the year 1920, he made cash sales of 5 lakhs. You are required to compute total income and your, yes, sir. How much advance money received, sir? Sir, how much is advance money received? Advance money received is 2 lakhs. In this 2 lakhs lo, as on which date, sir, this 2 lakhs? As on 1/4/2019. So this advance of 2 lakhs is there as on 1/4/2019. 1,50,000 belong to the period of 1920. In other words, 1/4/2019 to 31st March 2020. This balance portion of 50,000 belongs to the period the next year, that is 2020-2021. Now this 1,50,000, even though you have received in the previous period matlab, even though you might received in 18-19 or some previous periods, but that is the income for the period 1920, irrespective of the fact whether you are received in the year 1920, but you have earned in the year 1920, you are supposed to recognize such income in only in the 1920. Once again. Sir, in this 2 lakhs of advance low, 1,50,000 belonging to the year 1920 and the 50,000 belong to the year 2021. Even though this 1,50,000 received in the earlier periods, but that is the income for the period 1920. Right? Yes. How you know, sir, that is the income for the period 1920? Go and read. On 1/4/2019, he had a balance of 2 lakh advance from customers, of which 1,50,000 relating to year 1920. So, even though I received advance in the earlier periods, but the service I sold these magazines in the period 1920, then that income is in 1920 only. Imagine, I received some advance in the earlier period, but when I sold these magazines, in other words, when I delivered these magazines in the year 1920, then for which period this is sale? This is sale for the period in 1920. Deep discussion we can make in AS9 revenue recognition. cainter. Yes, sir. Now, in this 1,50,000, in this total of 2 lakhs low, 1,50,000 is what, sir? Current period 1920. Whatever that 50, that is the sales will be made in the future period of 2021, and that 50,000 belong to 2021. Okay. Now, during the year 1920, he made cash sale how much, sir? He made a cash sale of, highlight the word cash sale. What, sir? Cash sales. How much, sir? 5 lakhs. In this cash sale of 5 lakhs low, cash sales for the period. What is that cash sales for the period? 2019, 2020. How much? 5 lakhs. In this cash sale of 5 lakhs low, that 1 lakh 50 included or not included? Once again, in this cash sale of 5 lakhs low, that 1 lakh 50 is included or not included? Not included, sir. How you know? That is not cash received during the period. That is not cash sale for the period. That is sale for the period, but cash received in the previous period. So in this 5 lakhs low, that 1 lakh 50 is not included. Go and read that, highlight the word. During the year 1920, he made cash sales 5 lakhs. Now, if someone asks what is your total sales means for the current period low, what is your total income for the current period means 1,50,000 which is received in the last period but is income for the period, and this 5 lakhs total comes to 6,50,000 is your income. 5 lakhs plus 1,50,000. This 5 lakhs is cash sale. In this 5 lakhs, this 1,50,000 is not included. This 1,50,000 is not received in the current period, received in the last period. Total 5 lakhs plus 1,50,000, which comes to how much? Total of 6,50,000 is your income for the period. Are you getting, sir? Application of accrual concept. Even though that 50,000 received, but that 50,000 belongs into the future period. So don't recognize in the current period or don't recognize even in the earlier periods. Are you getting, sir? Yes, sir. Next. Now what is the income? That income is 5 lakhs plus 1,50,000, which comes to how much? 6,50,000. Next. Total money received during the year. How much? They are asking you. You are required to compute total money received during the year. If the closing balance in advance from the customer account is showing a balance of 1,70,000. Wow, what a beauty. What they are asking? Total amount received during the year. Total amount received during the year. They are not asking whether that receipt may be current period sales or future period pay sales or the sales of the last period. What they are asking? They are simply asking total amount received during the period. It may be sales of the current period, or it may be sales of the future period, or it may be sales of the last period also. Are you getting, sir? They are simply asking what is the total amount received during the period. Okay. Sir, if that advance low, how much is balance is there? 50,000 balance is there in this advance. If that advance balance low, still that 50 is only there, nothing else, that 50 is only continuing, then how much you received? 5 lakhs you received. How much you received? 5 lakhs you received. Sir, please don't shout, sir. Please, my humble request, sir. Please don't shout. I know you know answers, sir, because I am only your teacher, right? So obviously, Charan sir students means you are having some knowledge. I too agree, but don't shout, sir. Right? Right. Yeah. How much is the amount received, sir? Amount received during the period, how much? 5 lakhs. Okay. If in that advance amount low, nothing they are telling that 50,000 is still continuing as 50 means your received is 5 lakhs. But what they are telling? In that advance account low is having a balance of 1,70,000. How much? 1,70,000. Actually opening balance how much? 2 lakhs. In this opening balance how much is transferred to current period income? 1,50,000. Then the balance should be how much? 50. But the balance there how much? 70. Means current period low I received some advance which is relating to the future period 1,20,000. Are you getting, sir? Actually speaking, if there is no other information, then the balance in my advance account should be 50. If no other information is there, then that balance in that advance account low should be 50,000. But how much they are telling? 1,70,000 they are telling. See, total money received during the year, if the closing balance in the advance from the customer account was 1,70,000. If that advance from the closing balance in advance from customer account is 1,70,000 means what happened? How that 1,20,000 increase? That is nothing but cash received during the period for future periods. This 5 lakhs is what? Cash sales during the period. This 1,20,000 is what? Advance received. Total how much? 6,20,000 is what? Cash received during the period. In that 6,20,000 lo, 5 lakhs is current period income. 1,20,000 is received for future period. That is not income for the period. Accrual concept is strictly stopping you to recognize that 1,20,000 in the current period as income. Then what to do? Show it in the current liabilities as you were received in advance. If you want to show the balance in where? Advance account lo, advance from supplier is a liability. Yes sir, advance from supplier is a liability. Yes, advance from supplier is a liability. Now advance from supplier is a liability. Liability will always have credit balance. By balance brought down how much? 2 lakhs. In that 2 lakhs lo, how much is your current period income? 1,50,000 transfers to the current period sales. How much? 1,50,000. If no other information is there, how much is the closing? To balance carried down should be 50,000. But the closing balance is how much? To balance carried down, how much? 1,70,000. 3,20,000. 3,20,000. If you balance the account, the missing figure is there on the credit side. That is nothing but by cash. How much? 1,20,000. By balance brought down 2 lakhs. Yes sir, by balance brought down 2 lakhs. Then transfer this advance from customers to sales. How much? 1,50,000. Now the closing balance is how much? 1,70,000. Then what is that amount received? 1,20,000. Entry sir, cash account debit to advance from supplier. Cash account debit to advance from supplier 1,20,000. Total cash collected is 5 lakhs, that is cash sale, plus this 1,20,000, total comes to 6,20,000. Yes sir. I will show the answer. Calculation of income for the period 1920. How much? Money received during the year. How much? 5 lakhs. And money received in advance. How much? 1,50,000. Total comes to how much sir? 6,50,000. Yes. Now come to advance from customer account. How much? By balance brought down 2 lakhs. Yes sir. Next, to sales. Yes sir. How much? 1,50,000. To balance carried down how much? 1,70,000. Then balancing figure by cash or bank, whatever the name it may be. 1,20,000. Next, did they are asking this account in this problem lo? Yeah, they are not asking. Just as a working note, prepared. That's it. Yeah, next one. Total money received for the period 1920. 5 lakhs plus this 120. So total money received. If I want this 120, you should have the help of this account. So prepare that account. Total 6,20,000. Right? Right. Yes sir, completed. Come to CRD number 5. Yes sir. Yes sir. Sengupta and Co. employed a team of 8 workers. Okay sir, they have employed a team of 8 workers who were paid 30,000 per month each. So 8 employees were there and each employee is paid 30,000 per month. 8 employees were there, each employee paid 30,000 per month for the year ended 31st March 2019. So for the year ended 31st March 2019, each employee is paid 30,000 per month. At the start of financial year 1920, at the start of financial year 1920 means what sir? At start of financial year 1920 means when? on 1/4/2019 to 31st March 2020. This is the period at the start of financial year 1/4/2019. At the start of this day, the company raised salaries by 10%. How much, sir? 10% to 33,000 per month each. So now that 8 employees also increased their salary by 10%. Now earlier it is 30,000 per month. Now 10% increase 3,000. Now total 33,000 per employee. This is the salary of at the start of the financial year 1920. Okay, sir. In the year 1819, the salary comes to 30,000 per employee. In the year 1920, at the start of the financial year, each employee increased their salary by 10%, which comes to 33,000 per month. Okay, sir. On October 1st, 2019, the company hired 2 trainees. Okay. When, sir? On 1st October 2019, company hired 2 trainees at a salary of 21,000 per month each. Now 2 trainees joined as on 1st October 2019 and each trainee salary comes to 21,000. Each trainee salary comes to 21,000 each. The workforce was paid salary on the first working day of each month. So they are paying salary on the first working day of each month. 1 month in arrears. 1 month in arrears. How a government employees, all these, some of these organizations have the same policy. Like if you are working from 1/1/2023 or 2024 means if you are working for 30 days or 31 days as the case may be, in the next month first working day they will provide with the salary. That's what they are telling. So that the employee would receive their salary for January on the first working day of February. So for February on the first working day of March. For March on the first working day of April. Okay, sir. What happened? 8 employees were there. Last year low, each employee salary comes to 30,000. Current period low, when it comes to 1/4/2019 to 31st March 2020, each employee salary increased to 10%, which comes to 30 into 10%, 33,000 per employee. Means that 8 employees, each of every employee is getting 33,000. Okay. What happened? On 1st October 2019, 2 trainees also joined and each trainee salary comes to 21,000. How much, sir? 21,000. Fine, sir. Now what happened? 6 months is there, sir. These trainees worked for 6 months. How 6 months? The current year ending from, starting from 1st April to 31st March. So the current period will end on 31st March. Okay, sir. Now in the current period low, these 2 trainees are working for 6 months. Okay. Now one more thing, if you are working for the whole month, in the next month low, first of every month they will provide with the salary. Right. Now what is the question? Actual amount of salaries would be charged to P&L. Okay, sir. Salaries for the period. In other words, salary expense for the period. Salary expense for the period 2019 to 2020. 8 employees. Yes, sir, 8 employees. Each employee salary comes to how much, sir? Each employee salary comes to 33,000 per month into a period of 12 months. How much you are getting? 8 employees, each employee salary comes to 33,000, 2,64,000 into, that is 2,64,000 is 1 month salary into, which comes to how many months? 12 months, which comes to 31,68,000. 31,68,000. Now 2 trainees also there? Yes, sir. 2 trainees. Per trainee how much? 21,000. Most student used to commit mistake by taking 12 months. They are not there throughout the year. They are there from 1st October. They are there only for a period of 6 months. Consider only 6 months. Are you getting, sir? Considering the 6 months is the key here. How much this trainees? 2 trainees, 21,000 into per a period of 6 months, which comes to 2,52,000. How much? $34,20,000. This is what, sir? Salary expense. Expense for the period 19. Salary expense for the period 1920. Yes, sir. Are you getting, sir? This is what, sir? Salary expense for the period 1920. Come to the next one. In that law, part B. So, this is what you are charged to your P&L. How much is actually amount? Amount actually paid as salary during 1920. In 1920 lo, how much you paid? It is not for the period. They are asking how much you paid for the period. They are not asking for the period 1920. They are asking actual amount salary paid during the period 1920. Sir, amount of salary paid during 1920. Come, sir, 8 employees. Yes, sir, 8 employees into each employee salary 33,000, and March month salary is not paid in the month of March. March month salary is paid in which month, sir? March month salary is paid in the month of April. Now, you are supposed to take in the year how much? You paid only for 11 months. Eight employees, 33,000 into 11, 29 lakh 4,000. 2 trainees, into per trainee 21,000 into take only for a period of 5 months. Why, sir? March month salary is paid in the month of April. March month salary is not paid in the month of 1920. March month salary is paid in the month of 2021. April means that is the next financial year. In the current financial year lo, current accounting period lo, you paid only for the period of 5 months and 11 months. 2 trainees into 21,000 into 5, 2,10,000. In the same way, 18-19 March month salary also you paid in which month? Once again, 18-19 for the financial year or for the accounting year 18-19 March month salary you paid in the first working day of April, that is 2019 period only. Okay, for the period 2019 period, 8 employees into how much you paid for each employee? Each employee you paid for 30,000. and you paid only for 1 month. You paid in the current accounting period, you paid in the current financial year 8 employees into 30,000, which comes to 2,40,000. Total how much, sir? 2,40,000, 2,10,000, 29,04,000, which comes to 33,54,000. 33,54,000. This is what, sir? Sir, in the problem lo, if they are asking amount of salary paid for the period 90-20 means this last one will not come. For the period means the last 8 employees into 30, that into 1 month will not come. It is not for the period, amount of salary paid during in this period lo. It may be relating to the first period or whatever it may be, how much you have paid they are asking. Are you getting, sir? Now 33,54,000. Are you getting why you are adding this? And are you getting why you are considering only 11? And why are you getting why you are taking 5? Because the extra 1 month, or in other words, the 12th month salary is paid in next financial year. And last year March month salary is paid in the current financial year or current accounting period. Right. Last one. Outstanding salary as on 31st March 2020. Simple, sir. Outstanding salary as on 31st March 2020. What is this outstanding salary as on 31st March 2020? 8 employees, per employee 33,000 in the current period. That is outstanding into 1 month. 33,000 into 8 employees for a period of 1 month, 2,64,000. Next, 2 trainees into each trainee, how much you are paying, sir? Each trainee you are paying 21, which is for a period of 1 month, which is how much, sir? 42,000. $42,000. How much, sir? 3,06,000. What is this 3,06,000, sir? This will be shown under the balance sheet lo current liability, outstanding salary. Outstanding salary as on 31st March 2020. Even though if you cross verify the answer, you will have the same. Yeah, salaries to be charged 34,20,000. 34,20,000 and then 33,54,000. 33,54,000 and then last one 3,06,000. 3,06,000. I hope you are getting the answer. Application of your application of your accrual concept. When it comes to CRD 6, it is purely relating to your revenue sales, and when it comes to CRD 5, it is relating to your expense, how you need to apply. Simple, sir. 8 employees were there. Each employee last year it is 30, in the current period it is 33. Now 8 employees into current period 33 into 12 months is the expense. Similarly, 21,000 into 2 into 12 months is the expense. That is the expense what you incurred. Irrespective of the fact whether you paid or not, second half of the story, what you incurred is the expense for the current period. How much is the expense? That 8 employees into 33 into how many months? 12. But when it comes to payment, you are not paying payment for entire 12 months. For the current period, April month is falling in the next period. March month payment is falling in the April. That April is completely falling in the different accounting year. That is the issue here. So now from April to March, April month you are paying salary for that which month? March month of the last accounting year. How much you are paying? 8 employees into only 30. These 2 trainees were not there at that point of time. Are you getting? Now 8 employees into 30 into 1 month you are paying around some 2,40,000. Fine. Apart from that, from the current 8 employees into 33,000 into 11 months, 2 trainees into 21,000 into 11 months. That's what you are paying in the current period. If they are asking about amount you are paying for the period, means you are not supposed to take up the last period. You are supposed to take only consider the current period. But the question is not about for the period. Next, third one, outstanding. Outstanding is 1 month outstanding, March month filed salary for the in this accounting period you are not paying. You are not supposed to take that. So in that outstanding you are supposed to consider that 8 employees into 33,000 into 1 month, 2 trainees into 21,000 into 1 month. Yes sir, how simple it is. Just application of your accrual concept. Come to CRD 4. Yes sir, moving on to the next problem. Come to the CRD 4. Yes sir. So yes sir, they have provided with the balance sheet of Tapper as on which date sir? 1st January 2020. Yes sir, they have provided with the balance sheet of Tapper as on which date sir? 1st January 2020. They provided with the plant and machinery, furniture and fixtures, trade receivable, cash at bank, inventory. Trade payable, expense payable, capital. During the year 2020, his profit and loss account revealed net profit how much sir? 18,30,000. This was after allowing for the following. Okay. Rent received from the property let out. Okay, considered. Next, depreciation on plant and machinery at the rate of 10% and at the rate of 5%. Now, on this plant and machinery, 30,000, charge depreciation at the rate of 10%, which comes to 3 lakhs. You already provided it for the 3 lakhs. You already provided the 3 lakhs, and in that profit and loss account that 18,30,000 low, that is already considered, and after only you are having that profit of 18,30,000. Same furniture fixtures also, furnitures and fixtures you have also considered a depreciation at the rate of 5%, right sir. Next, a provision for doubtful debts at the rate of 5%. Okay sir. Now what is the provision for doubtful debts you are having sir? 5% of trade receivables as on 31st. You are also considered this provision also. Okay. But while preparing the profit and loss account, he has forgotten to provide outstanding expenses of 1,80,000. So when he is preparing a profit and loss account, he is forget to provide for an outstanding expense for which is amounts to 1,80,000. Because of this error of omission, my profit increased by 1,80,000. Now you are supposed to decrease your profit by 1,80,000. In your 18,30,000 lakhs, the profit what you are having 18,30,000. In that 18,30,000 low, you are supposed to be consider this 1,80,000 as expense. The balance is only your profit, and prepaid expense to the tune of 20. You paid prepaid expense 20,000, but you considered the 20,000 as expense. You paid prepaid expense how much sir? 20, but you considered that prepaid expense of 20 as what sir? As expense. Because of this 20,000, the prepaid expense, an asset which you consider it as expense, your profit decreased by how much sir? 20,000, but which you are not supposed to decrease by 20. Now you increase your profit by 20,000. Now you will get the correct profit. That correct profit add to the opening capital. So opening balance sheet, they have provided the balance sheet of Tapper as on 1st January 2020, and he current assets, they are talking about current assets and liabilities. You are having as on 31st December, means the accounting year what they have followed is on what sir? 1st January 2020 to 31st December 2020 is the accounting year what they followed. Now for this accounting year they have already prepared profit and loss account. The profit what they have achieved is 18,30,000, but that is not the correct profit. You calculate the correct profit and prepare one balance sheet. That is the requirement of the question. Draw one balance sheet as at the end of the year. End of the year comes to 31st December 2020. So they are asking you to prepare balance sheet. If I want to prepare balance sheet, I should have what, sir? Correct profit. Now what happened to my profit? My profit is not the correct profit, sir. My profit is not the correct profit. Prepare one profit and loss account. Either you call it as profit and loss adjustment account or profit and loss. Yes, sir. Yes, sir. Profit and loss account revised. Yes, sir. Debit, credit, particulars, amount, particulars, amount. By balance brought down. What is the balance brought down profit? 18,30,000. To outstanding expenses or to expenses. How much? 1,80,000. This 1,80,000 you are not considered while you are preparing your profit and loss account. That is the reason your profit is increased by how much? 1,80,000. Now decrease your profit to the tune of 1,80,000. Now by prepaid insurance, how much? 20,000. That prepaid insurance you are considering it as what, sir? Expense, but this is not the expense. This is an asset. That asset you are considering it as expense to the tune of 20. Your profit decreased. Now your profit increased to the tune of 20. Now to net profit, how much? 18,50,000. 18,50,000. 16,70,000 is your net profit. Yes, 16,70,000 is what, sir? Revised net profit or correct profit. Yes, sir. Now prepare with the above information on balance sheet. Balance sheet as on 31st December 2020. Liabilities amount, assets, amount. Yes, sir. Now start your problem with the adjustments. The first one, rent received will not form part of your balance sheet. Depreciation have an impact on your balance sheet. Yes, sir. What is the plant and machinery, sir? 30 lakhs. Depreciation how much, sir? 10,000. Now plant and machinery 30 lakhs. 30 lakhs less depreciation 3 lakhs, balance comes to 27 lakhs. This is your plant and machinery. Next one, furniture and fixtures 3 lakhs. Furniture and fixtures 3 lakhs less depreciation at the rate of 5%, 15,000, 2,85,000. Yes, sir. Sir, in the problem law, they are not mentioning any purchase of plant and machinery or any purchase of furniture and fixtures. Hence, I assume that there is no purchase of plant and machinery, there is no purchase of furniture and fixtures. Hence, the opening value is there even at the closing. Now, on that closing, I charge the depreciation, the 10% and 5% accordingly. And these two figures already were adjusted in the P&L. That is the reason I am not disturbing my P&L. Next, a provision for doubtful debts at the rate of 5% on trade receivables. What is the balance in trade receivables? 20 lakhs. Trade receivables balance 20. Yes, sir. Now come to trade receivable 20 lakhs less provision at the rate of 5%, which comes to how much, sir? 20 lakhs. Trade receivables 14 lakhs and at the closing date 20 and provision is 5%, which comes to 1 lakh. 19 lakhs is your trade receivable ki value hai. Are you getting, sir? Yes, sir. Next, what are the other, and then this is done, and these 2 points are also done, and current assets and liabilities, inventory 14 lakh 50, trade receivables. Yes, sir. Inventory how much, sir? Inventory 14 lakh 50,000. Yes, sir. Take that inventory 14 lakh 50,000. Inventory 14 lakh 50,000. And then next one is what, sir? Trade receivables already adjusted. Cash at bank 10 lakh 35. Cash at bank 10 lakh 35. And then done. Don't forget to take prepaid insurance. How much? 20,000. That is the asset in the balance sheet. Next, come to the liabilities law. First one is what, sir? Trade payable 11 lakh 40. Trade payable 11 lakh 40. Done. Trade payable 11 lakh 40. Outstanding expenses, don't forget to take this outstanding expenses 1,80,000. And your capital balance how much, sir? Your capital balance comes to 50 lakhs. Your capital balance comes to 50 lakhs. Add profit how much, sir? Your correct profit comes to how much, sir? 16 lakh 70. 16 lakh 70 less drawings how much, sir? 6 lakhs if I am not wrong. Drawings for the period comes to 6 lakhs. 6 lakhs. Then 50 lakhs plus 10 lakhs how much? 60 lakhs. 60 lakhs 70,000. Yes, sir. Now total this. 11 lakh 40,000 plus 1 lakh 80 plus 60 lakh 70,000, which comes to 73 lakh 90,000. Same way 27 lakhs 2 lakh 85, 19 lakhs 20,000, 10 lakh 35, 14 lakh 50, 19 lakhs 2 lakh 85, 27 lakhs 73 lakh 90,000 tallied. Yes, sir. Just now go and check the answer. Just for presentation point of view I am showing. For the next problems I will not solve all these problems, sir. Just for the starting stage I solve this problem. From the next chapters like I will not solve each and every problem, sir, right? Yeah, 16 lakh 70, buy balance brought down, prepaid insurance, outstanding expenses done. 73 lakh 90, 73 lakh 90 prepaid. These two were issues, sir. People used to forget these two, 20 and this outstanding expense. People used to forget. Don't forget, sir. Don't forget these two. Students used to forget these two in the exam. Don't forget these two. And rest everything is fine. Yeah, this is also fine. Cash at bank, this is also fine. Nothing, this is also fine. These two things only, sir, you are supposed to remember, sir. And adjust these drawings, you are getting 16 lakh 70 tallied. Right? Right. Yes, sir. Moving on to the problem number 2, sir. Like I always said, any problem in the final accounts or any problem when they are asking you to prepare trading, P&L and balance sheet, or either it may be NPO or receipts and payments account, income and expenditure or balance sheet, or it may be like some single entry or otherwise incomplete records of P&L trading balance sheet, you are supposed to be start your problem with the adjustments, right? But before going into the adjustment, you should have a brief understanding about the problem. Matlab what and all is there. Whenever they are asking what is the requirement of the question, from the following particulars extracted from the books of Ganguly, prepare trading account, okay sir, I will prepare trading account, and profit and loss account, okay sir, I will prepare trading and profit and loss account, and a balance sheet, okay sir, making necessary adjustments. What is the first one? Ganguly capital account 5,40,500. In this capital account low, profit of the current period is not adjusted, drawings of the current period is not adjusted, hence take this capital to the closing balance sheet low inner column, matlab balance sheet inner column, balance sheet as on 31st March 2020 inner column. Now adjust with your profits, adjust with your drawings. Next, stock on 1/4/2019, this is nothing but your opening stock. Now when you are preparing your trading account, now you have to write to opening stock. Sales 14,48,000, sir. this sales, if there is no other adjustments, now directly take this sales to the trading account lo by sales. But I don't know what are the adjustment is there, so don't take, but you should know the sales will be form part of what, trading account lo by sales inner column. Sales returns must be reduced from that sales. Net sales you are supposed to be throw it under outer column of the trading account lo by sales, but don't throw, because I don't know whether is there any other adjustments or not. Okay, until I have identified the adjustments, then only I can throw. Purchase trading account lo 2 purchases less purchase returns. Can I take directly into that? No. Why, sir? I don't know what type of adjustments are there. Right. Carriage inward. If there is no other adjustments, take this carriage inward to the trading account lo 2 carriage inwards. If there is any adjustments, you are supposed to follow that adjustment. Next, rent. P&L account lo 2 rent. If there is any other adjustments, follow the adjustment. Salary, P&L lo 2 salary. If there is any other adjustments, you are supposed to follow the adjustment. Sundry debtors, balance sheet lo, take this sundry debtors 1,20,000. If there is any adjustments in the adjustment, no, adjust and take the balance only into the asset side of balance sheet. Sundry creditor 74,000. Take this 74,000 to the balance sheet lo liability side. If there is any adjustment, accordingly adjust this. Loan from Dana Bank. What is this loan from Dana Bank? You have take one loan from the Dana Bank, which is at the rate of 12%, and the amount of loan is 1 lakh. Are you getting, sir? Right? The trail balance, the loan is there 1 lakh. If there is any adjustments, adjust. Otherwise, take this entire 1 lakh to the balance sheet lo liability. Next, interest paid. If there is any adjustment, adjust. Otherwise, take this entire interest to the P&L. If there is any adjustment, adjust in the balance amount, take to the P&L. Next, printing and stationery, same. If there is any adjustments, adjust this printing and stationery. If there is no adjustment, take this amount to the P&L lo to printing and stationery. Advertisement, take this advertisement of 56,000 to P&L lo to advertisement. If there is any adjustment, accordingly you adjust. Interest received, any adjustment, adjust and take to the income, matlab P&L lo credit side. Cash with Traders Bank Limited. Yes, there is one bank called Traders Bank Limited. In that Traders Bank Limited lo, you are having the cash balance. Now the cash in the Traders Bank is nothing but your bank balance. How much? 40,000 asset, balance sheet asset. If there is no adjustments. Discount received, income, take to the P&L lo credit side, provided if there is no any adjustments. Investments, it is an asset, sir. How much? 25,000 is the asset in the investment. Balance sheet lo bring this 25,000. If there is any adjustment, adjust. If there is no adjustment, then take this 25,000 in the asset side. Furniture as on 1/4/2019. How much is the furniture value, sir? 9,000. If there is any adjustments, adjust it. Otherwise, charge depreciation and balance amount, take it in your balance sheet asset. Discount allowed. If there is any adjustment, adjust. If there is no adjustment, take to the P&L account to discount allowed. General expenses. If there is any adjustment, adjust it. If there is no adjustment, take your P&L to general expenses. Audit fee. If there is any adjustment, adjust it. No adjustment, then take to the P&L account to audit fee. Same. Fire insurance premium, traveling expense, postage. All these three. If there is any adjustment, accordingly adjust. If there is no adjustment, take this amounts to where, sir? P&L account lo expense side. Cash in hand, balance sheet lo asset, sir. Take this amount in your balance sheet asset. Drawings 50,000 and deposits. Yes, sir. Now drawings is there. Adjust this drawings with the capital balance in the balance sheet lo. Inner column lo capital less drawings. Deposit, if there is any adjustment, adjust. If there are no adjustment, take this deposits in the balance sheet lo asset side. Are you getting, sir? Yes, sir. Next. Now, just draw trading P&L balance sheet. Out of these items, you don't know for what and all items adjustments were there, and you don't know for what and all items adjustments were not there. So better don't touch any of these items in your particulars. Matlab any of these items from the extracts what you are having. Or if in some cases they will provide with the trail balance, don't touch any item in this trail balance. Directly come to where? From the adjustment, start your problem, and you must know how the format trading means: to opening stock, to purchases, to direct expense like wages, freight and all this stuff, buy sales, buy closing stock, if in case of profit 2 GP by GP in P&L and 2 other expenses and 2 other incomes, and this net will be transferred to capital. You should have that command over the format. If you are not having command over format, then I can't serve this. Are you getting? If you are having command over the format, then nothing is there here. Come sir. Value of closing stock. Yes sir. Value of closing stock, how much they have provided sir? Value of closing stock comes to 3,93,000. How much? 3,93,000. Now take this 3,93,000 in the balance sheet to asset side as closing stock. First thing, this balance sheet lo you are supposed to take this as asset, and take this 3,93,000 in the trading account lo by closing stock. Give 3 or 4 or 5 lines space to recognize your sales and the balance lo by closing stock. Where sir? In your trading account. Are you getting? First one, in your trading account lo closing stock by 3,93,000 and your balance sheet lo closing stock how much? 3,93,000. Next one. This includes goods returned by customers on 31st March 2020 to the value of 15,000 for which no entry has been passed in the books. Sir, there is no entry which is passed in your books of accounts, but you are supposed to pass one entry for the sales returns. What is the entry for sales returns, sir? This includes goods returned by the customer. Entry, sales returns account to debit to sales returns account to debit to debtor account. Now you are supposed to decrease your debtor, you are supposed to increase your sales returns. How much is that? 15,000. Increase your 15,000. What sir? What is that 15,000? Sales returns. Where is that sales returns? Yes. For this 43,000, add 15,000. And debtors were there. Where is the debtors? Less 15,000. Because it is not accounted. Now you are supposed to account. Now you are supposed to record. What is the entry? Sales returns account to debit to debtor account. Are you getting sir? Next. This includes goods returned by the customer on 31st March 20. So on 31st March 2020 some goods were returned by the customer, that includes in this 3,90,000, but so entry has been not passed. Now you are supposed to pass one entry for that. Are you getting sir? Next. Purchase includes furniture purchased on January 1st 2020 for 10,000. Okay sir. Sir, when you purchased this furniture on 1st January 2020, yes, what is the entry sir? When you purchase the entry, you are supposed to write furniture account debit to cash or bank. Furniture account debit to cash or bank. But you have written one entry, purchases account debit to cash or bank, means the furniture what you have purchased were included in your purchases. Now, less your purchase, increase your asset. Entry, furniture account to debit to purchases account. Now come to your that so called whatever it may be, this extracts. In this extract lo, where is your purchases? Less. How much you are supposed to less? 10,000 you are supposed to less from here. From furniture add 10,000 here. But while you are calculating depreciation, care should be taken. This 10,000 is subject to depreciation only for 3 months, that is nothing but January, February and March, and the balance furniture what I have got 9,000 is subject to depreciation for a period of 12 months. Yes sir. Next. Next. Depreciation should be provided on furniture at 10% per annum. So for this what you are supposed to take sir? Purchase I have already reduced that. Next. Depreciation should be provided on furniture at 10% per annum. That 9,000 is depreciated at the rate of 10%, which comes to 900. But this 10,000 is subject to depreciation only for 3 months. 1000 divided by 12 into 3. Are you getting, sir? Now this is subject to depreciation only for a period of 3 months. Are you getting, sir? Yes, sir. Next. Now there is one loan from Dana, sir. Yes, sir. Loan from Dana. Where is that loan from Dana? 1 lakh is the loan from Dana, and they provided one statement, sir, how it is appears. That is, on 1/4/2019, you are having 50,000, and you have took by bank one more 50,000. This is on the closing date. Are you getting? So why this nonsense they have provided is they want to tell that this loan from Dana opening balance is 50,000, and on the last day you have took one loan of that 50,000. What you are trying to convey means this 50,000 is completely subject to interest for 12 months. This one more 50,000 what you have taken on the last day, it is not subject to the interest. That's what they want to convey. That is the reason they provide with the loan. Sir, by balance brought down, 1 lakh is there, meaning to say entire 1 lakh is there from the beginning, hence entire 1 lakh is subject to depreciation for a period of 12 months. Sir, by balance brought down, 25,000 is there, by bank on the last day 75,000, means only 25,000 is subject to depreciation, balance 75,000, only 25,000 is subject to interest, balance 75,000 is not subject to interest for the period or current period. That's what they want to convey. Yes, sir. I hope you got the clarity over this loan statement. Right? Right, sir. Next. Sundry debtors includes 20,000 due from Robert, and sundry creditor include 10,000 due to him. Sir, Robert is there. 20,000 is due from Robert, and the same Robert, I need to pay 10,000 to the Robert. Net flow, if I received 10,000 from Robert, that is sufficient. Yes, sir. I hope you got the clarity over this loan statement. So, on the opening date, you are having balance brought down 50,000, and you have took that 50,000 on the last day. This 50,000 is not subject to any interest. Only the opening date of 50,000 is there, that is subject to interest for the full period of 12 months. That's what I want to convey by this loan statement. Next, sundry debtors include 20,000 due from Robert. Sir, due from Robert. Yes, sir. Due from Robert. How much is the due? 20,000. Payable to Robert. How much is payable to Robert? Payable to Robert is 10,000. What is the ultimate receivable to Robert? 10,000. Ultimate receivable from Robert is 10,000. Okay. Now, in your books of account law, you are supposed to recognize this asset only 10,000. Now, in your assets law 20,000 is there. Reduce an asset of 10,000. Reduce a liability to the tune of 10,000. Are you getting, sir? Reduce your asset to the tune of 10,000. Reduce your liability to the tune of 10,000. Entry, sir. Liability account to debit 10,000 to asset account. Liability account to the tune of 10,000. Asset account to the tune of 10,000. You please reduce, because Robert is the same person in which I am owed to that Robert 20, but he owes me 10. Total comes together that 20 minus 10, you will get balance 10,000. Are you getting, sir? Next. So, what is the ultimate treatment? Yes, sir. Sundry debtors include 20,000 due from Robert, and sundry creditors include 10,000 due to him. Sir, In my sundry assets lo 20,000 is due from Robert. I need to collect from Robert 20,000. In my sundry creditors lo 10,000 is payable to Robert. Now will I ask Robert, please you give me 20, Robert take this 10, will I give? Or net law I will ask, hey Robert, you are supposed to give me 20, I am supposed to give you 10, balance net 10,000 I will pay. That is quite common agreement. Yes sir, quite common deal. Asset law reduce 10,000, liabilities law reduce 10,000. Ask your Robert, please pay me 10,000, that is enough. Because 10,000 I am supposed to pay you, you are supposed to pay me 20, reduce this 10,000 from the 20, the balance 10,000, please pay me. Entry sir, cancel asset to the tune of 10,000, cancel liability to the tune of 10,000. Entry sir, sundry creditor account debit to sundry asset account. How much sir? 10,000, 10,000. Sundry creditor account debit to sundry asset account 10,000 and 10,000. Are you getting sir? Next. Interest paid includes 3,000 paid to Dena Bank. Sir, how much you paid interest? 4,500. Sir, interest paid how much? 4,000. In this law, 3,000 you paid for whom sir? 3,000 is paid to Dena Bank. Whatever that balance 1,500, don't question the question. That 1,500 is maybe paid for some other items that you are not supposed to be considered sir. Are you getting sir? Okay sir. Next. Dena Bank lo 50,000 into rate of interest 12%, 6,000 you are supposed to pay interest. Total loan is 1 lakh, but from the day 1 of the year you are having 50,000, you are supposed to be pay interest only on this 50,000 at the rate of 12,000, which comes to 6,000. In this 6 law you paid 3,000 and payable is 3,000. This is a liability, outstanding interest payable. Are you getting sir? How much interest you paid? 4,500. How much still payable? 3,000. Now 7,500 is your interest expense. In this 7,500 low, 3,000 is paid to Dena Bank and still 3,000 is payable to Dena Bank. Total interest payable to Dena Bank is 3,000. Total interest expense to Dena Bank is 6,000. 3,000 is paid, 3,000 is payable. P&L account low to interest 7,500. 4,500 paid, 3,000 is outstanding. Total 7,500. Come to the balance sheet liability side, outstanding interest 3,000. Are you getting sir? Next. Interest received represents 10,000 from sundry debtors and the balance on investments and deposits. Sir, interest received 7250. In this 7250 lo 10,000 you received on debtors because of some outstanding balances and all that stuff. Yes, interest received represents 1,000 from sundry debtors and balance on investments and deposits. Sir, on investments and deposits, come to the deposits. Deposits 10% interest. On 1/4/2019 you are having 1,50,000. Now 15,000 is your interest. How much? 15,000 is your interest income on deposits plus investments 25,000 low, it is 5% interest. 1,250 is your interest. Means you are supposed to collect how much? 16,220 from investments and deposits. How much you collected? 6,250. You collected 6,250. Balance how much is receivable? 10,000 is receivable from that interest and deposits. Interest is receivable from deposits and investments. Are you getting, sir, this interest adjustment? Sir, nothing is there. You received interest received 7250. In that 7250, 1000 is for interest on drawings. Balance 6250, this interest is on investments and deposits. On investments, you are supposed to be collect 15,000. On deposits, you are supposed to collect 1250. Total, you are supposed to collect 16,250. But you collected 6250, 10,000 still outstanding is there, means which you are supposed to be collect. This is an asset. In your P&L account lo, when you are showing your asset, in your P&L account lo, when you are showing your income by interest, how much? Total you are supposed to show 17,250. This 17,250 comprising of 1000 on debtors, 6250 already received, 10,000 yet to be received. In your balance sheet, when you are presenting balance sheet lo assets, interest receivable 10,000, interest receivable 10,000. Next, sir. Next, provide for interest payable to Dena Bank and interest receivables on investments and deposits. Even though if they are not telling that point, I will provide, sir. Obviously, accrual concept from the day one we are discussing about that accrual concept. You are supposed to be follow that provide interest payable on Dena Bank. Yes, I provided, and interest receivable. This interest receivable is 10,000, and interest payable to Dena Bank is 3,000. We already provided it. Next. Make provision for doubtful debts at 5% on the balance under the sundry debtors. No such provision is to be made required on deposits. Yes, the deposits what you have made on the deposits, they are not asking any provision, but debtors they required provision. Now come to the main problem. Nothing is there. Pick and throw. Ganguly's capital account. As I want to adjust my net profit, I need to adjust my drawings on the inner column lo balance sheet lo liability. Better come and take from the adjustments. Value of stock as on 31st March 2020. Now come trading account lo by closing stock 3,93,000. Balance sheet lo inventory 3,93,000. Next. What they telling? This includes goods returned by the customer on 31st March 2020 value of 15,000. Now sales were there 14,48,000. Yes. Now take that sales 14,40,000 less sales returns 43 plus this 15 comes to how much? 58,000 less sales returns 58,000, and debtor balance lo reduce that 50,000. Don't forget to reduce when you are showing in your balance sheet lo outer column. Next. Purchase includes purchase of furniture. Yes. Come to the purchase 12,15,500 less 10,000, you will get 12,05,500. Furniture lo 19,000 plus 10,000. Outer column lo furniture 19,000 less depreciation. 10% depreciation on that 9,000 you will come 900. On 10,000 paina 10% depreciation at the rate of some 3 months you will get 250. Total depreciation comes to 900 plus 250, which comes to 1100 250. That is the depreciation, and throw the depreciation in your P&L account lo to depreciation on furniture. Next. Loan account lo already I covered. To interest, how much? Already you paid 450 plus outstanding interest 3,000, total interest 750. Come to the balance sheet lo liability side, interest payable how much? 3,000. And show this loan also, loan from Dena Bank at the rate of 12% interest 1 lakh. Next. Sundry debtors lo reduce this 20,000, and in 20,000 lo 10,000 you reduce. Sundry creditors lo reduce 10,000. Reduce sundry debtors lo 10,000, reduce sundry creditor lo 10,000. Interest paid also done. Next, interest received also I clearly tell how to do that investment. Next, provide. All that's nothing is there in your problem. Everything I covered. Now debtors lo, from debtors reduce that sales returns which is not considered. Reduce Robert 10,000. Sales returns 15,000, total reduce 25,000 from your debtors, and the balance low apply provision at the rate of 5%. Apply provision at the rate of 5%. Right? Right. Next. To open, first better come to from the adjustments. You need to put here and there those respective figures, and balance you need to take in your respective items. Opening stock 2 lakh 34. Yes sir, opening stock 2 lakh 34. To purchases 12 lakh 15 less furniture what you have debited less returns, directly take that returns, you will have the net purchases. Carriage inward, directly take from the information. Sales less sales returns, that 15,000, the given 43 less 58 by closing stock. You are having with gross profit, bring this gross profit. Now interest income 17,250. I said how you got the 17. This is no adjustment, discount received, directly taken your P&L. Salary no adjustment, rent no adjustment, advertisement, printing and stationery, interest I already emphasized. Discount allowed, no adjustment, no adjustment, no adjustment, no adjustment, no adjustment. How this 4750 sir? What is the balance of debtor? Sundry debtor 1,20,000. 1,20,000 less 10,000 Robert less 15,000 sales returns. Total 85, 95. 1,20,000, 1,10,000, 1,10,000 minus 15. 95,000 is your debtors, sir. Closing debtors, right? If you apply 5% on this 95,000, you will get 4750. Yes sir, you will get 4750. Debtors given 1,20,000 less this Robert enter adjustment, how much? 10,000 less sales returns. What is the entry? Sales returns account debit to debtor. You are supposed to reduce your debtor. How much? 15,000. Now how much is your debtors balance? 95,000 into at the rate of 5% provision, which comes to 4750. Depreciation on furniture 1150. I told how you got this 1150. And 9,000 full year on 1,000 only for 3 months. This is at the rate of 10%, 900. This is at the rate of 10% only for a period of 3 months, which is 250. Total 1150. Audit fee 3,500, and the net profit will be transferred to the capital account 70,500. The net profit will be transferred to your capital account 70,500. Next. Furniture 9, additions made 10, 19, you will get 17,850. Investments, the opening value holds good. Deposits, the opening value holds good. Interest, which is receivable 10,000. Stock in trade, closing stock. Sundry debtors, the net value. Capital and what is this? Balance. Next, profit. Yes, you are supposed to add this profit. Next, drawings and the balance amount. Loan from Dena Bank, the opening value holds good, and the 50,000 you have considered in the taken in the last day. Next, interest which is payable 3,000, sundry creditors, how that 74,000 they have provided, less that enter adjustment with the Robert, you are having 64,000. I hope you got the clarity and your balance sheet will get tallied. Yes, this is cash in hand and this is cash with that bank, that traders bank. Now 7,28,000, 7,28,000, your balance sheet will get tallied. Only thing, how to adjust your investments, matlab interest, how to adjust your interest paid and how to adjust your interest received, and how there is an impact on provisions because of the debtor sale return not adjusted, and what is the impact that sales returns not adjusted, how to take that sales in the trading. Only those 4-5 adjustments. Apart from that, nothing is there. Most of the final account problems are pick and throw it in the respective place. That is the only thing. Some 4 or 5 adjustments, if you know that how to handle that 4 or 5, there is nothing in this problem. If you take this problem, what I did, just the closing stock I thrown on the respective place, and this adjustments lo what I did, sales nunchi sales total some 43, add this, and debtors nunchi reduce it to calculate provision, and purchase, from purchase nunchi reduce this amount, and this for 10,000 also subject to depreciation for 3 months. Next, loan statement. In this loan lo balance brought down 50, and this balance, closing balance of 50,000 is not subject to any interest, and while calculating interest don't consider this 50,000, that's it. And for calculating provision, don't consider this 10,000, reduce 10,000 from Robert and show the balance amount in the balance sheet, and the balance sheet creditor lo don't consider this 10,000. Interest paid includes 3,000 to interest paid is 4,500. On that 4,500 lo 3,000 is paid to Dana Bank, and total interest payable to Dana Bank on 50,000 at the rate of 12%, which comes to 6,000. You paid only 3,000, still some 3,000 has to be payable. Okay, that also I considered. Interest received, they said some 7,250. Yes, interest received 7,250. In this 7,350 lo, 250 lo, some 1,000 is relating to the debtors, and the balance, what is the 6,250 is received on your investments and deposits. And total interest you have to receive on your investments lo 1,50,000 into 10%, 15. On your deposits lo 25,000 into 5%, which comes to 1,250. Total amount you are supposed to pay out 16,250. On that 16,250, 6,250 is already collected, 10,000 is receivable. That's what I did. And they are asking you to calculate provision, and your debtor balance some 1,20,000 is there, less 10,000 intercross adjustments between that Robert 10,000 and one more 15,000 in the form of sales returns. You will have 95,000, apply 5%, 4,750. Apart from that, nothing is there. So throw these respective heads in the respective places. If there is any adjustment, like Sunday debtors adjustment is there, adjust it and throw the balance in your balance sheet. Let's say purchase returns, purchase some adjustment is there. So accordingly you adjust. That's it. There is nothing else in this problem. I hope you got the clarity. Any doubt, please ask me. Yes, sir. Moving on to the next chapter. Accounting for incomplete records. Accounting for incomplete records. Sir, what is this accounting for incomplete records? In other words, we will call it as single entry system. Single entry system. Sir, what is this single entry system, sir? Sir, there is no separate system known as single entry system, sir. Incomplete double entry system is known as single entry. Incomplete double entry system is known as incomplete double entry system is known as single entry or accounting for incomplete records. What is this incomplete record, sir, or incomplete double entry system, sir? When accounting is done, not in accordance with, when accounting is done not in accordance with when accounting is done not in accordance with double entry system, not in accordance with double entry system is known as what? Is known as single entry system of accounting. When accounting is done not in accordance with the double entry system of accounting is known as double entry system of accounting is known as single entry system of accounting. When accounting is done not in accordance with double entry system is known as single entry system of accounting. What is this double entry system? For every debit there is a corresponding debit. For every debit there is a corresponding credit. Accounting for that receiving aspect, benefit receiving aspect, and benefit giving aspect. Sir, why you will not follow, sir? Why you are not accounting as per double entry system? First one, my business itself is small, sir. My business itself is small. So why I need this all nonsense double entry, all this balance sheet? What I want to achieve by this? I very much happy by knowing my profit. I know what is my profits and why this my business itself is small. Sir, I don't want to maintain, sir. I don't want to maintain. Why you don't want to maintain? Sir, my profits itself are getting some 4 lakhs per annum. If I want to maintain one accountant, if he is paying some 15,000 per month, means total which comes to per annum around some 1,80,000, entire 1,80,000 is gone, sir. My profit itself is 4 lakhs. If I want to give some 2 lakhs to the accountant, means what is the balance left for me? I don't want any accounting and I don't want to maintain any accounts. I know, but I don't want to maintain accounts because my business itself is small and I don't want to maintain. First of all, I don't know a system called accounting is there. One thing is, I know there is one system called accounting, but I don't want that. Second thing, I not even know there is one system called as accounting system. I not even know. That is the reason I am not maintaining. But these organizations or these small petty businesses, they also want to know what is their profit earned, and they also want to know whether that what they are earning, what the capital, what they are employed, they are getting adequate profits or lesser profits or higher profits. They also want to know what the results of their business. Now, I also want to know profits for these type of business organizations, right? Sir, how these non-profit organizations will, how these single entry, matlab incomplete records will, how they will maintain, sir? How they will work, how it works? Sir, I will maintain one cash book and I will maintain personal accounts of receivables and personal accounts of payables, but I will not maintain nominal accounts. I will not maintain nominal accounts. Are you getting, sir, how this single entry system operates, sir? By maintaining your cash book and by maintaining personal accounts of receivables and by maintaining personal accounts of payables, but nominal accounts are not maintained. Are you getting, sir? Now, an entity where they are following single entry system, by they are just maintaining cash book and they are maintaining what? Personal accounts of receivables, they are maintaining personal accounts of payable, but they are not maintaining what? Nominal accounts. Now, at the end of the year, they also want to know their profit. profit computation for these type of entities where they are not following accounts under double entry system under two methods. One is capital comparison method, one is conversion method. Sir, these type of entities where they are not following their books of accounts under double entry system of accounting, they will also want to know their profit. For that, they are having two methods. One is capital comparison method, one is conversion method. This conversion method is important for exam, and capital comparison method also is important, but there is nothing much to discuss in this capital comparison method. What is this capital comparison method? Sir, my opening capital, how much? 1 lakh. How much, sir? 1 lakh is my opening capital. Closing capital 1,40,000. Sir, if there is no other information, my profit increased from what to what? My profit increased from 1 lakh to 1,40,000 because of what? My profit increased from 1 lakh to 1,40,000 because of what? Sir, everyone, because of what? Yes, sir, because of what? Because of profit. How much? 40. The difference between opening capital and closing capital is nothing but what, sir? Profit. If there is no other information. No, sir. My opening capital is 1 lakh. Additional capital is 50,000. Closing capital 3 lakhs. Sir, what is the opening capital? 1 lakh. What is the closing capital? 3 lakhs. Can I tell the difference between opening capital and closing capital is profit? No. Why no? In this closing capital law, additional capital is also included. That additional capital is also added. Means now don't compare your closing capital and opening capital. Profit is equal to closing capital, how much? 3 lakhs less adjusted opening capital. Adjusted opening capital. How much is the adjusted opening capital, sir? Adjusted opening capital is 1 lakh plus 50, 1 lakh 50. Now how much is the profit? 1 lakh 50 is the profit. Next, come to the third one. Are you getting why I reduced that 1 lakh 50? I added 1 lakh plus 50. In this closing capital law, 1 lakh 50 is there, that opening. In this closing law, 1 lakh 50 is there, that opening plus additional. The difference is only that gain, that is only my profit. Done. Opening capital 1 lakh. Closing capital 2 lakh 50. Drawings made during their 50,000. Now I want to know the profit. Sir, I started with what? Opening capital 1 lakh. During there, how much I withdrawn? 50. Balance my capital invested is how much? Only 50,000 is the capital invested. But my closing capital, how much it is? 2 lakh 50. Means because of my profit only capital increased. Now, how much is my profit? 2 lakhs. How to show the 2 lakhs? Profit is equal to closing capital. How much is the closing capital? 2 lakh 50 less add drawings. How much is the drawings? 50 less capital. How much is the capital? 1 lakh. Then what is your profit? Profit is equal to, how much is the profit, sir? 2 lakhs. Are you getting, sir? In other words, in your balance sheet lo, when you are preparing opening capital plus net profit is closing capital, right? Now closing capital minus opening capital is equal to net profit. Keep that net profit like that, throw that opening capital to that next side, then opening capital means closing capital minus opening capital is what? Net profit. So net profit is equal to closing capital minus opening capital. Yes, sir. Opening capital one lakh. Add additional capital 50,000 less drawings 20,000 add net profit 40,000. Now 1 lakh plus additional capital introduced 1 lakh 50, profit 1 lakh 90, less drawings 170 is the closing capital. Now if I want what is the profit? Profit is equal to closing capital. This 1 lakh 70 is closing capital. Profit is equal to closing capital. Profit is equal to closing capital plus drawings less opening capital less additional capital. You will get what? Profit. That's what I did. That's what I did in all the 1-2 examples also. That's what I did. This method is known as capital comparison method. Sir, interest on capital is there. Interest on drawings also there. Interest on capital will be added to your capital. Now, if you want net profit, then like how your additional capital, like how your opening capital is reduced, less interest on capital. Add interest on drawings. Done. Come to one problem. Yes, sir. What is this problem is all about? They are giving assets and liabilities of Mr. X as on 31st March 2021 and 31st March 2022. Prepare one statement of affairs, not balance sheet, prepare one statement of affairs. Prepare one statement of affairs. Yes, sir, statement of affairs. That statement of affairs will be having assets and liabilities. Prepare opening statement of affairs, opening asset, furniture, inventory, sundry debtor, cash at bank, cash in hand. Sir, why this is known as this is not a balance sheet? Sir, if I want to call it as balance sheet, a journal should be there, a ledger should be there, a trail balance must be there, and at last you should have balance sheet. But I am not having journal, ledger, all these things. Information wise I am drawing, so it is not to be called as balance sheet. Call it as what, sir? Statement of affairs. Now, loans, sundry creditors. Prepare opening statement of affairs. Start, sir. Start with the solution. Yes, sir. Completed drawing opening balance sheet. Yes, sir. Draw an opening balance sheet. In other words, opening statement of affairs. Draw opening statement of affairs. Liabilities, assets. Asset side low. Building, furniture, inventory, sundry debtors, everything. Liabilities low. Loans and sundry creditors. And you will have what? The missing figure as capital. That capital is opening capital or closing capital? Opening capital. Come to the, yes, come to the second one. Second statement of affairs. Now one more statement of affairs. Now, sir, decided to depreciate. They decided to depreciate building by how much? 2.5% per annum, and furniture by 10% per annum. Now, closing balance sheet, closing statement of affairs low, building 1 lakh less inner column low, 2500 depreciation, outer column low, building 97,500. How much? 97,500. Furniture 50,000. Depreciate by 10% means 10,000. Outer column low 45,000. Next, rest everything is there. Yes, prepare closing statement of affairs. Inventory 2,70,000 done. Sundry debtors 90 done. Cash at the bank 85 done. Cash in hand 3,200 done. Total your assets. Come to the liability. Loans 80, sundry creditors 70. Then you are having closing capital. You are having opening capital, and you are also having what? Closing capital, right? Yes, sir. I am having opening capital and I am also having closing capital. But in between, what they are telling? One life insurance policy of the proprietor was matured during the year, and amount of 40 is retained in the business. How much retained in the business? 40,000 is retained in the business. This is what, sir? Additional capital. Next, proprietor took 2,000 per month for meeting what? Family expenses. Proprietor took what? 2,000 per month for meeting what? Family expenses. Yes, sir. Means 12 months, 24,000 is what? 24,000 is drawings. How much is your drawings, sir? 24,000 is your drawings. How much, sir? 24,000 is your drawings. 12,000 into, matlab 2,000 into 12 months. 24,000. Now, you are having opening capital, you are having closing capital, you are having additional capital, you are also having drawings. Now, profit is equal to closing capital less opening capital less additional capital add drawings. What, sir? Add drawings. You will get what? Profit for the period, right? You are having opening capital as 2,41,200. Done, excellent. Closing capital 4,47,700. Excellent, sir. See this. Additional capital introduced, drawings, next opening capital. You are having how much? 1,83,500. What is this 1,83,500? Profit per the period. Yes. Closing capital is increased due to fresh capital, yes, so it is reduced 100%. Closing capital is reduced due to withdrawal, yes, so that is the reason it is added back. Completed? Sir, any doubt, please ask me. Done? Done. Come to one more method. Comparison method. What is this? Comparison method. In this comparison method lo, I compared between opening capital and closing capital, right? Done. Conversion method. In this conversion method lo, I want to convert this single entry system into double entry system, and I want to prepare one trading account. Convert single entry system into double entry system. I want to prepare one trading account. I want to prepare one profit and loss account. I want to prepare one balance sheet. What, sir? Earlier case lo, with the available information, with the capital comparison, I am telling what is the profit. But now I don't want to compare the capital. I want to prepare one trading account. I want to prepare one profit and loss account. I want to prepare one balance sheet. Trading account format. To opening stock, to purchases, to direct expenses like wages, freight inward, all these things, buy sales, by closing stock. Buy sales and buy closing stock. Then you will have what? To gross profit. To gross profit. Come to the format of P&L. By gross profit. By other incomes. To expenses, I mean indirect expenses. To net profit transfers to capital account. Done. Next, open one more balance sheet. You will have what, sir? Assets. You will have liabilities. Now you need to prepare one balance sheet. That is what you are going to do in the conversion method. Now with the available information, how to prepare all these things is your question. They will give you generally cash book, sir. What they will give? Cash book. Or you are supposed to prepare sometimes. Now you want to prepare trading means I want sales information, I want purchase information. Sales and purchases, from cash book I can know what is the cash sales and what is the cash purchase. And open one debtor account. For what? To know the credit sales. Open one creditor account. For what? To know the credit purchases. Now with the help of cash book I will get what? All other cash purchases and all other expenses paid or incomes received, I will account it. From debtor account low, I know what is the credit sales. From creditor account low, I can know what is the credit purchases. Yes, sir. Sometimes, if you want to close your debtor account, bills receivable information will be required. Sometimes, if you want to close your creditor account, bills payable information is required. Bills receivable and bills payable. Now, see how it works. Debtor account to balance brought down. Yes, sir, debtor is an asset, it will always have debit balance. When you make credit sale entry, debtor account debit to sales account. When cash is collected from debtor entry, cash account debit to debtor account, buy cash. When you received one bill, sir, what is the entry? Bills receivable account debit to debtor, buy bills receivable. Sir, come to bills receivable account. Bills receivable is also asset to balance brought down. Bills receivable is also asset to balance brought down. Entry. Bills receivable, I received some bills. Entry. Bills receivable account debit to debtor. Bills receivable account debit to debtor. Yes, sir. Now, I collected some checks from the debtor. Entry. By bank. Bank account debit to debtor account. Next. I gave some discount to my debtor. Entry. By discount. Bad debts happened. Entry. Bad debts account debit to debtor. By bad debts account. Then you will have what? By balance carried down. If there is no dishonors, sir, dishonors will be there, which I will teach with. So you will have what? By balance carried down. For example, if they provided with the opening balance and closing balance, and you want to calculate, you are supposed to be calculate the missing figure, maybe sales, or maybe cash collected from debtor, or maybe bills receivable accepted, or maybe checks received, or bad debts, or discount. Sir, in some problems low, they may also include check dishonor. Check dishonor. Entry for check dishonor, sir. Earlier when I received the check, entry bank account debit to debtor. When check is dishonored, reverse the entry. What is the entry? Debtor account debit, raise the debtor to bank account. Sir, I received one bill. What is the entry? Bills receivable account debit to debtor. If that bill is dishonored, entry. Debtor account debit to bills receivable. Cancel that bills receivable, increase the assets. Now, debtor low to bills receivable. What is that? Bills receivable dishonored to bank. What is this? Check dishonored. If they are provided with the opening and they are provided with the closing, then the missing figures may be any of this. Sir, how to know this is only the missing figure? By using the question, easily you can identify. By looking into the problem, easily you can identify what will be the missing figure. Are getting? Come to the bills receivable account. To balance brought down. Now entries are, we are getting some bills receivable account debit to debtor is the giving of that bills, debtor is giving. If you collected cash entry through bills, cash account to debit to bills receivable account. In bills receivable law, by cash. Sir, if it is a dishonored entry, debtor account debit to bills receivable law by debtor account. What is this? Dishonor. Now you will have what? Closing balance. By balance carried down to balance brought down. Missing figure may be any of this will be missing figure. By looking into the problem, you can easily tell what will be the missing figures. This is what? Debtor account. This is what? Bills receivable account. Come to the creditor account and bills payable account. Come to creditor account, sir. Creditor is a liability. Yes, sir. It will start with what, sir? By balance brought down. When you are purchasing goods from the creditor, entry, sir. Purchases account debit to creditor by purchases. Right, sir. When you are making cash payment to creditor, entry to cash. Creditor account debit to cash. When you are giving check to creditor, entry to bank. When you are accepting bills to your creditor, entry to. When yes, sir. Now when the check what we have gave to the creditor, that check is dishonored, entry then. Everyone, sir. When you gave the check to your creditor, entry creditor account debit to bank. Yes. Now when the check is dishonored, entry. Reverse the entry. Initially what you pass the entry? Creditor to bank. Now reverse. Bank account debit to creditor account by bank by bills payable. Dishonor की entry. Sir, creditor account to balance carried down. It will have credit balance by balance brought down. Right? Come to the bills payable account. Bills payable is a liability account. It will start with by balance brought down. Acceptance of the bills by the acceptance of bills. I accepted the bills, sir. Entry. Creditor account debit to bills payable by creditor. I paid. I honored for this bills. Entry. Bills payable account debit to cash. If I close this account, it is a liability to balance carried down by balance brought down. Sir, what is that bill payable is dishonored? Entry, sir. At the time of acceptance, what is the entry? Creditor to bills payable. If it is dishonored, bills payable account debit to creditor, dishonor. Sir, if you are having opening balance and you want to know closing, just all fill it everything and you will get the closing balance. Sir, opening and closing is there. You want cash paid, or you want dishonor, or you want acceptance. Anything depending upon the question, we will arrange all these things. Right? Sir, what you have discussed, sir? Nothing, sir. While converting your what? Conversion method under single entry to double entry, you want the information of sales. Cash sales I can obtain from the cash book, but credit sales by opening debtor account. Purchases from creditor account. If I want to close debtor account and creditor account, bills receivable account lo debtor I need to adjust. Bills payable lo creditor for accepting, and for dishonor anything is there, I need to adjust these accounts, right? Shall I move on? Shall I start one question, then you will have proper understanding about what I have discussed? Yes, sir. Come to the problems. Yes, sir. Start with conversion method problems. Yes, sir. Adam G keeps his books on single entry basis. Yes. The analysis of the cash book for the year ended 31st March 2022 is given below. Yes. Bank balance as on 1st April 2021. Yes. Received from sundry debtors. Yes. What is the entry for received from sundry debtors? Cash account debit to debtors. Entry cash account debit to sales. Cash account debit to capital. Cash account debit to interest. Payment to sundry creditors. Entry sundry creditors to cash. Next, salaries. Entry salary account debit to cash or bank. General expenses account debit to cash or bank. Rent and taxes account debit to cash and bank. Drawings to cash or bank. Cash purchases they are telling. Entry purchases account debit to cash. They are giving you the closing balances. Particulars of other assets and liabilities are as follows. So these and all the particulars of assets and liabilities. Super. They gave you sundry debtor opening balance 14,500 and closing balance 17,600. They gave you sundry creditor opening balance, closing balance. They gave you machinery opening balance and the closing balance is also the same. They gave you the furniture opening balance, closing balance same. They gave you inventory opening and closing same. They gave you investments, closing same. Very good. Prepare final accounts for the year ended 31st March 2022 after providing depreciation at the rate of 10% on machinery and furniture and 800 for against doubtful debts. Okay, sir. Sir, any final accounts problem, any problem when they are asking you to prepare trading P&L balance sheet, you are supposed to start from the particulars of assets and liabilities or other information, whatever it may be. They have provided you with what? Cash book. They have given assets and liabilities information and they are asking you to prepare what? Final accounts. Final accounts means what? Trading account. Final account means what, sir? Trading account and profit and loss account and balance sheet. Open. Trading account for the period ended 31st March 2022. Everyone, sir, open, sir. Trading account for the period ended 31st March 2022. Have some 6-7 line space. Come. Profit and loss account for the period ended 31st March 2022. Yeah. Date particulars amount. Done. Leave that piece. Balance sheet as at 31st March 2022. Done. This is your main answer. For balance sheet, half page. Done. This is your main answer. Sir, if I want to close my balance sheet, I should have the information with respect to what? Opening capital, Opening capital, did anywhere they have provided? Nowhere they have provided the opening capital information. If I want to close my balance sheet, I should have opening capital information also. If you want opening capital information, prepare what? Opening balance sheet. Prepare what, sir? Opening balance sheet. Done. Yes, sir. Now start, sir. First, sundry assets. Yes, sir. Immediately go to your opening balance sheet lo assets under which sundry debtors 14,500. Immediately come to the closing balance sheet as on 31st March 2022. Sundry debtors inner column lo 17,600 and 800 against doubtful debts. You are supposed to create 800 provision, entry for provision, profit and loss account debit to provision for bad and doubtful debts. How much? 800. Profit and loss account debit to provision for bad and doubtful debts. How much? 800. Now come to your P&L. You are having, leave one line space. Either you will get net profit, gross profit or not. Leave that one line space and write 2. Provision for bad and doubtful debts. How much? 800. Closing balance sheet lo, assets lo, sundry debtors, inner column lo 17,600 less provision 800, outer column lo 16,800. Outer column lo 16,800. Outer column lo 16,800. Next, sundry creditors. Immediately open one working note 2 for debtors, sir. Why? Why? To have my credit sales information. To have my credit sales information. Open sundry debtors, write to balance brought down 14,500. Right, in the same account low, by balance carried down, how much? 17,600. Debtor opened to balance brought down 14,500. Leave some space 3 to 4, 5 lines. Write by balance carried down 17,600. Next, sundry creditor. Go to your opening balance sheet. Write sundry creditor. Liabilities side low 5,800. Come to the closing balance sheet. Write sundry creditor 7,900. Open creditor account and write by balance working note 3. Open creditor account is a liability by balance brought down 5,800. Leave some space in the debit side. Write to balance carried down 7,900. Yes. Come to the opening balance sheet and write machinery. How much? 7,500. Come to the opening balance sheet and write machinery 7,500. Immediately come to the closing balance sheet. Machinery inner column lo 7,500 less depreciation at the rate of 10%, less depreciation at the rate of 10%, which comes to 750. Outer column lo 6750. Outer column lo 6750. Immediately come to P&L and write to depreciation on machinery 750. To depreciation on machinery 750. Next, come to the opening balance sheet. Come to the opening balance sheet. Furniture 1,200 asset. Next, come to the closing balance sheet. Furniture 1200, inner column, less depreciation at the rate of 10%, less depreciation 120 rupees. 120 rupees. Outer column low 1080 is what, sir? Outer column low 1080 is what, sir? Furniture. Outer column low 1080 is what, sir? Furniture. Inventory 2. This is opening inventory. Yes, sir. You are having your trading account. Yes, sir. Immediately come to your trading account and write 2 opening stock, opening inventory, whatever the name you want to call. 2 opening stock. How much? 3900. Immediately come to the opening balance sheet and write asset side inventory 3900. Closing inventory how much, sir? 5700. Immediately come to your trading account, credit side low, leave some space and write buy. Closing stock how much? 5700. Buy. Closing stock how much? 5700. Come to closing balance sheet, asset side, write asset side inventory 5700. Asset side, balance sheet low, closing inventory low, asset inventory how much? 5700. Next, opening value of investments. This is opening balance sheet, asset side, post your investments. Come to the closing balance sheet, asset side, post your investments. The first and foremost thing you are supposed to be throw all these things in the respective places, nothing but opening balance sheet and closing balance sheet. For debtors and creditors alone, open the accounts. For others not required. Why for others not required means, from debtor I want credit sale information, from creditor I want credit purchase information. So for these two alone I am supposed to prepare debtor account, creditor account. For balance as of now accounts not required. Maybe in other problems if I am having some other adjustments, then I will open other accounts. Up to this okay? Then next, sir, analyze your receipts and payments account. Analyze your receipts and payments account. Balance, bank balance as on 1st April 2021. Immediately come to your opening balance sheet. Opening balance sheet, you are having one opening balance sheet. Write bank balance how much? 2800. In your opening balance sheet low, write bank balance 2800. Next, received from sundry debtors. Received from sundry debtors how much? 48,000. Entry, cash or bank account debit to sundry debtors. Come to your sundry debtors account. Sundry debtors you are having account, to balance brought down, that account is there. Right, in that account write by cash or bank. How much? 48,000. How much? 48,000. Cash sales how much? 11,000. Immediately come to your trading account. In there low, buy sales on the credit side. Give cash sales and credit sales in your trading low. Right, buy sales, give cash how much, credit how much. Cash low 11,000, right? 11,000. Cash flow, right? 11,000. Capital brought during the year how much? 6,000. This is what, sir? Additional capital. Immediately come to your closing balance sheet. Immediately come to your closing balance sheet. Inner column low, right? Inner column low capital. From then add additional capital. I don't know opening capital, but I know additional capital. Capital leave there, write additional capital how much? 6,000. Interest on investments. Income. Yes, sir. Income. Now come to your P&L account. Profit and loss account lo write by interest on investments. Profit and loss account lo write by interest on investments. Next. Payment to sundry creditors. What, sir? Payment to sundry creditor. Entry. Sundry creditor account debit to cash. Come to sundry creditor account. Write to cash. How much? 35,000. Sundry creditor account lo post to cash 35,000. Salary account. Entry. Salaries to cash or bank. How much? 6,500. Immediately come to your P&L and write P&L lo 2 salaries. General expenses. Come to your P&L and write 2 general expenses. Rent and taxes. Come to your P&L and write 2 rent and taxes. Drawings is there. How much is the drawings? 3,600 is drawings. How much is the drawings? 3,600 is drawings. Come to that closing balance sheet. Inner column lo, for additional capital we add 6,000. Below that less drawings 3,600. That's it, enough. Cash purchase. Come to your trading account. Below the opening stock, write 2 purchases. Write 2 purchases in which lo cash, credit. Cash lo give inner column lo 12,000. Cash inner column how much? 12,000. Now you are having balance at the bank and cash in hand. Come to your closing balance sheet. In closing balance sheet lo, cash at bank, cash in hand, 6,400, 500 closing balance sheet. Now so far what you have did, sir? I have analyzed my receipts and payments. I have analyzed my all this additional information in the form of assets and liabilities. Now, sir, debtor account is not closed, creditor account is not closed. Close the debtor account. Close the debtor account. Credit side is more, debit side is less. Right. That is difference is nothing but credit sales. Entry. Debtor account debit to sales account. In debtor account lo write to sales. That is what? Credit sales. Excellent. Creditor account lo debit side is more, credit side is less. Buy purchase, that is credit purchase. You are having cash purchases and you are also having credit purchases. Bring those cash purchase and credit purchase into trading account. Bring that cash purchase and credit purchase into trading account. Now you are having every other information. First, close your opening balance sheet. You are having capital information, right? Right. Bring that capital to the inner column of the closing balance sheet. Close your opening balance sheet. You are having capital. Bring that capital to the inner column of closing balance sheet. First, close your opening balance sheet. Done. Come to trading account. Close your trading account. You will get gross profit. Bring that gross profit to the P&L account. You will get net profit. Add that net profit to the capital. That net profit what you are getting, add to the capital, your balance sheet will get tally. How many of you tallied? Make it fast, make it fast, make it fast. See, I ask you to close your opening balance sheet first, right? You are getting 29,100, machinery opening, furniture done, inventory done, sundry debtors done, investments done, bank balance done, sundry creditors done. This is nothing but your opening capital done. Bring this opening capital to the here inner column 29,100 done. Rest everything you are having. First close your trading. Sales. If you want your sales information, you are supposed to close your debtor account. You are supposed to close your creditor account. Debtor account low, credit side is more, debit side is less. That is nothing but credit sales. Creditor low, debit is more, credit is less. That is credit purchase. Those two, throw it on the face of what? Trading account. Opening inventory done, total purchase done, and sales done, closing inventory. You are having what? 14,800 as your what? Gross profit. Come to P&L. 14,800 is gross profit. Income from investments. Next, 6,500, 1,500, 2,500. Depreciation 870. And then provision 800. Then you are having net profit how much, sir? 2830. Add this net profit to what? Capital. 2830. You will get capital 34,330. Then your balance sheet will get tallied. Just the sequence you should very much important sequence. In our problem, what I did? First I went to what? That additional information of assets and liabilities. Assets, debtor account, I opened one debtor account. Creditor, I opened one creditor account. Why I opened debtor account and creditor account? To know my credit sales and cash sales. Right. For other accounts alone, I thrown on the different places. Opening balance sheet, assets, liabilities, I thrown. And additional information they are telling like some provision has to be created 8% on sundry debtors, 800, and depreciation rate also they have provided. Now immediately depreciation and provision I will throw to the P&L. Net of depreciation, the net balance only I will bring to the balance sheet assets. Done. Next. Now I thrown all other information in the respective places. Next, you are having what? Cash book lo receipts payments. If it is a receipt, it may be either income or it may be some loan or it may be from sale of assets or whatever it may be. Just I checked all those things. Payments, it may be either expense or repayment of a loan or purchase of a fixed asset. Accordingly, I did all those things. Then I closed my opening balance sheet. I closed my debtor account. I closed my creditor account. Then cash purchase and cash sales I taken in the trading account. I close the trading, I will get gross profit, throw it on the P&L. I will net, if my account is closed, I will get the net profit. That net profit I added to the capital. Opening balance sheet I closed, opening capital. For that opening capital, I added this net profit. My balance sheet will get tallied. Come to the next problem, sir. Yes. You are given with the balance sheet. Yes, sir, you are given with the balance sheet and summary of cash transactions, list of remaining transactions for that year. Okay, sir. In this problem lo, opening balance sheet they only provided opening capital I am having. I am not required to prepare opening balance sheet as working note. Done. They are providing my cash purchases and they are providing my cash sales in the form of this cash summary. Hence, I am supposed to prepare, oh, they provided with my total purchases and my total sales. Super, sir. Nothing is there. They are asking you to prepare trading, P&L and balance sheet. Start, open your trading account, open the trading account, half page, P&L account, half page. This time I think some more transactions is there, half is enough. Next, balance sheet. Done. Start your problem from here. Just give the reading of this problem. Debtors they have provided less provision. This balance sheet is on 1st January 2023. Debtors less provision, how much? 39,000 T20. Next, bills receivable, how much? 10,000. Next, stock 45,000. Next, plant 30,000. Next, buildings 55,000. Next, cash 1250. Next, loan liability 12,000. Next, 27,000 is creditors, bills payable, and you are having opening capital as this much. Very good, sir. Next, come to the receipts and payments account. They have provided in the form of cash, summary of cash transaction. Balance brought down 1250. Balance brought down 1250. Next, amount collected from sundry debtors, entry cash account debit to debtor account. Amount collected from bills receivable, entry amount collected from bills receivable, entry cash account debit to bills receivable account. Cash sales, entry cash account debit to sales account. So, common transactions. Next, payment to creditors, entries are creditor account debit to cash. They are provided your cash purchase, bills payable, loan paid, buy salaries, salary account debit to cash, loan repaid, loan account debit to cash, rent, rent account debit to cash, interest, interest account debit to cash, journal charges account debit to cash, drawings account debit to cash, and the balance brought down. This is the closing balance. Next, start your problem from here. Once this is done, then go to this place. Once this is also done, give the effect of this opening balance sheet to assets and liabilities. Done. Yes, sir. Total purchases is how much? 2,15,000. If the total purchase is 2,50,000 means how much is your cash purchase? How much is your credit purchase? Sir, cash purchase 25,000. Balance amount is how much? 1,90,000. What is this 1,90,000? Credit purchase. Entry for credit purchase. Purchases account debit to creditor. Open one creditor account. This is time why I am opening creditor account, to know my closing creditors. To know my closing creditors. Open your creditor account. Right. By balance brought down, how much? 27,000. How much? 27,000. Next, come to your trading account and write two purchases. How much? 2,15,000. How much? 2,15,000. Come to the next one. Total sales how much? 2,35,000. In that cash sales how much? 24,500. How much? 24,500. Total sales how much? 2,35,000. 2,35,000. Come to your trading account, right? Buy sales 2,35,000. Next, how much is the cash sales? 24,500. Then how much is the credit sales? 2,10,500. How much? 2,10,500. What is this 2,10,500? 2,10,500 is what, sir? Credit sales. Entry for credit sales. Debtor account debit to sales account. What is the debtor? 2,10,500. Go to the debtor account, open debtor account. Balance brought down, take 40,000, not 39,250. That is a different account, this is a different account. Debtor account, to balance brought down 40,000. Right. To sales, 2,10,500. To sales, 2,10,500. Done, done. Discount allowed by creditors. Creditor account to debit to discount received. For us, it is a discount received. Creditor account debit to discount received. Go to the creditor account. Go to the creditor account. Right. Creditor account debit to creditor account lo debit side to discount received 1250. Discount allowed to customers. Sir. Discount allowed to customers, sir. That one, wait, sir. Discount allowed to customers. If I allowed discount to the customers, entry. Discount allowed account debit to debtor account. How much? 1250. In your debtor account lo, write by discount allowed 1250. By discount allowed 1250 in debtor account. Go to your P&L account and leave one line space and write to discount allowed 1250. Discount allowed to customers 1250, done. Discount allowed by creditors, entry. Creditor account debit to discount received. Creditor account lo to discount received 1850. Creditor account lo to discount received 1850. Creditor account lo to discount received, how much? 1850. Now this discount received will come and sit in where? P&L lo. By discount received 1850. Next, open one bills receivable account. Open one bills receivable account. Bills receivable account lo write opening balance to balance brought down asset, to balance brought down asset. Bills receivable received during the period, entry. Bills receivable account debit to debtor account, entry, sir. Bills receivable account debit to bills receivable account debit to debtor account. In your bills receivable lo write to debtors. Debtor lo write by bills receivable, how much? 60,000. Bills receivable received during the period, entry. Bills receivable to debtor. Bills payable granted during the period, means bills payable accepted, entry. Creditor account debit to bills payable. Open one bills payable account. Open bills payable account. How much? 1,500. How much? 1,500 opening balance. By balance brought down. By balance brought down. How much? 1,500. Bills payable granted during the period. How much, sir? 50,000. Entry, sir. Creditor account to creditor account. Go to creditor account. Write to bills payable. Come to the bills payable account and write by creditor. How much? 50,000. Stock as on 31st December, sir. Write on the closing balance sheet lo asset side as 90,000. Write on the closing balance sheet lo asset side as 90,000. Immediately come to where? Trading account. Write by closing stock. How much? 90,000. By closing stock. How much? 90,000. Next one. Owing to outstanding liability. What? Owing to outstanding liability. How much? 1,500. Show in your liabilities side. Show in your liability side balance sheet. Show in your expense side outstanding expenses, P&L lo to outstanding expenses 1,500. Liabilities lo show 1,500. Next, commission earned by the firm but not received. Asset, balance sheet lo asset side, show it on the asset side. How much? 1250. Closing balance sheet, commission earned but not received, asset side 1220. Come to P and L, income side lo, right? By commission, how much? 1200. Next, provide 5% reserve for doubtful debts. Provide 5% reserve for doubtful debts and 2.5% for discount on debtors. Okay, sir. That point, after having debtors information, I will provide. Next, depreciate building 2.5, plant 5%. Come to the building 55,000. Provide depreciation at the rate of 2.5%. Entry, depreciation account debit to building account. Building, come to the balance sheet, closing balance sheet. Write building 55 into 2.5% depreciation 1375. Come to the P and L and write to depreciation 1375. 1375 less 55,000, you will have 53,625. Next, plant account. What is the value of plant? 30,000. Depreciate how much? 5%. 1500 is the depreciation on plant. P and L lo 2 depreciation 1500. Balance sheet lo plant less depreciation. Outer column lo 28,500. 28,500. Completed? Now, so I started analyzing third, matlab these additional information. Now come to your summary of your cash transactions. Yes, sir. Completed posting. Any doubt? Please ask me up to so far what I have discussed. Yes, sir. To balance brought down 1250. That 1250 is nothing but this 1250 only. This 1250 and this 1250 one and the same. Yes, sir. One and the same. Amount collected from debtors. What is the entry for amount collected from debtors? Cash account debit to debtor account. Debtor account lo write by cash 1,72,000. Debtor lo write by cash 1,72,000. Next, entry sir, cash account debit to bills receivable. For this bills receivable. Bills receivable lo write by cash 35,000. Cash sales is already accounted. Next, payment to creditors. Entry, creditor account debit to cash. Creditor account debit to cash. Go to your creditor account and write 2 cash in the creditor account. How much? 1,10,000. Next, cash purchase already accounting done. Bills payable. Entry sir, bills payable account debit to cash. Come to bills payable and write 2 cash. How much? 45,000. Loan. What is the opening loan? 12,000. Entire loan of 12,000 is paid. Entire loan of 12,000 is paid. Hence, not required to adjust anywhere. Balance sheet lo don't show that loan. By salary means entry, salary account debit to cash. Now come to your P and L and write 2 salaries. Come to your P and L and write 2 salary. Rent sir, entry, rent account debit to cash. Come to your P and L and write 2 rent. Come to P&L and write 2 interest. How much? 450. Come to P&L and write 2 general charges 750. Drawings, your balance sheet, open your balance sheet. Okay, drawings, wait, we can adjust. By balance carried down, closing balance sheet low, you are having assets low, right? Cash balance, how much? 9050. Now these two were done. Now come to here. Debtors, yes, I already opened one account, I will find the balance. Bills receivable, opened one account, I will file the balance. Stock, done. Plant, building, and those two were depreciated, and cash also I know. Loan is repaid for creditor and bills payable, I opened the accounts. Now close the accounts. Now close the accounts. First close your bills receivable account. Which side is more, which side is less? Yes. Now this is your bills receivable. Debit side is more, credit side is less. By balance carried down. This is the asset. Come to your balance sheet. Write bills receivable account 35,000. Next. Come to your bills payable account. Come to your bills payable account. These two were done. Yes. To balance carried down. This is what, sir? Your closing balance. Come to the bills payable account. In the balance sheet or liability side, show it as liability 6,500. Come to your sundry debtor account. This is the balancing figure you are having. Inner column lo take this inner column, take this into the inner column because provision I need to calculate. Go to your sundry creditor account. Yes. Take to the outer column, no provisions will be allowed on this. 55,150. This is the liability. Close the account. Take to the total your debit side, total your credit side. Credit side is more, debit side is less. That is nothing but closing balance to balance carried down. Same bills, every account you have to close, sir. You will get the closing balances. Closing balances were the missing pairs in this case. Now 17,250 is what? Debtor balance. How much they are asking you to create provision? Create provision at the rate of 5%. 5% comes to how much? 17,250 into 5%, 862.5. Now, but already opening provision is there. How much? 750 is the opening provision. Balance how much? 112.5 will be taken to P&L entry. P&L account debit to provision for bad and doubtful debts 112.5. P&L account debit to provision for bad and doubtful debts 112.5. So total provision you are having how much? 862.5. But how much is your closing data? 17,500. Yes, 17,250. 16,388 is what? The balance after provision. Apply provision for discount on debtors. How much? 2.5%. Apply 2.5% into on 16,387. 410. What is that 410? Provision for discount on debtors. Now, in the balance sheet low, inner column low, sundry debtors. How much inner column low sundry debtors? 17,250 less. What is the first one? Provision. How much is the provision? Already 750 is there. 112.5 is the balance provision required. Less provision for discount. How much? 410. The balance amount you are showed to be the outer column low. Come to P&L. 2. Provision for bad and doubtful debts. Already 750 is there. 112.5 is enough. Next, same P&L lo, write 2, provision for discount on debtors, 410. Everything done, close your trading, gross profit bring to the P&L, net profit throw it on the balance sheet lo. You are having this drawings adjustment, I said no. Drawings, opening capital you are having, add net profit less this drawings. Exactly your balance sheet will get tallied. Exactly your balance sheet will get tallied, sir. Yes. Trading, you will have the gross profit, bring this gross profit, you will have net profit, add that net profit to what? Capital, your balance sheet will get tallied. Balance sheet, P&L, I already covered all these things. Trading. Next, in your working notes lo, bills payable account, sundry creditor account, bills receivable account, sundry creditor account, bills receivable account, sundry debtor account, bad debts calculation, sir. This I already said how to cover this. Done. Yes, sir. Start with the question. Mr. A runs business of ready-made garments. Yes, Mr. A runs business of ready-made garments. He closes the books of accounts on 31st March. The balance sheet, they are provided with the balance sheet. I am once again repeating, whenever they provided with the balance sheet in the question, then you are not supposed to prepare balance sheet as the opening capital we are having. Imagine in the problem law, if they are not provided with the opening capital, then only I am preparing balance sheet, opening balance sheet I mean. Are you getting, sir? So in this problem law, as the opening balance sheet they provided, I am not supposed to open the opening balance sheet because I am having the capital information, right, sir? So furniture is there. Now go and check in the during the current period law any purchase. Let's read the question. So furniture 40,000, stock 2,80,000, debtors 1 lakh, cash in hand 28,000, cash at bank 38,000, capital account 4,04,000, creditors 82,000. You are furnished with the following information. His sales for the year ended 31st March 2022, 20% higher than that of sales of the previous year. Okay. Now his sales for the year ended 31st March 2022 were 20% higher than that of the sales of the previous year. What is the previous year, sir? 2020-21. Yes, this is the last year balance sheet. The current year is 2021-2022. Okay, sir. Total sales during the year. Okay, 5 lakhs is the total sales. Payment for all the purchases were checks only. Yes, they make their payments for all the purchases in checks only. Goods are sold for cash and credit both. Credit customers pay the checks only. Okay, credit customers pay the checks only. Goods were sold for cash and credit. Even though the same information is there here, out of which 20% sales were cash sales. Means the A point what they are telling and the D point what they are telling. D point lo some additional information is that those credit purchase, that credit sales who and all is there, they are paying only in checks only. Means from the debtors I am not collecting cash. Okay. Depreciate furniture at the rate of 10%. Okay. Next, Mr. A sent to the bank the collections of the month at the last day of each month after paying what? Salary to the clerk and office expenses and personal expenses. Okay. Mr. A sent to the bank the collections of the month at the last day of the each month. They are sending salary 22 after spending salary of 2,000 to the clerk and office expenses 1,200 and personal expenses 500. Okay. Analysis of bank passbook, payment to creditors, payment to rent, cash deposit into bank during the year. Okay, all these were payments in the form of check, because that is what passbook information they provided. Next, they provided with closing balances. Stock how much? 1,60,000, debtors 1,20,000, and creditor for goods 1,46,000. Okay, sir. On the evening of 31st March 2022, the cashier absconded with the available cash in the cash book. You are required to prepare what? Trading account, profit and loss account, and the balance sheet. Okay. So my solution is what, sir? Trading, profit and loss account, and the balance sheet. Whenever you are seeing on the evening of 31st March 2022, the cashier absconded with the available cash, that is no doubt cash loss, immediately transfer to P&L. Are you getting, sir? What is the entry, sir? Cash loss or embezzlement, cash embezzlement account debit to cash account. Cash is decreasing. Now transfer this cash loss to P&L. Close this loss. All losses should be transferred to P&L. Transfer this loss to P&L. Very good, sir. One more time. Yeah, all other information is fine. Yeah, how to start with the problem, sir? I already said you have to start with the problem with the opening balances of the assets and liabilities what they have provided. From there you need to transfer the each and item to the respective places. Yes, sir. What is the requirement of the question, sir? Trading final accounts they are asking. Trading, P&L and balance sheet. Trading account for the period ended 31st March 2022. Right. Particulars. Next is profit and loss account for the period ending. Profit and loss account for the period ended 31st March 2022. Debit, credit, particulars, amount, particulars, amount. So this is what, sir? Format for profit and loss account, and one more, balance sheet. Yes, sir. Now, what the requirement of the question, sir? They are asking me to prepare my trading P&L balance sheet. I drafted formats. Yes, sir. The requirement is trading P&L and balance sheet. Yes, sir. Now come to the question. How to start, sir? Whenever in the problem law, if they provided with opening balance sheet, start with the opening balance sheet, or if they provided with the information with respect to sales and information with respect to assets and liabilities, start from that information of assets and liabilities. Now furniture is there. What is the value of furniture? 40,000. Starting the product value of furniture 40. Is an asset? Yes, sir, asset. During the year, any sale or purchase of asset is there? No, sir. Means the same furniture holds good even on the closing date, subject to depreciation. Okay. What is the rate of depreciation? 10%. Very good, sir. Yes, sir. Furniture inner column లో 40,000 less depreciation at the rate of 10%, which comes to 4,000. Outer column లో 36,000 is depreciation. I mean 36,000 is the value of the. Immediately come to the profit and loss account. Leave one line space whether you might get some gross profit or gross loss. 2. Depreciation on furniture. How much? 4,000. How you got that 4,000, sir? At the rate of 10%. Very good, sir. Yes, sir. Next one, sir. Stock is there. Yes, sir. This is the opening stock. Yes, sir. This is the opening stock. Immediately come and write this on the trading account low to opening stock. Particulars amount. Particulars amount. To opening stock. How much? 2,80,000. 2,80,000. Next. Debtors is there. Yes, sir. Debtors is there. How much? 1 lakh. Open one debtor account. Why I am opening debtor account, sir? Working note number 1. Open one debtor account. Why, sir? Either to know the closing balance. No. Closing balance is already there. Or to know the credit sales. No. Credit sales also already there. Then to know the cash collection from the debtor. Debtor account, debit, credit, particulars, amount, particulars, amount. Yes, sir. To balance brought down in the debtor account. To balance brought down. How much? 1 lakh. Next. Cash in hand, cash at bank, open one cash book to know the what is the closing cash lost by the cashier. Cash book. Particulars, cash, bank, particulars, cash, bank. To balance brought down. How much? 2838. Cash is 28, bank is 38. Next. Next, assets, all assets were completed. Yes sir, all assets were completed. Come to the liability side. First one is what? Creditor. Yes sir, creditor. Open one creditor account. Why I am opening creditor account, sir? To know the either credit purchase or cash paid to creditor. Yes sir. Particulars, amount, particulars, amount. Next, by liability will always have credit balance. By balance brought down, creditor account lo balance how much, sir? 82,000. What is the balance in the creditor account, sir? 82,000. Okay, sir. Next, capital account 4,04,000. Very good, sir. Capital account inner column lo 4,04,000. Next. Yes, sir. Now, what I did so far, sir, always start your problem with the balance sheet if they provided with the opening balance sheet. In that law, any asset is there, go and check any purchase or sale of asset took place. If there is no purchase or sale, means take that asset directly to the inner column of the closing balance sheet and search for the rate. If you know the rate, just apply the rate and throw it out the outer column. The depreciation, take the depreciation and throw it in the P&L to expense, because depreciation is a nominal account. Next, stock. Stock is nothing but my asset, that is opening, not the closing stock. Take that to the trading account to opening stock. Debtor to balance brought down, take that into the debtor account to balance brought down. Why I open debtor account, sir? Either to know my closing balance, or to know how much is cash collected from the debtor, or how much is the credit sale made during the period. Are you getting, sir? Done. Next, cash in hand. Why you am opening cash in hand, sir? Because to know how much of the closing cash left, that closing cash what left is by theft taken by the whom? That cashier. To know how much of the cash taken by the cashier, I am preparing what? That cash book lo cash. Why bank column? To know the closing balance. Why I am preparing creditor account? To know the credit purchases. Next, capital is there, capital throw to the balance sheet. Next. His sales for the year ended 31st March 2020 were 20% higher than that of the previous year sale. What is previous year? 2021. Out of which, means out of the 20% higher than sales of the current period, 20% of the sales were made in the form of cash and the balance were sold in the form of credit. Means credit sales comes to how much? 80%. 80% is what, sir? Credit sales. Okay, sir. Total sales during the period, how much? 5 lakhs. If the last year sales is 5 lakhs, apply 20% on that 5 lakhs, which comes to 20% of 5 lakhs is 1 lakh. Last year sales 5 lakhs, that 20% of that 5 lakhs is 1 lakh. The current period sales is 6 lakhs. In that current period sales of 6 lakhs low, 20% were in the form of cash, means 6 lakhs into 20%, which is 1,20,000 is in the form of cash, and the balance sales is in the form of credit sales. How much? 6 lakhs into 80%, which comes to 4,80,000 were credit sales. Shall I start one working note for this? Yes, sir. So for working note 1, make it as working note 2, make it as working note 3, make it as working note 4. Calculation of sales for the period 2021-2022. Sales for the last period, that is 2020-2021. How much, sir? 5 lakhs. How I know, sir? Clearly provided in the problem, that is 5 lakhs. Add how much? 20% increase in sales. 20% increase in sales, which comes to how much, sir? 5 lakhs into 20%. Apply 5 lakhs into 20%, which comes to 1 lakh. Total sales for the period. How much? 6 lakhs. Now this total sales bifurcate into 2. How much is your total sales, sir? 6 lakhs. In which cash sales, how much, sir? 20%. Balance, how much, sir? Credit sales. How much, sir? 100 minus 20%, which comes to 80%. Now 6 lakhs into 20%, which comes to how much? 1 lakh 20,000 is my cash sales. Next, 6 lakhs into 80%. How much? 4,80,000 is my credit sales. Are you getting? What is the total sales? 6 lakhs. How you got the total sales of 6 lakhs? Last period sales of 5 lakhs, add 20% higher than comparing to the last period, add the 20%, 6, in that flow 20 cash, 20 credit. What is the entry for this cash sale? Cash account debit to sales account. What is the entry, sir? Cash account debit to sales account. Come to the cash book. Write to sales. How much? How much is your cash sales? 6 lakhs into 20%, 1,20,000. Next. What is the next one? Credit sales. How much is your credit sales? 4,80,000. What is the entry? Debtor account debit to sales account. Go to the debtor account. Right. To sales. How much? 4,80,000. How much is your total sales? 6 lakhs. Come to your trading account. By sales. How much? 6 lakhs. If there are any sales returns, you need to adjust. But in this problem, no sales returns. Next. Are you getting? Yes, sir. Next one. Payments for all the purchases made in checks only. Yes, whatever the purchase you are making that purchases only in the form of checks. Next. Goods were sold for cash and credit, and I sold for 4,80,000. No, those guys were paying only in the form of checks. Okay, sir. Next. Depreciate is also done. A, send the bank for collection of the month at the last day of each month. Okay. After paying 2,000 to the clerk, Office expense 1200 and personal expenses comes to how much? 500. Mr. A sent to the bank the collections of the month at the last day of each month. So each month he is sending to the bank after paying salary of 2000 to the clerk. Means per month, sir. This is per month. Why? They are telling per month, last of each month. So this 2000 payment of clerk salary is per month. 2000 into 12, which comes to 24,000. What is that? Salary payment to the clerk. What is the entry? Salary account debit to cash. Yes, sir. Now come to your cash book and write by salary. How much? 2000 into 12, 20,000. This is a nominal account. Yes, this is a nominal account. Come to P&L account. Two salaries. How much? 24,000. Next. Office expense 1200 per month. Yes, sir. Per annum 14,400. Yes. What is the entry? Office expense account debit to cash. Come to the cash book. By office expense. How much? 1200 into 12, which comes to 14,400. Is this nominal account? Yes, sir, nominal account. Come to the P&L account. 2. Office expenses 14,400. Next, personal expenses 500 per month. Total comes to 6,000. Cash book low. By drawings. How much, sir? 500 into 12, which comes to 6,000. Drawings is not the nominal account. Drawings is the representative personal account, representing whom? Capital. Less. Immediately come to the closing balance sheet and reduce the drawings from the inner column from the capital account. How much? 6,000. Next, the analysis of bank passbook shows the following. So this is the analysis of the bank passbook. Payment to creditors. How much? How much you paid to your creditor? 3 lakhs. What is the entry for payment to creditors, sir? Creditor account debit to bank. How it is bank? But how you know it is bank? It is a bank passbook. It is showing that you met your creditors through form of checks. How much? 3 lakhs. Entry creditor account debit to bank. Come to your cash book. By creditor. How much? 3 lakhs. Immediately come to your creditor account and write 2. I think I wrote in the cash column. Huh? It is not the cash, sir. It is bank. Immediately come to the creditor account and write 2. Bank. How much? 3 lakhs. Next one, sir. Payment of rent. How much? 16,000. Cash book low. Sir, all these were per annum, sir. Throughout the year I paid rent, sir. It is not per month rent. Go and check. For the year ended means throughout the year all this. Throughout the year I paid to creditors this much. Throughout the year I paid rent this much. Throughout the year cash deposited this much. It is not per month, sir. Throughout the year. Rent how much? 16,000. Yes, sir. By rent 16,000. Rent is a nominal account. Immediately come to your P&L account. To rent, how much, sir? 16,000. Very good, sir. Next, cash deposited into bank. What is the entry for cash deposited into bank? Bank account debit to cash account. So entry bank account debit to cash account. Come to your cash book. Bank account debit to cash. How much? 80,000. This is the contra entry. Next, buy bank cash column contra 80,000. Are you getting, sir? Yes, sir. The following balances as on 31st March 2022, they provided with the closing balances. Stock how much, sir? 1,60,000. Immediately come to the closing balance sheet. Stock how much? 1,60,000. Immediately come to the trading account. By closing stock how much? 1,60,000. Are you getting, sir? Yes, sir. Now debtors. What is the closing debtors? 1,20,000. Immediately come to the closing balance sheet. Okay, better write in the debtor account. By balance carried down 1,20,000. 1,20,000. Immediately come to the balance sheet. Debtor, as there is no provision, directly take outer column 1,20,000. Creditor for goods, closing value how much? 1,46,000. Right here. Creditor 1,46,000. Immediately come to your creditor account. To balance carried down 1,46,000. Are you getting, sir? The closing balance of the creditor to balance carried down credit balance. Obviously, it will be have closing on debit 1,46,000. On the evening of 31st March, the cashier absconded with the available cash. Immediately go to your P&L. First write to cash loss. Later we can write the amount so that I will not forget to write the cash loss. Whenever I am seeing that point cashier absconded with the available cash, immediately come to the P&L and write cash loss. Yes, sir. As usual, first come to the debtor account. Close the debtor account. Yes, sir. Total how much debit side? 5,80,000. Total of credit side must be 5,80,000. The difference how much? 5,80,000 minus 1,20,000, which comes to how much, sir? 3,40,000. 4,60,000, sir. So the difference is 4,60,000 Yes, sir. The difference is 4,60,000. What might be the difference, sir? By bank. What is this by bank? Collections from the debtor. Whenever in the debtor account low, debit side is more, credit side is less, then the difference may be either closing debtors or the difference is what is collected, sir. In this problem, no, there is no discount, bad debt, dishonor. So I assume what is collected by bank. Are you getting, sir? Why can't cash, sir? They are only clearly telling. What they are clearly telling? Credit customers pay only in checks. Debit side is more, credit side is less, then it is nothing but collections from the debtor. How much? 4,60,000. What is the entry? Bank account debit to debtor account. Come to your cash book. To debtor bank column lo 4,60,000. Are you getting, sir? Yes, sir. Next, close your creditor account. Debit side is more, 4,46,000. Credit side is less, 4,46,000. When the debit side is more, credit side is less, 4,46,000 minus 82. 3,64,000 is the difference. When the debit side is more and the credit side is less, that is nothing but credit purchase by purchases. How much? 3,60,000. This is what, sir? Credit purchase. What is the entry, sir? Purchases account debit to creditor account. What is the entry? Purchases account debit to creditor. Now bring that purchases into trading account lo to purchases. How much? 3,64,000. Now opening stock is there, purchase is there, sales is there, closing stock is there. Close which account, sir? Close the, before closing the trading account, close the cash book so that I will know how, what is the cash lost. What is the total of debit side of the cash book? Cash column debit side 28,000 plus 1,20,000 minus 24 minus 14,400 minus 6,000 minus 80,000. 23,600. If that cash theft is not taken place, then in my cash book lo, cash column lo, the balance should be 23,600. But as the cash lost is taken place, by cash loss, how much? 23,600. Immediately come to the P&L. Come to the P&L. 23,600. Excellent, sir. Next, close your bank column. What is the total of debit side? 38,000 plus 80,000 plus 4,60,000. You will get how much? total is 5,78,000. 5,78,000 less 3,16,000. Then the closing balance by balance carried down 2,62,000. Bank column 2,62,000. Are you getting, sir? Bring the closing balance to the bank column 2,62,000. Yes, sir. What is the total here? 1,48. 1,48. What is the total in the creditor account? 4,46. Total in the debtor account. Done. Now close your trading account. Are you getting the sequence in which we have done the problem, sir? First open the trading P&L balance sheet and open one debtor account, cash book and creditor account. Then slowly each and every item I analyzed and I transfer to the respective place. 7,60,000 is what? Total of trading 7,60,000 minus 2,80,000 minus 3,64,000. 1,00,000 to profit and loss account bracket lo gross profit. How much? 1,16,000. Come to the P&L account by trading account. Bracket lo gross profit brought down. How much? 1,16,000. Now 1,16,000 minus 4,000 minus 24,000 minus 14,400 minus 16,000 minus 23,600. 34,000 is my net profit, will be added to the capital account. Net profit. How much? 34,000. What is the net profit, sir? 34,000. Next. One lakh 16,000. 1,16,000. Add net profit to the capital account. How much? 34,000. Outer column low. 4,04,000 plus 34 less 4,32,000. Add 1,46,000. 5,78,000. Less 36,000 less 1,60,000 less 1,22,000. Super, sir. 5 lakh 5 lakh 78,000, 5,78,000. Yes, sir. Sir, what I did, sir? Sir, that go and check. Trading low, you have the gross profit of 1,16,000 and the total is 7,60,000. P&L you got the net profit of 34 and you get the balance sheet total 5,78,000, 5,70,000. Sir, what you did, sir? Yes, sir. Wait, I will tell what I have did. First, I read the problem. I read the completely problem. Furniture, throw it in the closing balance sheet, but charge some depreciation. What is 10%? That depreciation throw to P&L. Next, sir, stock. What that is stock? Throw to the opening balance sheet, throw to the trading account to opening stock. Debtor, open one debtor account. Why I open a debtor account? To know what is the cash collected from the debtor. In other words, how much is the collections from the debtor in the form of bank checks. Cash in hand. Why I opened one cash in hand? Because to know what is the cash lost. Cash at bank. Why I opened one cash book? To know what is the balance, closing balance of the cash. Creditor account, to know the credit purchase. Capital account, I throw it in the closing balance sheet. Ace capital. Okay, I think I wrote capital. It is Ace capital. Next, he is telling the last period sales how much? 5 lakhs. Apply 20%. How much? 6 lakhs. The 6 lakhs is what? Current period sales. 20% is what? Cash sale. 80% is what? Credit sale. So, in this 6 lakhs low, 20% which comes to 1,20,000 is your cash sales, cash account debit to sales account. In your cash book low, 2 sales, cash column 1,20,000. 6 lakhs into 80% credit sales. What is that? 4,80,000. Entry, sir, debtor account debit to sales account. Come to your debtor account and write 2 sales, 4,80,000. Total sales for the year 6 lakhs. Come to the trading account, write buy sales 6 lakhs. Payment for all the purchases were made in checks only. Sir, nowhere they said in the passbook law payment for creditors. No one they said like payments for purchases. They said payment for creditors, but they didn't say payment for purchases. If there is no payment for purchases, there is no cash purchase. All the purchases were credit only. Why? This is the analysis of passbook and they are only telling payments for all the purchase. Did they make any payment for purchase like payment? No, means all the purchase were credit only. Very good, sir. Now depreciation I already considered. A sent to the bank. So monthly salary in the cash book and office expense cash book and drawings and immediately nominal account salary and office expense is the nominal account transfers to P&L. And payment to creditors to bank immediately post in creditor account and cash book bank column. Payment of rent immediately post in the cash book rent and transfer this to the P&L to rent. Creditor for and then cash deposit into bank entry bank account debit to cash account. So throw it in the respective account. Now the balance of the stock, the balance of the debtor, balance of the creditor, closing balances they have provided. Immediately throw all these things into the closing balance sheet and in the trading low buy closing stock, debtor account low buy balance carried down, creditor account low to balance carried down, bring the closing balances. Then they are only telling cash lost. How much is the cash loss? Go and check in your cash book. In the cash column low, you will get the closing balance 23,600. Obviously, entire cash is left by the cashier. Now that is the cash loss. Immediately throw it in the P&L. Obviously, your answer will get tally. The only thing, there is no cash purchases in the question. How you know? They are only telling all purchases were made on checks, and if there is any payment to purchases is there in the analysis of passbook law, payment to purchases, then it is a cash purchase, but that is not there here. Means all the purchases were credit only. So you will get the tallied everything. I hope it is easy. Just practice once, you will have the command. The only thing you should know how to start the problem. How I started. I took the opening balance sheet and each and every item I analyzed and I throw into respective places. Easily it will get tallied. Thank you.